Okay, now let's proceed to marginal costing, a chapter which carries maximum weightage from exam point of view, and also a chapter which has a lot of questions to be done. So, in this chapter, today my major focus would be on doing concepts and MCQs. Tomorrow I may do a lot of questions. Today also one or two questions are we may touch upon depending. But initial focus is going to be on concepts. Once we get clarity on all the concepts along with their MCQ, we'll be in a position to proceed forward and then do analysis on the other items. Now, as far as this chapter is concerned, let's go item by item. First thing is, what is this marginal costing all about? Now, marginal costing does not mean it is another method of costing and all. We have method of costing like job costing, batch costing, contract costing, unit costing. It is not another method of costing and all. It is a technique of costing which can help an organization in decision making. Now, how does it help in decision making? By differentiating the cost between fixed cost and variable cost. Just to give an example, for us, when we are taking this batch now, we do not incur certain cost additionally. Example, rent cost or the salary to admin team, we are not incurring anything extra. If I'm not incurring anything extra on those item, our absorption costing will say do overhead absorption, recover all these expenses. But for decision making purpose, I need to find out what is relevant, what is irrelevant. And one way of identifying that is differentiating the cost based on nature, which is fixed versus variable. As we did in the first chapter, variable cost is incurred on every unit produced. Total variable cost is directly proportional. That as volume goes up, total variable cost will go up, and at a per unit level, it is constant. Similarly, fixed cost, when you look at it, is incurred as a whole. It is incurred as a whole and not for every unit. It is incurred as a whole and not for every unit. In this case, total fixed cost remains constant and FC cost per unit is inversely proportional with volume. Despite me teaching in my regular class, even in the when I started the first chapter introduction, I told this, but student will still make these mistakes. FC per unit and total variable cost are misleading information. Any question you see FC per unit, be cautious. Any question you see FC per unit, caution should come to you. Okay, this is wrong information. I should not look at. I should not look at information called FC per unit. Anywhere you see FC per unit, before you try to apply your application, first thing convert that into total fixed cost. FC per unit is always a misleading information. I cannot say Bharadwaj Institute has a fixed cost of 5,000 per student. No, I don't like that. You first multiply with the number of students and tell me the fixed cost and then tell me any change needed. Any change in fixed cost means a change in total fixed cost. Any change in fixed cost means a change in total fixed cost. Any change in variable cost means a change in variable cost per unit. The misleading information which student do despite telling is they will say total variable cost is there. I want to add 20% to that. No, total variable cost is also misleading and FC per unit is also misleading. Then what do I need? I need total fixed cost VC per unit to solve the question. Units data not there, assume 100 units and go ahead. Assume 100 units and go ahead. If you are solving a question with FC per unit and total variable cost, be prepared to lose half of the marks because you will 100% make mistake. If you work with FC per unit and total variable cost in any question, high probability you will make mistake. High probability you will make mistake. So be cautious. Be cautious that you have to convert it into total fixed cost. You have to convert into total fixed cost and variable cost per unit. Despite me telling so much, in 2-3 minutes or 5 minutes, you will see making a mistake. I know what you will be doing, so that is why caution is needed. Be very clear on this. Your mind should never look at FC per unit and total variable cost. Convert that into total fixed cost and VC per unit. Total fixed cost and VC per unit. Because student then send me a message. Why are we not doing it? How will you do? Because you end up making mistake there. Please be cautious. I'm repeating now today itself 10th time the same word because that's the mistake invariably students make. Where FC per unit is a misleading information and total variable cost is a misleading information. Why do you make mistake? Because after 30 minutes when I do a question, you are out of this concept now because your mind is not ready to go back to the same concept. So after 30 minutes you'll start making a mistake. So that is why caution is needed. When I started my this revision batch, first class I spent around 30 minutes on variable versus fixed cost. Reason is that only because this is a very important area. Mistakes are unfortunately made here. Now, next is a marginal costing income statement. What is marginal costing income statement is you prepare the income statement to find out the profit or loss. Here you start with sales, deduct variable cost, you get contribution. You will see per unit as well as total. But fixed cost and profit per unit is misleading. Sometimes given you can write it, but we normally do not applicable. Not applicable means I don't want to calculate fixed cost per unit. I don't want to calculate profit per unit unless the question wants you to calculate it. If question is asking us to calculate, I don't have a choice. But otherwise, I don't calculate. I don't calculate FC per unit and profit per unit. Clear? Any doubts on this? Let's look at this example. Direct material cost 80,000, direct labor cost 40,000. Company has manufactured 5,000 units. Let's wait till this. Direct material cost 80, direct labor 40. Company has manufactured 5,000. Initial, I think entire session today may go in MCQs itself. I'm okay with that because my main focus is clarity on the concept. Then I can handle the question. Material cost, labor cost, direct expenses, selling overheads are variable unless provided otherwise. Where did we cover in cost sheet chapter? Administration cost is fixed unless provided otherwise. Factory overheads is assumption. So first thing is this is a variable cost. I don't like 80,000. I don't like the number 80,000. I don't like the number 80,000. Right? Example 1. Start writing now on its. We'll go only in the same order. Example 1 unless I want to deviate an example. Example 1 page, I think this is 108. Example 1. 80,000 material cost per unit. Material cost per unit is equal to 80,000 divided by 5,000. 80,000 by 5,000. 80,000 by 5,000. 16. I don't like the number 80,000. I like the number only 16. I like the number only 16 in this question. Overall also will give the same answer, but I don't want to get into per unit. I don't want to get into overall for variable cost. Labor cost per unit. 40,000 by 5,000. 8. 40,000 by 5,000. 8. Now I'll read what the question says. 40,000 by 5,000. 8. Material cost will increase by 10%. Labor cost will increase by 20%. Any change in material cost means a change in material cost per unit. Any change in labor cost means a change in labor cost per unit. Apply the percentage change and tell me what is the variable cost per unit post increase. Apply the change 10%, 20% at a per unit level and then add up and tell me the cost. Live online guys, you can type. Yeah. Apply the change 10% and 20% at a per unit level. At a per unit level and then add up the numbers. Add up the numbers. It may look why I'm spending so much time. You'll understand this when you make mistakes because students invariably make mistakes in these things. 16 plus 10% is 17.6. 8 plus 20% is 9.6. Together is 27.2. Any doubts on this? Okay. In 2022, in 2022, variable cost is 85 per unit. Fixed cost is 50 per unit. In 2022, variable cost is 85 per unit. Fixed cost is 50 per unit. Production was 1,50,000 units. It's expected that production will increase to 1,80,000 units. Variable cost will increase by 30%. Fixed cost by 28%. Fixed cost by 28%. Tell me what is the fixed cost in 2023. Calculate. Fixed cost in 2023. Fixed cost in 2023. 90. Any other answer? Any other? One answer I've heard is 96 lakh. Any other answer? Anybody getting 1 crore 15 lakh 20,000? You getting it? That's a mistake. So be cautious. Be cautious. You did directly at 50 per unit then. Correct then. Okay, that, you did 1 lakh 80. 1 lakh 80 is wrong. 1 lakh 80 is wrong. You have to do it for first 1 lakh 50. You have to do it for 1 lakh 50. So students, see, I told this 3-4 times. So your mind is kind of active. What will happen is I do the same adjustment after 10 sums. Your mind will force you to do the 28% on 50. Your mind will force you to do that 28% on 50, and then you will multiply with 1 lakh 80,000 unit. Then you will multiply with 1 lakh 80,000 unit. That is the caution I want. That is an alertness I want. Again, I am repeating. So what will happen is 50 into 1 lakh 50,000. 50 into 1 lakh 50. We got 75 lakh. Now let's see what the question then says. Plus, it says an increase of 28%. It says an increase of 28%, 96 lakh. Any doubts on this? Any doubts on this? Okay. This is a marginal costing income statement. We will do it. Fixed cost 1 lakh 20. Variable cost per unit is 3 rupees. Selling price per unit is 7. Output is 50,000. How much is the profit earned? How much is the profit earned with 10% increase in output, selling price and fixed cost? 10% increase in output, selling price and fixed cost Let's do income statement. Marginal costing income statement. Example 3. Marginal costing income statement. Particulars per unit and total. Per unit and total. Per unit and total. Let's write the format. Sales less variable cost. Contribution less fixed cost. Profit. We could have done this even without statement, but let's get used to the statement itself. Now, information in the question is there is a 10% increase in output. Output given is 50,000, 10% increase in output. So, in the total, in bracket, right, 55,000 units. 10% increase in output. 50,000 will become 55,000. 50,000 will become 55,000. 10% increase in output. Then it says 10% increase in selling price. Original 7 rupees, 7.7. 7.7. 7 rupees will become 7.7. Fixed cost will increase by 10%. Fixed cost will increase by 10%. Any change in fixed cost means change in total fixed cost. Any change in fixed cost means change in total fixed cost. So fixed cost from 1 lakh 20 will increase by 10%. No other change given. We will write whatever is there in the question. 132. 132. Clear? Variable cost is 3 rupees per unit given in the question. Beyond this, it's a formality. 4.7 into 55,000. $126,500. Now, if the same question, sometimes they'll say total variable cost is 1 lakh 50. Total variable cost is 1 lakh 50. You see no change in selling price. You see change in selling price, output, everything. but you don't see variable cost any change. So in a hurry, student copy paste 1,50,000, you will go wrong. If you copy paste 1,50,000, you will go wrong, because variable cost always calculate at a per unit level. Always calculate at a per unit level, because it's not 150, it is 165. It is 165. No change is given. No change is given. But 150 has become 165. Last year is 150. This year 165. Last year 150. 50,000 into 3 is 150. And this year we have written 165. No change in variable cost. Question did not mention any change in variable cost. Any doubts in this? Clear? Okay. Sales increased from. Okay, I will come to some of these MCQs. Let me close this concept and then come back, because this is a master formula sheet which you have to be aware of. Master formula sheet which you have to be aware of. Break even point. What is break even point? Is the level at which I make no profit, no loss. Break even point is the level at which I make no profit, no loss. Margin of safety is basically the profit making sales for the company. Margin of safety is profit making sales. Profit making sales for the company. Break even point, no profit, no loss. Break even point, no profit, no loss. Margin of safety, profit making sales for the company. Profit making sales for the company. Together they are called as total sales. Together they are called as total sales. Break even point plus margin of safety together is called total sales. This can be done at a value level, can be done at a units level. If you add the units, units sold. If you add the value, value of sales. Break even point plus margin of safety is equal to total sales. In this, break even point will recover fixed cost. Break even point will recover fixed cost. That is what is the purpose of break even point is, I want to recover fixed cost and make no profit, no loss. Make no profit, no loss. If in this table fixed cost and contribution is same, fixed cost and contribution is same, no profit, no loss. Fixed cost and contribution is same, no profit, no loss. So contribution technically is sales minus variable cost, but you can also say contribution is profit plus fixed cost. Contribution can also be called as profit plus fixed cost. Both are same, whether you call it a sales minus variable cost or fixed cost plus profit or profit plus fixed cost. So what concept says is, break even point recovers fixed cost, margin of safety gives profit, together you get contribution. The link between all of this is PVR. The link between all of this is PVR. Now why I am explaining this master sheet is, listen, this will give me totally 20-25 formula which I use in solving question. How do I get 20-25 formula? I'll tell you. Break even point plus margin of safety, total sales, formula 1. Total sales minus margin of safety, break even point, formula 2. Total sales minus margin of safety is equal to break even point. Margin of safety is equal to total sales minus break even point. Break even point into PVR. Into PVR is fixed cost. Break even point into PVR. BEP into PVR is equal to fixed cost. This is not one formula. This is three formula. PVR is equal to fixed cost by break even point. Break even point is equal to fixed cost divided by PVR. Three more formulae. Margin of safety into PVR, profit. PVR equal to profit divided by margin of safety. Margin of safety is equal to profit divided by PVR. Total sales into PVR, contribution. PVR is equal to contribution divided by total sales. Contribute, when PVR is equal to contribution by total sales, you can keep changing the formula. You can keep changing the formula. Fixed cost plus profit is contribution. Contribution minus profit is fixed cost. Contribution minus fixed cost is profit. You can keep changing this. This is a master formula sheet. This is a master formula sheet where I have three formula for PVR. I also have the formula for break even point. I also have the formula for margin of safety. I also have the formula for total sales. I also have the formula for contribution. I also have the formula for fixed cost. I also have the formula for profit. Now when I do questions, suddenly I will say PVR is equal to fixed cost by break even point, which is where is it coming from? This chart. PVR is equal to fixed cost divided by break even point. Suddenly I will say PVR is equal to contribution by total sales. PVR is equal to contribution by total sale. Suddenly I'll say PVR is equal to profit by margin of safety. PVR is equal to profit by margin of safety. This is a master formula sheet. There's nothing for you to remember and all. There's nothing for you to remember, nothing for you to write also. But concept be very clear. This is not telling you one formula. This is technically can give me 20, 25 different formula. The way I see it. BP into PVR equal to fixed cost. This can become three different formula. MOS into PVR is profit. This can become three different formula. Total sales into PVR is contribution. This can become three different formula. BP plus MOS total sales. This can become three different formula. Fixed cost plus profit is contribution. This can become three different formulas. So totally 15 formula I'm able to see here. 15 formula I'm able to see here, and I don't even expect you to remember one also. Don't expect you to remember even one also. Fixed cost is through break even point. Profit is for margin of safety. Contribution is for total sales. Exactly same thing, but the connection is contribution per unit. When you do with units, if you do with value, you'll have to multiply with PV ratio. Value multiply with PV ratio. Value multiply with PV ratio. And if it's units, multiply with contribution per unit. Now I can say contribution per unit is equal to fixed cost divided by BP. Fixed cost divided by BP in units. Contribution per unit is equal to profit divided by margin of safety in units. Break even point is equal to fixed cost divided by contribution per unit. Margin of safety is equal to profit divided by contribution per unit. Total units is equal to contribution divided by contribution per unit. Any formula, I can keep getting any formula. Clear? Any doubts in this? Any doubts? This is a master formula sheet. You will get technically 15, 16 formula from this. 15 formula I'm able to see, but as we do problem, I may add extra formula also. Any doubts on this equation first? Basic equation formula. This becomes the base for major chunk of my discussion. When I want break even point, I will tell you to visualize this only. No formula remembering, no formula remembering. Visualize this, break even point will come. Visualize this, margin of safety will come. Visualize this, total sales will come. Visualize this, total units will come. Visualize this, margin of safety. This is in rupees, this is in units. BEP in units, MOS in units, total units. The first part is in units, the second part is in value. Units, contribution per unit is connecting point. Value, PVR is connecting point. Value, PVR is connecting point. Any doubts on this? Any doubts on the concept which I've done till now? This equation is very, very critical. Clear? Can we proceed? Any doubts here? Okay, let's come to this. Sales increased from 700 lakh to 900 lakh. Sales increased from 700 lakh to 900 lakh. PV ratio is 40%. PV ratio is 40%. Increase in VC per unit. Increase in VC per unit and total contribution. Increase in VC per unit and total contribution. Now, if you can visualize the chart, sales into PVR is contribution. Sales into PVR is do one thing, write this equation so that you are having it in front of you. Write this equation, else you will not be able to visualize. Write the equation, it's okay. Take 2-3 minutes. When I do the question, you should keep seeing the equation. So write this. write the equation, keep it in front of you. Every question I do, you will have to see this. At the end of it, it will get registered. Now, in the question which we are doing, we have sales, we have PVR. We have sales, we have PVR. Multiplication will give you contribution. We have sales, we have PVR. Multiplication will give you contribution. Somewhere some analysis on contribution is needed. Sales is there, PVR is there, multiplication will give you contribution. Clear? Any doubts on this? I go back. Sales increased from 700 to 900. PV ratios 40%. Increase in VC per unit. Nothing mentioned. No change in variable cost per unit. No change in variable cost per total variable cost can increase. But variable cost per unit, no change. Change in, they're asking what? Increase in what? VC per unit. I don't even know what is the VC per unit, but there is no change. There is no change in variable cost per unit. And what? Total contribution. What will be the total contribution today? 700 lakh means what is the contribution? Calculate quickly. 700 lakh, what is the contribution? Visualize the formula and tell me the contribution. 700 lakh contribution. Live online guys, type it. What is the formula? Sales into PVR. Sales into PVR. So 700 into 40% to 80. 700 into 40% to 80. Then it will become 900 into 40%, 360. Question is asking increase in VC per unit. Nothing mentioned, no change in VC per unit. Total contribution will increase by 80 lakh. Total contribution will increase by 80 lakh. Answer is nil and 80 lakhs. Answer is nil and rupees 80 lakh. If they are asked what is the increase in total variable cost, then I can calculate. Total variable cost will change because total variable cost changes with the volume. VC per unit, unless they tell me, no change. Unless they tell me any information, no change. Any doubts on this? Any doubts on this part? Can we proceed? Units will be increased, correct. Units will be increased. Variable cost per unit, no change. Nil and 80 lakhs. Variable cost per unit will not change. There is no change in variable cost per unit. Let's come to this. Company made a profit of 1 lakh 10,000 and has a fixed cost of 9 lakh 90,000. It has sold 20,000 units and has selling price of 100 per unit. Has selling price of 100 per unit. Just give me a minute. I will keep this in the screen anytime we do the question so that you are able to, we are anyway visualizing it. I'll also keep it here. Now I come back to this example. Question has asked for what? Variable cost per unit. Variable cost per unit can be called as selling price minus contribution per unit. Selling price minus contribution per unit. Selling price minus contribution per unit. You have this data. Tell me which formula will give you contribution per unit here. You have the information. How will you get contribution per unit? This is the equation. In this question, I have profit, I have fixed cost. Profit and fixed cost. If I go to the equation, profit plus fixed cost is contribution. Profit plus fixed cost is contribution. Profit plus fixed cost is contribution. Number of units is there in the question. Number of units is there in the question. Total units into contribution per unit is total contribution. Total units into contribution per unit into contribution per unit is total contribution. This will give you contribution per unit. This will give you contribution per unit. I'm keeping on going with this. I can quickly also explain it, but I'll keep explaining with this. This will give you CPU, selling price minus CPU's variable cost per unit. Selling price minus contribution per unit. Minus contribution per unit is variable cost per unit. Let's write now. Contribution per unit is equal to, right? Contribution per unit is equal to total contribution divided by number of units. Total contribution divided by number of units. Divided by number of units. If possible, please keep the questions in front of you in a mobile phone. because you will have to keep seeing the question. So keep it in a mobile phone in front of you. Page 109, if you don't have the hard copy material, page 109, keep it in front of you so that it becomes easier. Total contribution is divided by number of units. Total contribution is from the equation profit plus fixed cost. Profit plus fixed cost. So I add it. Profit is 110. Fixed cost is 990. Number of units is 20,000. Tell me the contribution per unit. 55. Selling price minus 55 is variable cost. Selling price minus contribution per unit is variable cost. The chapter only focuses on only one thing. You learn a format called 1 minus 2 is 3. They'll suddenly ask 2, which you have to do 1 minus 3. That is where students keep confusing themselves. So selling price minus the variable cost per, so minus the contribution per unit. Selling price is 100. Contribution per unit is 55. My variable cost is 45 per unit. Any doubts on this? Let's look at this. Fixed factory overhead 2 lakh 30. Fixed factory overhead 2 lakh 30,000. Factory overhead 2 lakh 30,000. Admin overhead relating to production 71,000. Admin overhead related. I'll have to go back to my cost sheet here. Okay. Admin overhead relating to production is 71,000. Selling and distribution overhead is 68,000. Selling and distribution overhead is 68,000. Variable cost is 57% of COGS and 4% of COS. Variable cost is 57% of COGS and 4% of COS. 4% of COS. They want us to calculate what is the cost of sale. What is the cost of sale? It is a part of a very big question. I'm not showing you that question as of now, but I'll explain the concept here. It is a part of a very big question. The question itself will take me 15-20 minutes of discussion, but here let's understand it. Variable cost is 57% of COGS. Does fixed factory overhead form part of COGS? Does fixed factory overhead form part of? I want participation. Yes. Does admin overhead relating to production form part of COGS? Admin, participate, guys. Yes. Does selling and distribution overhead form part of COGS? No. So I can say COGS is equal to 57% of COGS, which is the variable cost. In the COGS, variable cost is 57%, and fixed factory overhead and admin overhead relating to production. COGS is equal to variable COGS plus fixed factory overhead plus admin overhead relating to production. This will give me COGS. COGS plus selling and distribution overhead plus another 4%. I don't know what is that 4%. 4% of COS, because in the COS, 4% of COS is variable component, and in the COGS, 57%. In the COGS 57%, COS 4%. What is that? I don't know. What is that? I don't know. They want us to calculate cost of sale. Now I'll show you that question. This came in exam. This was the question. Direct material cost, variable component, direct labor cost, factory overhead, AOH relating to production, selling and distribution overhead. I didn't want to discuss so much of it. I just clubbed it. I made it as one small MCQ. But this is what that question was, where they gave variable portion separately, fixed portion separately, and we had to do the calculation. Now coming back to the question which we are doing, it says variable cost is 57% of COGS and 4% of COS. Now write COGS is equal to variable COGS plus fixed COGS. COGS is equal to variable COGS plus fixed COGS plus fixed COGS. Variable part is 57% of COGS. Fixed part is fixed factory overhead and admin overhead relating to production. Fixed factory overhead and admin overhead relating to production. Admin overhead relating to production. So variable COGS is 57% of COGS. We don't know the number, plus 2 lakh 30 plus 71,000. Solve this, you'll get COGS. 230 plus 71,000. Solve this, you'll get COGS answer. 57 is 0.57. 7 lakh is the COGS. 7 lakh is the COGS. Any doubts in this? Clear? Next. Cost of sales equal to cost of sales equal to COGS plus selling and distribution overhead, which is some fixed component, and there is some variable component. We don't know what is that variable COS. Cost of sales equal to COGS plus selling and distribution overhead, which is fixed, and there is some variable component. There is some variable component, variable COS. Cost of sales equal to 7 lakh, 7 lakh plus 68,000 plus 0.04 COS. 0.04 COS. 0.04 COS. Solve this, you'll get cost of sales. I didn't want to do that bigger question, so I've done this concept, that's all. 0.04 COS. Cost of sales is, this comes this side, 0.96 COS equal to 7 lakh 68,000. Cost of sales is equal to 8 lakh. Any doubts on this? Any doubts on this? Clear? Can we proceed? Variable cost per machine 200, selling price 250, production capacity 1000. What is profit at 80% capacity? Please do a marginal cost statement. You should be able to get. I'm not discussing this. I'll give you 2 minutes. My discussion is not needed. Open a marginal costing income statement. 2 minutes for you. My discussion is not needed here. Do the income statement. Without statement also we can do, but let's do it through the statement approach. Got answer here, live online guys. You also type it. I'll wait 1 more minute and then discuss it. Done here. Selling price, if you put it in format, 250. Variable cost 200. Contribution per unit 50. Number of units sold is 1000 into 80%, which is 800. Which is 800. So 250 into 800, 200 into 800, 50 into 800 will be 40,000. Less fixed cost 25,000. 15,000 is profit. This also you have to do. Again 2 minutes. Again 2 minutes. Maybe you can make one mistake. I'll discuss that. Only one possibility of a small mistake. 2 minutes for you. Write it in the format. Format you write properly, all it's okay. But write. Don't keep doing in calculator. Rough working, you need not write selling price less VC, all that you don't write, but write something in your notebook to solve it. Format you write or not is not my worry. I've got the answer in live online. 30 seconds more. Unless you try on your own, clarity will not come. Please keep trying. The only concept I wanted to teach is it is for units sold, not is for units produced. Statement is only for units sold. 25,000. Variable cost 10, 10,000, 15, 15,000. Fixed cost 10,000. Profit is 5,000. Company's fixed cost are 5 lakh. Selling price per unit is 200. Variable cost per unit is 100. How many units must the company sell to earn a targeted profit of 2 lakh? To earn a targeted profit of 2 lakh. Okay, just listen for some time. I come back to this place. Okay, I come back to this place. Profit they want is, that's why I keep going back to this. Profit they want is 5 lakh. Profit they want is 5 lakh. Selling price is 200. Variable cost is 100. Selling price is 200. Variable cost is 100. Contribution per unit is 100. Contribution per unit is 100. I'm doing it in the equation approach itself. Contribution per unit is 100. And it says, how many units must I sell so that I earn a targeted profit? Sorry, my mistake. Fixed cost is 5 lakh. Profit is 2 lakh. Profit is 2 lakh. Fixed cost is 5 lakh. Profit is 2 lakh. Put together contribution is 7 lakh. 7 lakh divided by 100 is the number of units. 7 lakh divided by 100 is the number of units. Just remember the equation properly. Be very clear on the linkages. Be very, very clear on the linkages. 7 lakh divided by 100 is number of units to be sold to earn my target profit. To earn my target profit. No formula, nothing to be remembered. Just there is a formula called sales to achieve desired profit. I don't want to take you through a formula. 7 lakh divided by 100, answer is going to be 7,000 units. And this is the formula for sales to achieve desired profit. I don't want to get into formula root itself. I don't want to get into formula root itself. How did this formula come? Profit plus fixed cost is contribution divided by contribution per unit is unit. This is what the formula is. The formula comes from this place. Any doubts on this? Clear? Okay. Mrs. Gauri has the business of selling pen. She has set up this pen retailing for over, we will do it together mostly, for over 10 years with good profit volume ratio. With good profit volume ratio. Her average cost from the retailing is 11.25 per unit. 11.25 per unit if she sells. Excellent question. 16,000 unit. If she sells 16,000 unit, cost is 11.25. And 11 per unit if she sells 20,000 unit. If you sell 20,000, it is 11 per unit. And if you sell 16,000, it is 11.25 per unit. For the current month, she also charged 5,000 towards depreciation and the rental payment due. Towards depreciation and the rental payment, fixed cost is 5,000. The excess of sales revenue over the variable cost. Over the variable cost. Can you tell me what is the meaning of this? Sales revenue over variable cost is. What will this meaning be? Sales on top of variable cost would mean what? Contribution per unit. Sales what it says, sales revenue in excess of variable cost, which is contribution. Sales in excess of variable cost, sales minus variable cost, contribution per unit is 3.333. You are required to calculate BP in units, cash BP in units. BP in units will first calculate. Cash BP means depreciation is to be removed, depreciation is to be removed, and profit volume ratio, and profit volume ratio. Now, first thing is I want to calculate break even point. For break even point, I need fixed cost divided by contribution per unit. Fixed cost I don't see directly here. That 5,000 which they are talking about is not total fixed cost. That is only she also charged 5,000 towards depreciation and the rental payment due. Is this an extra item or it was there earlier? Also, we don't know. They are talking about something extra here. Contribution per unit is 3.333. Now, first thing I have to do is somehow get fixed cost. How will I get fixed cost? You know the concept, but you may not know the application now. You know the concept, but how will you get fixed cost here? You are aware of the concept, but application may be not clear at this point of time. Okay, listen. 11.25 into 16,000 is total cost. 11.25 into 16,000 is total cost. 11 into 20,000 is total cost. Change in cost by change in units. Change in cost by change in units. So look at the way the questions have been drafted. I said it is not a new concept. I know it is not a new concept, but change in cost by change in units will give me the variable component. Fixed cost is balancing figure, and we are kind of done with the question. Look at how beautifully they have drafted the question. 11.25 if you sell 16,000 units, and 11 rupees if you sell 20,000 units, which means there is a fixed component as well as a variable component. There is a fixed component as well as a variable component. Clear? Able to understand this? Let's write now. Cost of 16,000 units. This is an RTP question, excellent question again. Cost of 16,000 units, 16,000 into 11.25. 16,000 into 11.25. 16,000 into 11.25. 1,80,000. Cost of 20,000 units. 20,000 units. 20,000 into 11. Now these questions, if you directly see the answer, no, you will not, the grip will not come in concept unless you struggle with understanding it and then look at the answer. That concept clarity will not come. Into 11, 2,20,000. Beyond this, though, there's nothing there in the question. You will keep doing it. VC per unit now. VC per unit. If the same question, no, if that said 16,180, 20,220, your mind would have given the answer. But they gave it like this, and somewhere we were struggling. Now, right, VC per unit is equal to change in cost by change in units. 40,000 by 4,000. 10 per unit. 40,000 by 4,000. Any doubts on this? Is this a new concept? No. But still, we find it difficult to apply because the clarity is still not coming in. Unless you have grip on concept, you will not be able to do it. Then we substitute in one of the level. Total fixed cost, I will substitute in 16,000. 1,80,000 minus 1,80,000 minus 1,80,000 minus 16,000 into 10. 20,000. Clear? I am not going to spend time beyond this. I will kind of end it at this stage. 20,000 is my fixed cost. Fixed cost by contribution per unit. Fixed cost by contribution per unit is break even point. Where is the formula coming from? This place. Fixed cost by contribution. In that fixed cost, if you remove 5,000 depreciation, that will give you cash break even point. That will give you cash break even point. And they have also asked for PV ratio. PV ratio is I will do at a per unit level. I'll do it at a per unit level. What is per unit level is, if you do it at an overall level, it's contribution by sales. Contribution by sales. We can also do contribution per unit, which is 3.33 divided by selling price. Contribution per unit divided by selling price. What is selling price? Contribution per unit plus variable cost. What is selling price is contribution per unit plus variable cost. Be very, very clear on the various interlinkages concept. Unless you are having clarity on that, you will struggle. So you see here, we did this multiplication, got 10 per unit. Selling price, you see the beauty, 10 plus 3.33. 10 plus 3.33. Variable cost per unit plus contribution per unit. Normal break even, cash break even, PVR. Normal break even, cash break even, and PVR. Any doubts on this? Any doubts on this? Is this a new concept? Unfortunately, no. Were we able to do it? No, we had a little bit of struggle here. We had little bit of struggle, but not a new concept. Not a new concept. Clear? Any doubts on this? Only possibility is you keep doing multiple times, multiple practices, then only clarity will come. That is the view. And doing MCQs will not take time. The good part is you can solve all MCQs together in a good amount of time, so that you will be clear whether clarity is there or not. Same question, even if you repeat no, then also clarity may not be there, unless so the same whatever I did in chapter 1, you do the same MCQ. No, nothing new needs to be done. If you're able to get all answers at the same time, it means clarity is there. Otherwise, there is somewhere we are getting stuck. Okay. Let's see this now. This also is a very good question. Mefta Limited is currently operating at 60% of its total capacity. 60% of its total capacity, which is 1.5 times than the previous year. Which is 1.5 times than the previous year. What is previous year? I don't know, but it is 1.5 times of previous year. Total capacity is 2 lakh. Total capacity is 2 lakh, which means we are now at 1 lakh 20. We are at 1 lakh 20. 2 lakh is the capacity. We are operating at 60% of the total capacity, and this is 1.5 times of the previous year. 1.5 times of the previous year. So previous year is divided by 1.5. Previous year is divided by 1.5, 80,000. Any doubts till this? Clear? Total cost of the production for the current year and the previous year. For the current year and the previous year. No changes in the cost structure. Selling price 52. This though you should be able to tell. Tell me, how will you get the answer here? This you should be able to tell. I've explained just some time back. Change in cost by change in units. Change in cost by change in units will give you the variable component. Total fixed cost is balancing figure. Selling price minus variable cost is contribution per unit. BP is fixed cost by contribution per unit. Exactly 2 to 3 minutes for you. Please start doing it. 2 to 3 minutes for you. I'll discuss it in 3 minutes. First is VC per unit. Change in cost by change in units. 59,28,000 minus 44,72,000 divided by 40,000 units. What is 40,000? Is 1 lakh 20 minus 80. 1 lakh 20 minus 80. Variable component is 36.4. Are you getting 36.4? 36.4. Contribution is 52 minus 36.4. 15.6. I can substitute this 36.4 in any one level. So I'll substitute in current year 36.4 into 1 lakh 20 minus from, I subtract this from 5928. I get 15 lakh 60. 15 lakh 60 by 15.6 is 1 lakh unit. 1 lakh unit. Any doubts on this? Clear? Just give me a minute. 3-4 more MCQs. This is again a very tricky one. I will maybe take you through this. Due to sudden rise in demand of the product, sales of Arrow Limited for current year enhanced to 3 times the average of last 4 years. 3 times the average of last 4 years. Break even point and the variable cost for the current year. Break even point and the variable cost for the current year is 1 crore 17 lakh, 1 crore, 17 lakh and 93 lakh 60,000. Sales data relating to past years is given below. Year sales, year 1 latest, year 2, year 3, year 4 and year 5. Calculate the fixed cost to the company for the current year. Fixed cost to the company for the current year. Now, in the current year, my break even point is 1 crore 17 lakh. Break even point is at 1 crore 17, I make no profit, no loss. At 1 crore 17, I make no profit, no loss. And the variable cost figure is 93 lakh 60,000 respectively. Variable cost figure is 93 lakh 60,000 respectively. Sales data relating to the past years is given below. Now, due to sudden rise in demand, sales of Arrow Limited for the current year enhanced to 3 times of the average of the last 4 years. 3 times of the average of the last 4 years. Last 4 years, I assume year 1, year 2, year 3, year 4. That is what should be logically. Year 1 is latest, second year, third year and fourth year. Right. Average sales of last 4 years. Average sales of last 4 years. It's a very good question again. Average sales of last 4 years. Last 4 years. Let's write the number. 62, 50, 52, 44 divide by 4. Tell me the average sales. 52 lakh. Sales of current year. Current year, 3 times of 52 lakh. 3 times of 52 lakh. 1 crore 56 lakh. Any doubts on this? 1 crore 56 lakh. Particulars and 2 columns. Particulars, overall, other one is break even. Why this we are doing, you'll understand. Overall and break even. Overall and break even. Sales less variable cost. Contribution less fixed cost. Profit. Sales less variable cost, contribution less fixed cost and profit. Now what question has said is, break even point is 1 crore 17 and variable cost for the current year is 93 lakh 60. What is variable cost on overall sales? On overall sales, break even is 1 crore 17. Break even is 1 crore 17 and variable cost is 93 lakh 60,000. Now right, overall sales 1 crore 56, variable cost 9360. Tell me the contribution. Variable cost 9360. 9360. How much contribution? 60. 62 lakh 40,000. This side 1 crore 17. Break even is 1 crore 17. Only thing I know is profit is 0. Profit is 0. 1 crore 17 lakh. Profit is 0. Come down. PV ratio is equal to contribution by sales. PV ratio is equal to contribution by sales. Contribution by sales. 6240 by 1 crore 56. 6240 by 1 crore 56. 40% into 100. 40%. Where did this formula come from? Again the same thing. My formula comes from only one place. Contribution by sales is PV ratio. Now what I can say is, this sales which you are seeing here, if you multiply with PVR, you will get contribution. If you multiply with PVR, you will get contribution. In other words, if PVR is 40%, variable cost is 60%. If PVR is 40%, variable cost is 60%. All these linkage only you will have to be aware. because I am very clear on the linkages. Suddenly you give me a number, I'll be able to link it. You need to keep somehow get that grip on linking it. Your contribution is 40%, which means variable cost is 60%. Let's close it. That's all. This is 1 crore 17 lakh into 40%, into 40%, and same is the fixed cost. Same is the fixed cost. Same is the fixed cost. In fact, I didn't even need a break even column. I was thinking it will be needed. Moment I got 40%, I will go here. Break even point into PVR is fixed cost. Break even point into PVR is fixed cost. Be very clear on the linkage. Again and again, and only repetition is this. I didn't even need that column. I don't know. I opened the column, but when I was doing this, I thought it's not even needed. Break even point, 1 crore 17 lakh. If it's in value, multiply with PVR. If it is in units, multiply with contribution per unit. And we would have got fixed cost. Any doubts on this? Again, I feel this is a very good question which is drafted by ICI. Any doubts on this? Clear? This you give me answer. I'm not going to discuss it. You try, see what you want to do. You try it, I'll discuss. This is a September 24 exam question, 2 marks. Something which can be managed easily. You give it a try. If somebody gets the answer, let me know. Else, anyway, I'll explain it. No, not 19. No, not 19. Live online, guys, type it. I got an answer for 19 here, which is not right. No. We need your. Okay. Now, very simple. Do you have the selling price here? No. 100, 76, 24. 100 becomes 95. 76 will continue to be 76. Just because we reduce the price, our cost will not go down. Just because we reduce the price, cost will not go down. Anywhere you do not have information, take it as 100 and do. You will get the answer. 100, 76%. 76 is the variable cost per unit. Contribution is 24. 100 has become 95. 76 remains 76. 19. 19 on 95 is 20%. 19 divided by 95 is 20%. 19 divided by 95 is 20%. Again and again, I keep repeating the same thing. Take assumption, proceed ahead, you will get to the answer. Clear? Any doubts on this? And this is what I would have done. Let us assume, because every question I do, wherever numbers are not there, I can solve it without numbers, but somewhere understanding becomes difficult for students. So my easiest route is 100. I just start with that assumption of 100. This I'll take you through. A manufacturing firm is presently producing and selling 10,000 units of a product at 500 per unit in the domestic market. Fixed cost per unit at the current level of operation is 150 and the variable cost is 300. Variable cost is 300. So my cost per unit today is 450. My cost per unit today is 450. 150 and variable cost is 300 per unit, and I'm selling it for 500. I'm selling it for 500, basically making a profit of 50 rupees. Basically making a profit of 50 rupees. Firm has received an export order for supply of 5,000 units. For supply of 5,000 units at 400 rupees. I got an order for 400. Whereas my cost today is 450. I got an order for 400. How many units? 5,000 units. after meeting the domestic demand, if I accept the export offer, in this export order, will I make more money or lose money, and how much? Can you tell? Are we going to make profit or loss in the export order? Numbers I've already told you. Tell me, is it profit or loss in the export order? Profit or loss in the export order? Profit or loss in the export order? Need participation. Right, wrong, we will discuss. I've heard one answer in live online. Okay, let's do it. You will then only understand. Right. Particulars existing and revised. Revised is domestic plus export. Domestic plus export. Existing is only domestic and revised is domestic plus export. Domestic plus export. Sales are units sold. Units sold. Units sold. Existing, we have 10,000 units we are selling at 500 rupees. We are selling them at 500. Then we will do 10,000 at 500 and 5,000 at 400. We got an order at 5,000 at 400. 5,000 at 400. 10,000 at 500 and 5,000 at 400. Sales. Multiply 10,000 into 500. 10,000 into 500. And the other one multiply and tell me. 10,000 into 500 plus 5,000 into 400. Less variable cost. Less variable cost. Variable cost given in the question is 300 per unit. 10,000 into 300, 30 lakh, and 15,000 into 300, 45 lakh. Contribution 20 lakh, 25 lakh. Later on, I'll tell you I could have given this answer in just a minute, but clarity will not come that time. 20 and 25 lakhs. Less fixed cost. What does the question say? Fixed cost is how much? What is the question saying about fixed cost? 150 per unit. 150 per unit. So 150 into 10,000. 150 into 10,000. Important is copy paste the same fixed cost. Now don't tell 150 into 15,000. It will be same. Fixed cost will remain same unless they say extra fixed cost is incurred. Why 150 into 10,000? 150 is a misleading number. 150 is a misleading number. 150 is a misleading number and I get profit. 5 lakh increases to 10 lakh. 5 lakh increases to 10 lakh. 5 lakh increases to 10 lakh. Now put it simply, listen. I'm selling for 400 and my cost is only 300. Fixed cost, I don't incur anything extra. 400 is selling price. Variable cost is 300. You earn 100 into 5,000. That's a direct answer. 100 rupees you earn every unit. 100 rupees you earn. Fixed cost don't even bring into picture. That is an irrelevant data. Fixed cost is an irrelevant information. 150 per unit is of no use because I'll not be incurring any extra fixed cost. I'll not be incurring any extra fixed. If I was incurring any extra fixed cost, then that will come in analysis. So in this case, sales, extra sales 10,000, sorry 5,000 into 400, extra variable cost 5,000 into 300, extra contribution 5,000 into 100, extra fixed cost 0, extra profit 5,000 into 100. Extra profit is 5,000 into 100. Any doubts in this? With this, one major chunk of discussion is over. One major set of MCQs which I wanted to do on the basic side I have done. I will keep moving forward to some more concepts. Maybe by end of today's session, closer to that, we'll start doing descriptive question. Fourth concept is contribution. I think more or less already discussed. Contribution basically contributes towards recovery of fixed cost and generation of profit. It recovers fixed cost and generates profit for the company. Recovery of fixed cost and generation of profit. Two ways of calculating it: sales minus variable cost or profit plus fixed cost. Sales minus variable cost, profit plus fixed cost. Clear? Any doubts in this? PVR. PVR measures the true profitability by considering only what? Variable cost. Anybody wants to know what is the real profitability of a company? You should only measure it through profit volume ratio. Multiple formulae: contribution by sales, contribution per unit by selling price, fixed cost also can be used by break even sales, profit can also be used by margin of safety. One important formula is this: change in profit by change in sales. If they give 2-period data, if they give data for 2-period, change in profit by change in sales, like we have change in cost by change in units VC per unit. Profit is, our contribution is basically, PVR is basically profit. PVR is change in profit by change in sales, or change in contribution by change in sales. Change in profit by change in sales, change in contribution by change in sales. Clear? Any doubts till this? Let's look at this problem. PVR of a product is currently 40%. Variable cost per unit is 6 rupees. Variable cost per unit is 6 rupees. Company has reduced the selling price. Company has reduced the selling price, which has reduced the PVR to 20%. Which has reduced the PVR to 20%. How much is the revised selling price? How much is the revised selling price? We are going to put it in the marginal costing format little bit. You will get to the answer. Now write particulars existing revised selling price, variable cost, contribution per unit. Selling price, variable cost, contribution per unit. Variable cost, contribution per unit. Variable cost, contribution per unit. Today, the example says variable cost is 6 rupees, PV ratio is 40%. If PV ratio is 40%, variable cost ratio is 60%. If PV ratio is 40%, variable cost ratio is 60%. PV ratio is 40%, variable cost ratio is 60%. So 6, this is 60%. 6 is basically 60%. 60%, which means selling price is 10 rupees, which is 100%, and contribution is 4 rupees, which is 40%. Contribution is 4 rupees, which is 40%. Any doubts on this? Then it says, I am reducing the selling price, which is bringing down the PVR to 20%. One rule, be very clear: if you change the selling price, along with that variable cost will not change. Variable cost per unit cannot change. Ratio and all can change, but per unit variable cost cannot change unless you tell me that that is also changing. So this continues to be 6, and contribution is now 20%. Variable cost is now 80%. Selling price is 100%. It continues to be 6 rupees, but now that is 80%. Now that is 80%. Earlier 6 rupees was 60%. Now the same 6 rupees is 80% because we dropped the selling price. You'll get the selling price now, 7.5. Any doubts on this? Clear? Can you proceed? This is not needed. These two examples not needed as of now. Just give me a minute. Let's come to this example. A company has incurred fixed expense of 4 lakh 50,000 with sales of 15 lakh, earned a profit of 3 lakh during the first half year. Earned a profit of 3 lakh during the first half year. In the second half, it reported a loss of 1 lakh 50. What is the sales of the entire year? What is the sales of the entire year? Particulars, first half, second half in marginal costing format. In marginal costing format, right? Particulars, particulars, first half, second half. First half and second half. Moment all MCQ and concepts are done, technically chapter is over. For practice, I will do descriptive questions. We do not have per unit data in this. Sales, less variable cost, contribution, less fixed cost, profit. I'll first copy the first half data, then we'll see second half information. First half fixed expense 4 lakh 50, sales 15 lakh, sales 15 lakh, profit 3 lakh, and second half is loss of 1 lakh 50. This is the only information I have in the question. Okay, listen. Or we'll do it. First half reverse working, I'll get contribution. First half reverse working, I'll get contribution. 3 lakh minus of minus 450. 7 lakh 50,000. Variable cost is negative 750. Any doubts on this? This means PVR is 7.5 by 15 lakh, 50%. PVR is 50%. Contribution by sales. PVR is contribution by sales 50%. Any doubts on this? Okay. In the second half, one thing I know is this will be same. Fixed cost will be negative 450. Fixed cost will be negative 450. Can you tell me what will be contribution of second half? Contribution of second half. Careful. 6 lakh means 6 lakh minus 450 profit you will make. If contribution is 6 lakh, 6 lakh minus 450 will give you profit. It is 3 lakh. Cautious. Always be careful. 3 lakh. Any reverse working, once you are done, please check again. If you write 6 lakh minus 450 is profit. And sales is 3 lakh by 50%. Contribution by PV ratio. Contribution by PV ratio. We are kind of done here. 3 lakh by 50%. Clear? And question wanted, what is the sales of the entire year? 15 plus 6, 21. 15 plus 6, 21. Any doubts on this? Any doubts on this? Caution is always needed because in an urgency you will make mistake. Please give me the answer to this. Formula is change in profit by change in sales. Formula is change in profit by change in sales, but caution. Be cautious. Change in profit by change in sales. Apply the formula and tell me the PV ratio. 75. Okay, I'll discuss live online, guys. Type it. One answer I've got is 75% here. Change in profit by change in sales. Listen, we are in loss of 5,000 and we are moving to profit of 10,000. We are in loss of 5,000 and we are moving to profit of 10,000. So change in profit is 10,000 minus of minus 5,000, 15,000. From loss I'm moving to profit. From loss I'm moving to profit. So change in profit is 15,000. Change in sales is okay. 20,000, 75%. Change in profit by change in sales. From loss we are moving to profit. From loss we are moving to profit. Any doubts in this? Okay, I'll discuss. You need not do it. Okay. Company had cost of 20,000 in the first half when revenues were 30,000. 20,000 in the first half when revenues were 30,000. It reported cost of 25,000 in second half when revenues was 40,000. Reported cost of 25,000 in second half when revenues was 40,000. What is the fixed cost of second half? What is the fixed cost of second half? Now listen. 30 minus 20 will give me profit of first half. 30 minus 20 will give me profit of first half. Then 40 minus 25 will give me profit of second half. Change in profit by change in sales will give me PV ratio. I'll get contribution. I will know the profit. Fixed cost is balancing figure. Fixed cost is balancing figure. Look at different ways of playing around with the same thing. It is change in profit by change in sales. But question did not give profit. They gave cost. Your job is to calculate profit and then apply it. Your job is to calculate profit and then apply it. Any doubts on this? Okay. I'll have to still move to some more concepts and then we have to do descriptive, but I'll take a 15 minutes break at this stage. We have done concepts. You can either go through whatever we have done till now or take break. That's up to you. But concepts is what will be major focus today. Some questions I may start. So 15 minutes break now and then we resume again. Okay, let's proceed with the discussion. I think I'm kind of done with significant part of MCQ discussion. I will do concepts only, no MCQ now. We do some problems. We may come back to some of the MCQs tomorrow because I don't want to keep doing the same thing. Break even point, we are aware. Break even point refers to the level at which we make no profit, no loss. This is the level at which my contribution will be equal to fixed cost. My contribution will be equal to fixed cost. Formula will come from that equation. Fixed cost by PVR or fixed cost by contribution per unit. If you have in units, multiply with selling price to get in rupees. If you have it in rupees, divide by selling price. All that is fine. Good amount of MCQs are there. You can practice some of them. Some of them I'll discuss in the class. Everything will be a lot of time consumption. MOS is representing the sales which is making profits for the company. This represents the sale which is making profits for the company. It is also called as allowable drop in sales. It is also called as allowable drop in sales because if my margin of safety is 1 lakh rupees, sales can drop by 1 lakh and I'll still not be making losses. I'll still not be making losses. It's also called maximum allowable drop in loss, which can lead to losses for the company. After this only you will lead into loss making situation. Sales to achieve desired profit, the formula comes from this. That is, if I want a specific profit, desired profit is equal to fixed cost, that is desired profit plus fixed cost is desired contribution. Desired profit plus fixed cost is desired contribution. Divide by CPU, you will get units sold. Divide by PV ratio, you will get the total sale. Divide by PV ratio, total sales. Divide by contribution per unit, you will get total contribution. Profit, a question will say I want to make a profit of 1 lakh rupee, 2 lakh rupee, 3 lakh rupee. Any profit the question gives has to be profit before tax. Has to be profit before tax. If there is a profit after tax given in the question, then you have to convert the PAT into PBT. You have to convert the PAT into PBT and then solve the question. How will you convert? PAT divided by 1 minus tax rate. If whatever problems we did till now, if any of the MCQ had said I want a PAT of 2 lakh, you cannot directly use it in the formula. From PAT convert to PBT and then apply the formula. Clear? Any doubts on this? Now I get into questions. I may come back to some of the concepts today or in tomorrow's session. We will do question number 2. Let's go to question number 2. Some of the question we are going to do today. This is the data. Following information is available for PQR Limited. Year, sales, profit slash loss 2022-23, 2023-24. Calculate the break-even sales. Calculate the break-even sales. In 24-25, it is estimated that variable cost will go up by 5%, fixed cost will reduce by 4 lakh 80, selling price will remain same. Calculate the volume to earn a profit of 15 lakh. Volume to earn a profit of 15 lakh. So first thing is break even sales. Now for break even sales, my formula says fixed cost divided by PV ratio. Fixed cost divided by PV ratio or fixed cost divided by contribution per unit. Either divide by PV ratio or divide by contribution per unit. In this data, how will we get PV ratio? Change in profit by change in sales. Once I get PV ratio, I'll substitute in one of the year. Fixed cost will become balancing figure. Now write working note 1, computation of PV ratio. Working note 1, computation of PV ratio of PV ratio. PV ratio is equal to change in profit divided by change in sales. Change in profit divided by change in sales. Profit from 11 lakh 20 we are moving to negative 380. From 1120 we are moving to negative 380. What is the change in profit? Type it guys. Change in profit is how much? 1120 is becoming negative 380. No, 15 lakh na? Change in profit is 15 lakh. 15 lakh. Change in profit is 15 lakh. Change in sales is 2 crore 40 minus 1 crore 80, 60 lakh into 100 to express in percentage. Working note to computation of fixed cost. I can take any 1 year and calculate the fixed cost. Computation of fixed cost. Particulars calculation amount. Computation of fixed cost. Particulars calculation amount. We can take any 1 year. I'm taking 22-23 or 23-24. That doesn't matter. Let's take 22-23 itself. Sales of 22-23. Sales of 22-23. 1 crore 80 lakh. 22-23. 1 crore 80 lakh. Less variable cost. If PVR is 25%, variable cost is 75%. PVR is 25%, variable cost is 75%. 1 crore 80 lakh into 75%. Contribution 45 lakh less fixed cost. It's a loss making situation. Loss making situation negative 380. Negative 380. Loss making situation negative 380. What is the fixed cost figure? Balancing figure. 48 lakh 80,000. 48 lakh 80,000. We could have done any of the years, we would have got the same answer. 4880. Any doubts on this? Clear? Can we proceed? Any doubts on this? Below this, break even point is equal to fixed cost by PVR. I've already done it in MCQ form. I'm repeating it here only. Fixed cost by PVR. 4880 by 25%. 1 crore 95 lakh 20,000. 1 crore 95 lakh 20,000. Clear? Any doubts on this? Can you proceed? Okay. Then they are saying in the next year, variable cost will go up by 5%. Variable cost will go up by 5%. Fixed cost will reduce by 4 lakh 80. Selling price will remain same. Calculate the sales volume. Volume will mean value here because we do not know the per unit. Volume is normally units, but we do not know the per unit number. So sales value only to earn a profit of 15 lakh. To earn a profit of 15 lakh. Do we know today's selling price? Do we know the selling price in the question? Yes, no, you'll have to tell me. Sorry? No, no, that is okay. Do we know the selling price? No. So I'm going to assume the selling price is 100 to calculate PV ratio because PV ratio will change now. When you change the variable cost, PV ratio will undergo a change. PV ratio will undergo a change. Next, computation of new PV ratio. Computation of new PV ratio. Particulars existing and new. Particulars existing new. Selling price less VC per unit. Contribution per unit PVR. Selling price less variable cost per unit. Contribution per unit PVR. Profit volume ratio. Selling price less variable cost per unit. Contribution per unit PVR. Today, assumption 100. Assumption 100. Assumption is 100. Today my PVR is 25%, which means variable cost is 75%, which means variable cost is 75%. So this is 75. 25%. Clear? Now question is saying variable cost will go up by 5%. Any change in variable cost means a change in variable cost per unit. Any change in variable cost means a change in variable cost per unit. So 75 will increase. 75 plus 5%. 75 plus 5%. The assumption is needed to calculate PVR, else you will find it little difficult to understand. 75 plus 5%. Question as crystal clear mentioned, same selling price will continue. So selling price is 100. Selling price is 100. CPU will go down, PVR will go down. Contribution per unit will go down, PV ratio will go down. Contribution per unit will go down, PV ratio will go down. 21.25%. 21.25%. 21.25%. Any doubts on this? Any doubts on 21.25%? Very simple calculation. Now question says, tell us what should be the sales to earn a profit of 15 lakh. To earn a profit of 15 lakh. I go back to this. I know the profit figure. I know the fixed cost figure. Put together is contribution. I know the new PVR. Total sales is balancing figure. I know the new PVR. Total sales is balancing figure. Always be very clear on the interlinkages. Profit plus fixed cost is contribution divided by PV ratio is total sales. Divided by PV ratio is total sales. Now write sales to earn. Sales to earn profit of 15 lakh. Sales to earn profit of 15 lakh. Profit of 15 lakh. Profit plus fixed cost by PVR. Profit is 15 lakh. Profit is 15 lakh. Fixed cost will also change. Profit is 15 lakh. Fixed cost earlier was 4880. It will go down by 4 lakh 80. It will go down by 4 lakh 80 as per the question. I just go with whatever the question says. Profit is 15 lakh. Fixed cost from 4880. From 4880. Any change in fixed cost means a change in total fixed cost. This will go down by 4 lakh 80. What is the new fixed cost? 44 lakh divided by 21.25%. Whatever is the number, that's the final answer. Divided by 21.25%. This is the answer, whatever you said. 2 crore 77 64 706. 2 crore 77 64 706. Any doubts on this? Any doubts on the concept here? Whatever I'm repeating, I'll not be teaching new concept mostly. Just that I'm doing descriptive so that you get a feeler of those questions. Any doubts on this? Clear? Can we proceed? Come to question 11. It's a test your knowledge, question number 16. Question number 11. TYK question number 16. TYK question number 16. Let's read this. A Chinese soft drink company is planning to establish a subsidiary company in India to produce mineral water. Based on the estimated annual sales of 40,000 bottles of the mineral water, 40,000 bottles of the mineral water, cost studies produce the following estimates for the Indian subsidiary. Material cost, which has a variable component, labor cost has a variable component, factory overhead has a variable component, admin overhead has a variable component. Indian production will be sold by manufacturer's representative who will receive a commission, of 8% of the selling price. No portion of the Chinese office expenses to be allocated to the Indian subsidiary. You are required to compute selling price per bottle to enable the management to realize an estimated 10% profit. They want a 10% profit on the sale proceeds in India. Profit has to be 10% of sales, and you are required to fix the selling price. We are required to fix the selling price. Then they are saying, what is the BEP in rupees? Also in units. On the assumption that selling price is 14. Selling price is 14. Two requirements to the question. I go from the beginning. This way of cost classification is of no use in marginal costing. Marginal costing doesn't want to know what is material, what is labor, what is factory overhead, what is admin overhead. Then what do I want to know? VC per unit, TFC. Only two numbers I'm interested in. VC per unit and total fixed cost. Any other data, just waste of time for us. Any other data is just waste of time. So what we are going to do is, I have this 40,000 bottle. I'll calculate total variable cost, divide by 40,000 bottle, get VC per unit. And I'll separately calculate total fixed cost. Don't divide by the number of units. Don't divide by the number of units. I don't like material cost, labor cost, factory overhead, admin overhead. What I want, if it was silent, material is variable, labor is variable, admin is fixed, factory overhead is assumption. But here, question has given how much is variable, how much is fixed, all that is done. So first thing we will do is VC per unit and total fixed cost. In the VC, there's an item called commission. Commission is 8% of sales. Unfortunately, I don't know the selling price. So we will calculate without commission and see what to do with commission. I'll do the calculation without commission, and later on we will see what to do with this item commission, because commission is to be analyzed here. Commission needs to be analyzed here. Any doubts till this? Working note 1, computation of VC per unit and total fixed cost, in bracket excluding commission. In VC per unit you can write excluding commission. I should have written there excluding commission. Without commission we will do the calculation. VC per unit is equal to VC per unit is equal to, now every element has a variable component, has a fixed component. Parallelly, another formula you write, total fixed cost is equal to, leave some two lines gap, total fixed cost. Total fixed cost is equal to VC per unit equal to total fixed cost equal to. Let's go item by item. First is material cost. What do they say about material cost? Write only in the variable side, 1 lakh 50, 1 lakh 50. Labor 1 lakh 20 will come here and 30,000 will come in the fixed component. 80% is variable. 80% is variable. 20% is fixed. 80% is variable. 20% is fixed. So plus 1 lakh 20. And this side, sorry, my mistake, 2 lakh 10. Material is 2 lakh 10. 120 plus 30. 30 this side, 120 there. 120 and 30. Third item, factory overheads, 92,000 into 60% variable. Tell me how much? 92,000 into 60%. How much? 55 and 40% fixed. 36, 800. Same way, admin, tell me how much variable, how much fixed. 14,000 variable, 26,000 fixed. Any doubts on this? Always search for only these two information. I don't like material cost, labor cost information. I need VC per unit, total fixed cost. VC per unit and total fixed cost. Divide this with 40,000 and other one just put a normal total. Divide by 40,000 and just a normal total. 9.98 and fixed cost total. Clear? Any doubts till this? In this, commission alone is pending. We'll see what to do with commission. Clear? Working note 2. Fixation of selling price to earn profit of, it says, 10% of sale proceeds. To earn profit of 10% of sale proceeds. Fixation of selling price to earn profit of 10% of sale proceeds. Question has asked for fixation of selling price. So right, let us assume selling price to be X. Let us assume selling price to be X. Particulars per unit total. Selling price to be X. Particulars per unit total. Write the marginal costing format. Sales less variable cost, contribution less fixed cost, profit. We don't know the selling price. We are required to calculate that. Selling price is what we are trying to calculate here. Any doubts till this? Sell X, 40,000 X. X and 40,000 X. No other way. If they ask you to fix a price with a target profit, assume selling price is X. Sometimes units will be X. Sometimes price will be X. Units is given here, 40,000. Price is not given. Variable cost is 9.98 plus 0.08x. What is 0.08? Is 8% of selling price. 8% of selling price. 9.98 plus 0.08x. 9.98 plus 0.08x. We have to deduct this. We have to subtract this and write the contribution print. 9.98 plus 0.08x. Multiply with 40,000. 399,200. 3,200x. 399 200, 3200x, 3200x. Once I subtracted 0.92x minus 9.98. From x, if you subtract 0.08x and 9.98, you have to subtract it. You have to subtract it. There's item which is there, you have to subtract it. I put it in bracket. You have to subtract this item. What is the fixed cost number? 92. Please subtract this and tell me what is profit. 36800x, 36800x minus how much? Tell me. Sorry? 36800x, 399 200 is also minus, 92 800 is also minus only. Both are minus. 399 200 is also minus. I have put a minus sign there, but 92 800 is also minus. Minus of minus is not plus here. So, for example, if it was 10 here, profit is 10. Profit 10 means, sorry, contribution 10 means that's a positive item. Here, what I've written 36 800. So, mathematically, it is like this: 36 800x. This is a mistake which many students made in my class also. 36 800x minus 399 200 minus 92 800. Both are minus. Both are minus. So it is 36 800 minus 4 lakh 92 minus 4 lakh 92. 399 200 minus 90. Minus of minus is not there. Minus, I wrote a sign there. That's all. It is not minus of minus here. It is not minus of minus. What normally happens is you will see contribution 399 and deduct it. So this is 36 800 minus 4,92,000 is equal to 10% of sales. I want profit as 10% of sales. Please get the answer to X. 10% of sales. Profit has to be 10% of sale proceeds. Sale proceed is 40,000 X. Sale proceeds is 40,000 X. Small things we make mistake and that leads to loss of marks. 10% of 40,000 X. Let me know the selling price. 10% of 40,000 X. Clear? 15 is the selling price. Any doubts in this? Any doubts in this? Clear? Next, part 2 saying what is the break even point in rupees, also in number of bottle for the subsidiary on the assumption that the selling price is 14 per bottle. We have calculated 15. That's a different calculation. Now they are saying it is 14 per bottle. Now write BEP in units. BEP in units is equal to BEP in units is equal to fixed cost by contribution per unit. Fixed cost by contribution per unit. It is not with 15 rupees, now it is with 14 rupees. 15 is a different analysis. Fixed cost by contribution per unit. 90 to 800. 90 to 800 14 rupees minus 9.98 minus 8% of 14. 8% of 14 commission. Commission is 8% of 14. Prices changed in the rework scenario. If they had just said calculate break even point, then I would have done 15. If they just said calculate break even point, we would have used 15 itself. It said you have to reduce it, you have to assume 14 and do the calculation. 90 to 800 divided by 14 minus 9.98 minus 8% of 14. 8% of 14. Get me the answer. 8% of 14. 32,000 units, are multiply this with 14 rupees, you'll get in value. Both they have asked. 32,000 units. Once you get units, multiply, or once you get rupees, divide. 32,000 units are multiply with 14. Any doubts in this? 40? Okay, 48,000. Any doubts in this concept? Clear? Can we proceed? Any doubts on the concept here? Done? Let's okay. Let's come to 14. A company produced a single product which sells for 20 per unit. Variable cost is 15 per unit. Fixed overhead for the year is 6 lakh 30. Sales value to earn a profit of 10% on sales. Very clear. Sales value means units. Value is basically proxy is units. Price. So in this question, when we do, number of units will be x. Number of units will be x. In the earlier question, price was x. Sales value to earn a profit of 10% on sales. Then they are saying selling price. Now there is something on selling price to bring the BP down to 1 lakh 20,000 units. And margin of safety if profit is 6,000. Margin of safety if profit is 6,000. All the three looks to be different situation. No major analysis. Data is very simple. I have selling price 20, variable cost 15, contribution per unit 5 rupees, fixed overhead 6 lakh 30. Information is very simple. No extraordinary difficult information is not there. First thing, sales value to earn a profit of 10% on sales. Second is selling price to bring the BP down. This is a usual adjustment which IC asks. How selling price can be altered to reduce the BP, and margin of safety if profit is 6,000. Let's start. Working note 1. Question 14. Sales value to earn profit of 10% on sales. To earn profit of 10% on sales. Let us assume number of units to be x. Number of units to be x. Particulars per unit total. Particulars per unit total. Very similar to the earlier question. The only thing is, earlier question price was missing. Here units are missing. Particulars per unit total. 20, 15, 5, 630. 20, 15, 5, 630. 630. Number of units is x. 20x, 15x, 5x, 5x. Any doubts till this? And finally 5x minus 630. 5x minus 630 This time you will not get that confusion, but earlier you made a mistake because both were minus. Somewhere the mind forces you to make a mistake. 10% of 20x. 10% of sales. 10% of 20x. 10% of 20x. Let me know the x and then we'll write the value. X equal to 2,10,000. Value equal to 42,000. 42 lakhs. 42 lakhs is the value. Again, this was not the very tricky part. Now, I wanted to touch upon this with the next concept, but okay, concept, I didn't want to keep rushing through concepts alone. This is the point. Change in sales. Sales can either change due to selling price or number of units sold. Question asks for target profit. What is target profit? They'll say 10% of sales, 20% of sales, something they'll say. And tells us to compute selling price, assume selling price as X. Assume selling price as X. Compute units sold, assume units as X. Assume units as X. No clarity. Sales will change based on units. Sales will change based on units because selling price does not change unless provided otherwise. Does not change unless provided otherwise. So if question says calculate sales, it just says calculate sales to earn a profit of 10%. Nothing else is mentioned. The number of units will change, selling price will remain same. Number of units will change, selling price will remain same. In this question, it is crystal clear. How it is crystal clear? It said compute sales value to earn a profit of 10% on sales and they gave the price. They gave the price. So price will remain same, units will change. Price will remain same, units will change. Any doubts on this? Okay. Second part, calculate the price to bring the BP down to. Some question will say down to, some question will say down by. Tell me how can I calculate existing BP? Tell me the formula for BP here. Which formula will give me BP? Fixed cost by PV ratio is not there. I have not calculated. Contribution per unit. I prefer that formula because that is readily available. So right, BP is equal to fixed cost by contribution per unit. 6 lakh 30 divided by 5. 6 lakh 30 divided by 5. 1 lakh 26. But question is saying we don't like 1 lakh 26. You change it to 1 lakh 20. You change it to 1 lakh 20. This is a usual question. Students keep getting confused here. Now listen. What we will do is we'll apply the same formula. 120 equal to 630. CPU will be balancing figure. CPU will be balancing figure. CPU plus variable cost is selling price. CPU plus variable cost is selling price. CPU will be, this calculation was not needed. But some question can say bring down by. By means you need the existing and the new. Existing and the new. Here directly I can do 1 lakh 20. Directly I can do 1 lakh 20. Any doubts on this? Any doubts on this? Now right, BP is equal to again. BP is equal to fixed cost by contribution per unit. Fixed cost by contribution per unit. Contribution per unit. The BP given is how much? 1 lakh 20,000 is equal to 6 lakh 30 divided by contribution per unit. Divided by contribution per unit. 5 point. Contribution per unit is 5.25. VC per unit. They have not talked about any change on VC per unit. VC per unit. VC per unit. How much the VC per unit? 15. Add the 2. VC per unit 15. VC per unit 15. Selling price 15 plus 5.25. 20.25. Very simple. This is a usual question. This is a usual question. Bringing the BP down. Down by they can say, down to they can say. Answer the third part. I'm not even explaining. You think the formula. Which formula will help? Think. 2 minutes for you. Any rework is always on part of original situation, continuation of original. Which formula will help you here? So profit divided by contribution per unit, you'll get the answer in units or give both answer. They have not asked units or rupees. They've just said margin of safety. They've just said margin of safety. You on safety sake answer both. Answer both. Profit by contribution per unit. Original, everything original. 6,000 by 5, 1,200 units OR into 20 rupees. Into 20 rupees. Can I do through PVR? Yes, we can do, but PVR I have not calculated. I don't want to get into that. I don't want to get into the PVR part. Any doubts on this? Clear? Let's go through question 15. Illustration number 4. PQ, this is a very good question again. PQR Limited has furnished the following data for the 2 years. Sales, PVR. PVR is changing 50, 37.5. Normally PVR does not change. Margin of safety can change 40% and 21.875%. There has been a substantial saving in fixed cost in the year 2012. There has been a substantial savings in the fixed cost in the year 2012 due to the restructuring process. Due to the restructuring process, the company could maintain its quantity of 2011 in 2012. Quantity of 2011 in 2012 by reducing the selling price. So 2011, how many units? I don't know. We can say 100 units if we want. Same 100 will continue in 2012. But sales will not remain same because there's a reduction in selling price. There is a reduction in selling price. They want us to calculate sales for 2012, fixed cost for 2012, break even sales for 2012. Let's open a marginal costing income statement. Particulars 2011, 2012. 2011 and 2012. Question number 15. 2011 and 2012. Write the format, and after the format you write MOS and break even sales. Somewhere this will help me. MOS and break even sales. Again, I'll keep going back to the equation only. Equation, be very, very clear. At home, see the equation 20 times, 30 times, register it fully. All things, if you register the equation properly, things will become very easy. MOS and break even sales. Clear? Okay, let's see this now. Particulars 2011, 2012. Sales is 8 lakh. Sales is 8 lakh. PVR 50%, which means contribution is 50%. PVR is 50%. Contribution 4 lakh. Variable cost 4 lakh. Contribution 4 lakh. Variable cost 4 lakh. MOS is 40%. MOS is 40%. 8 lakh into 40%. 3 lakh 20. 3 lakh 20. Break even is 4 lakh 80. 320 and 480. 320 and 480. Tell me, how can I calculate fixed cost or profit of 2011? Which formula will help you? Which formula will give you fixed cost or profit of 2011? Look at the equation, you will get into PV ratio. Margin of safety into PV ratio or break even point into PV ratio can give you fixed cost. Margin of safety into PV ratio or break even point into PV ratio can give you fixed cost. Any of them I can follow. So profit is 3 lakh 20 into 50%. Fixed cost 240. Fixed cost is 240. Clear? Now we'll do the rework part of it. Rework part of it. In the rework, I know only 2-3 information. PVR is 37.5%. MOS is 21.875% of sales. Problem for me is fixed cost I cannot copy paste. Normally we copy paste fixed cost. But here there has been a substantial savings in fixed cost. There has been a substantial savings in fixed cost. Now most important understanding, listen. Question has said there is a reduction in selling price. Overall quantity remains same. Overall quantity remain same. VC per unit, nothing is mentioned in the question. Overall quantity remain same. VC per unit, nothing is mentioned. VC per unit, nothing is mentioned. If overall quantity remains same and there's no change in variable cost, total variable cost will continue as the same. Total variable cost will continue. In case there was a change in quantity, I would have taken 100 units. Variable cost is 4,000 per unit into 100, 110, 120, 130. So last year 100 units, 4,000 rupees. Now 100 units, same 4,000. Same 4,000, 4 lakh will continue. Same 100 units, 4,000, 4 lakh will continue. If the question had said there is a change in quantity, there is a change in quantity, no problem. If quantity is changing, I would have told 100 units, 120. I would have told you to write the assumption. Can I do with 100, 100? Yes, you can do. I don't want. I feel I can do it without that assumption also. If you want, you can take 100 units assumption. Last year, 4,000 per unit. This year also 4,000 per unit. Any doubts on this? Copy paste 4 lakh. Copy paste 4 lakh. But the point is PV ratio has still gone down. Why will it go down is because of selling price. Now listen. Selling prices, we don't know the value, 100. Selling price is 100. Contribution is 37.5. Contribution is 37.5. That is, this is 37.5%. Variable cost is 62.5%. Variable cost is 62.5%. Please tell me what is 100%. Please tell me what is 100%. Variable cost is 62.5%. Variable cost is 62.5%. What is sales now? I've got the answer in live online. 6 lakh 40,000. I'll repeat the concept again. Very simple. What we are doing here is variable cost is 62.5% and contribution is 37.5%. So this number is 6 lakh 40. Contribution is 2 lakh 40. Contribution is 2 lakh 40. Please now calculate MOS and break even sales and using that profit and fixed cost. MOS and break even sales. Question has given the data. How much is the MOS now? 21.875 percentage. So 6 lakh 40 into 21.875 percentage. Be very, very clear on the interlinkages. 6 lakh 40 into 21.875 percentage. Into 21.875 percentage. 1 lakh 40,000. Break even is 5 lakh. Profit into PV, sorry, MOS into PV ratio is profit. MOS into PV ratio is profit. Again and again, my request is only this. Be very, very clear. This should fully register in your mind. You should be very, very clear on this. Profit is equal to MOS into PV ratio. MOS into PV ratio, which is 1 lakh 40 into 37.5%. Fixed cost balancing figure. And fixed cost balancing figure. Clear? 52,500, 187,500. 187,500. 187,500. Clear? Any doubts in this? Let's come through this question 18. It's a case scenario, study mat case scenario. I give you a minute or two, go through this first. Case scenario, go through this. A good question, well drafted. Go through this first. Okay, let's see this. A meeting of the head of department of the Arnav Limited has been called to review the operating performance of the company in the last financial year. Head of the production department appraised that during the last year, company was operating at 70% capacity, but in the next year we have to operate at 95% capacity, and for this an additional amount of 100 crore on capex and working capital is required. Extra 100 crore has to be spent. Head of the finance department has presented during the last financial year. PV ratio was 40%, margin of safety is 50 CR, and break even is 200. So total sales is 50 plus 200 last year. 50 plus 200 last year. Break even is 50, and margin of safety is 50. Break even is 200. Put together 250. To the reply to the proposal of increasing the capacity to 95%, head informed that this could be achieved. This could be achieved if the selling price and variable cost are reduced by 8% and 5%. That word of sales is a big difference in the question. It will make a very big difference. I'll explain as we proceed. 5% of sales word will make a big difference. Fixed cost will also increase by 20 CR. Additional capital will be arranged at a cost of 15%. So interest cost can also be there. In the coming financial year, it has been aimed to achieve an additional profit of 10 crore over and above the last year profit after adjusting what? Interest cost on additional capital. After adjusting the interest cost on additional capital, after paying interest, I want to an extra 10 CR. They want to know what should be the sales for the coming financial year, what will be the break even point for the coming year, what will be the margin of safety, what is the profit of the last year and this year. Last year to this year, there is a 10 crore increase. Last year to this year, there is a 10 crore increase. I don't know why they asked this. The answer is this. Last year to this year, there will be a 10 crore increase. They want an increase of 10 crore. Last year, 50 becoming 95 is not possible. 20 becoming 65 is not possible. 20 becoming 30 is okay. 45 becoming 66 is not possible. 10 CR increase. They want a 10 CR increase. And what is the last year total cost and the coming year cost? Last year total cost and coming year cost. Data on per unit and all is not available. I may not need it also. Open the marginal costing statement. Particulars last year and next year. Particulars previous year, next year. Previous year and next year. Sales till profit, and also add MOS and break even sales. Also add the point called MOS and break even sales. sales less variable cost, contribution less fixed cost, profit, margin of safety, break even sales. Margin of safety and break even sales. Previous year and next year. Let's first close the previous year fully and then we'll come to the next year calculation. In the previous year, my PV ratio is 40%, margin of safety is 50 CR, break even point is 200 CR, and PV ratio is 40%. Using those three equations, we'll complete this table. Right, MOS 50, break even 200, 50 and 200, sales is 50 plus 200. Everything comes from the equation 50 plus 200, and contribution is 250 into 40%. 40%. Tell me, how can I get fixed cost or profit? One of them. Sorry? Fixed cost is equal to, or whatever, profit you can calculate using MOS, or fixed cost you can calculate using the break even sale. So using the break even sale, 200 into 40%, 80, profit is 20. This has to become 30, 10 crore increase. Has to become 30, 10 crore increase. 10 CR increase. 20 has to become 30. Clear? Fixed cost, they are saying, last year we know the fixed cost. Changes they have talked about in the question. What are the changes? Fixed cost will increase by 20 crore due to depreciation and another 15 crore due to interest. What is 15 crore? 15% into 100 crore capital. 100 crore capital. I want to earn profit after meeting interest also. Marginal costing is for decision making purpose. After meeting interest also, I want to earn a profit of extra 10 CR. So fixed cost last year was 80, will go up by 20, and interest is also there. Interest is also there. Interest is part of my fixed expenses. It is not an operating expense, but it is part of my fixed expense. Last year 80. How last year 80? We have it in the screen. 80 plus another 20 crore increase. Fixed cost will increase by 20 CR due to increased depreciation, and another 15 CR due to interest. Another 15 CR due to interest. Any doubts on this? Any doubts on this? No, right? 80 plus 20 plus 15. 115. 115. Reverse working contribution. 145. Okay, now listen, this is a very important explanation. Let's assume earlier they said PV ratio was 40%. So earlier 100 rupees price, variable cost 60, contribution 40. Question says selling price and variable cost are reduced by 8% and 5%. If they just use the word 5%, if they just use the word 5% of sales has a significant implication here. If they just use the word 8% and 5% means this will become 92. This will become 92. This 5% drop is 57. 35 on 92, I have to calculate new PV ratio. 35 on 92, I have to calculate new PV ratio. Now, selling price will reduce by 8%. I have no problem on that. Variable cost will be reduced by what they mentioned, 5% of sales, which means not variable cost. Of sales means variable cost ratio will change by 5%. Of sales, what is variable cost divided by sales? That is called variable cost ratio. Variable cost by sales. Variable cost by sales. Variable cost will be reduced by 5% of sales. That selling price data is of no use. You'll understand. Variable cost ratio. Today the variable cost ratio is 100% sales, contribution 40%, which is PVR, variable cost ratio is 60%. This will go down to 55%, PVR will go up to 45%. This will go down to 55%, PVR will go up to 45%. Why did they talk about selling price? I don't know. No use. No use. Selling price information itself is of no use. What they have ended up doing here is they have said selling price will be reduced by 8, variable cost by 5 if they stop there. If they stop there, then this is the calculation. 100, 60, 40. 100 will become 92, 60 will become 57, 40 will become 35. You calculate the new ratio, which is 35 on 92. It is some 38%. The PV ratio will become 38%. But the word used here is, I'll read it again. The department info, this could be achieved. I don't want to talk about selling price. Variable cost is reduced by 5% of sales. Of sales means variable cost ratio. Variable cost ratio. Of sales means variable cost ratio. Variable cost of sales. Of sales means variable cost ratio will go down. PVR will go up. PVR will go up. Despite this, indirectly would mean selling price would have gone down by 8%. Variable could have gone down by 13-14%. We don't know the number and all. And ultimately, PV ratio is going up. Ultimately, PV ratio is going up. Ultimately, PV ratio is going up. Variable cost of sales. Variable cost of sales. Now, right below this, variable cost ratio. Variable cost ratio today. Today is 60%. Variable cost ratio today is 60%. Today is 60%. Variable cost in bracket of sales. Variable cost of sales will go down. Will go down by 5%. Will go down by 5%. Will go down by 5%. This would mean VC ratio. This would mean VC ratio. This would mean VC ratio declining to 55%. VC ratio declining to 55%. From 60, ratio will go down by 5%. Ratio will go down by 60% minus 5%, 55%. And hence, PVR will improve to 45%. PVR will improve to 45%. PVR will improve to 45%. With that, the problem is almost over. PVR will improve to 45%. Now, contribution divided by PVR is sales. Again from the equation. Contribution divided by PVR. 145 by 45%. 145 by 45%. 3 and variable cost balancing figure. 177.22. 322.22. 177.22. I'll again repeat, variable cost of sales. Variable cost of sales means variable cost ratio. Variable cost ratio. If they just use the word variable cost, then it is variable cost per unit going down. 100, I would have assumed 100 and done the calculation. Any doubts on this? I'm not answering the MCQ part. First one is answered 322. Second one, you have to use the new formula. Break-even point is fixed cost divided by PV ratio. Margin of safety, profit divided by PV ratio. 20. All this I don't want to spend time. Any doubts on the concept? Variable cost of sales. Variable cost of sales would mean variable cost ratio. Variable cost of sales would mean variable cost ratio. Any doubts on this? Any doubts on this? Okay, 22 I wanted to do, but we have already discussed this when we did that MCQ. In the MCQ, I have already discussed this, but so when we were doing that question, we had got 8 lakh as cost of sales. If you remember, we had done this question. 8 lakh was cost of sales. In that, fixed cost is 3 lakh 69,000. Fixed cost is 3 lakh 69,000. 8 lakh calculation will take away maybe some 5 minutes of our time, but that was already done when we did that question. We are not going to solve this. They've asked for break even sales in rupees. How will you calculate break even sales? Is fixed cost divided by PV ratio. Fixed cost divided by PV ratio. Fixed cost, you know, PV ratio is contribution per unit by selling price. They've asked for profit, sales less variable cost, contribution less fixed cost, profit. Margin of safety in percentage. In percentage means first calculate the MOS in rupees, and then what is MOS in rupees is total sales minus break even sales. Total sales minus break even sales. Profit if the sales were 10% less. 10% less means originally we did it for 5,000. Do another statement for 4,500. Another statement for 4,500. I don't want to do this part of it at home. If you want to, please practice it. This question I've done it in MCQ form. You complete the entire solving part. Any doubts on this? Any doubts on this question? Next question we'll practice this. Just give me. Okay, go through 29, page 341. Page 341. I think this should be the last question for the day. Go through this. Page 341. I'll give you a minute, 2 minutes for you to go through. It's a lengthy question, and thereafter I'll explain it. The top para is of no use. Only thing is factory operates for 25 days. That is the only information which could be of use. Okay. I have certain cost, factory rent is there, depreciation is there, admin expenses there, salary is there, fixed cost 10 lakh. Number of units produced per month is 10,000. Last month there was an additional special order of 2,000 which resulted in higher production. Normally we produce 10,000 units. Maybe last month we have produced 12,000 units. Last month we could have produced 12,000 units. There was some special order. Or last month was 12,000 and normally we last month was 10,000 and normally we produce 8,000. Depends on how we interpret it. Number of units produced per month. I assume this is the normal production. Last month we could have produced more units. Why this is given? You will understand. Selling price is 1,500. Raw material include copper, plastic, other material. Copper, plastic and other material. The per unit cost of copper is 80 more than the cost of plastic. As I read it, let's write them. The per unit cost of copper is 80 more than the cost of plastic. The per unit cost of copper is 80 more than the cost of plastic. So write copper equal to, otherwise it will become a little difficult to understand. Copper equal to plastic plus 80 rupees. Plastic plus 80 rupees. Copper equal to plastic plus 80 rupees. Per unit cost of copper is 80 more than the cost of plastic. While the cost of other material is 2 times of that of plastic. Cost of other material, it includes copper, plastic and other material. Copper is 80 more than plastic. Other material is twice that of plastic. So other material equal to 2 into plastic. Other material is 2 into plastic. We don't know any of them as of now. Other material is 2 into plastic. And the total raw material cost per unit. What is total raw material cost? All the three. All the three put together is 210. All the three put together is 210 more than the combined cost of copper and plastic. All the three put together is 210 more than the combined cost of copper and plastic. So right, copper plus plastic plus other material is equal to copper plus plastic plus other material is equal to 210 plus copper and plastic. 210 more than the combined cost of copper and plastic. 210 more than the combined cost of copper and plastic. 210 more than the combined cost of copper and plastic. What they said is the total raw material is all the three. All the three is 210. 210 more than the combined cost of copper and plastic. 210 more than the combined cost of copper and plastic. So equal to 210 plus copper plus plastic. Tell me what is the other material cost. You'll get the other material cost now. You will get the other material cost now. Other material is rupees 210. Other material is rupees 210. Other material is rupees 210. Clear? Substitute this in other material equal to 2 into plastic and tell me plastic. Other material equal to 2 into plastic. 210 equal to 2 into plastic. How much is plastic? How much? 105. Substitute that in the first equation and tell me copper. Substitute in the first equation and tell me copper. 210, 105. Copper cost is 105 plus 80, 185. And ultimately total raw material cost per unit is 185, 105 and 210. 185, 105 and 210. Once this part is done, we are almost closer to the completion. This was the most, you'll have to read line by line. You read it line by line, you'll get the clarity. 185 plus 105 plus 210. All put together how much? This is the raw material cost. Apart from that, we still have some more things. Raw material cost is 500 per unit. Then they are saying labor hour rate is 100 per hour. The total labor hours in the last month were 36,000 hours. Last month 36,000 hours for, I assume, 12,000 units. Last month extra 2,000 unit. Last month extra 2,000 unit. Last month is not 10,000. Last month extra 2,000. So one unit needs 3 hours. One unit needs 3 hours. Last month 12,000 units, 36,000 rupees. 12,000 units, 36,000 rupees. One unit 3 hours. One unit 3 hours. Last month 12,000 units. So labor cost is 3 hours into 100. Labor cost is 3 hours into 100. Next, labor hours per unit. Labor hours per unit, 36,000 hours. Last month 10,000 plus extra 2,000 production. 10,000 plus extra 2,000 production. 10,000 plus extra 2,000 production. 12,000 units. 3 hours. Labor cost per unit. 3 into 100. 300 per unit. $300 per unit. Clear? 300 per unit. Then we have utility cost is 100, packaging cost is 150. Utility cost is 100. With this, the question is over. Once I write this, utility is 100, packaging is 50. All put together, we will get the variable cost. All put together, we will get the variable cost. Now, right, total variable cost per unit is equal to 500 of raw material, 300 of labor, 100 of utilities, 50 of packaging. 500, 300, 100 and 50. 500, 300, 100 and 50. We have practiced some 5-6 questions. Earlier I did all MCQ. Now we have practiced few questions. 500 plus 100 plus 300. Sorry, 300 plus 100 plus 50. How much? That's all. I don't do anything beyond this. Listen now. Contribution per unit 1500 minus 950. Contribution per unit is 1500 minus 950 per unit. Break even point fixed cost by PB ratio. If the company wants to achieve a profit of 5 lakh, what should be the sales volume? Profit plus fixed cost by contribution per unit. What will be the impact on BEP if the variable cost per unit increases by 10%? Your BEP will change now. Your BEP will change now. Calculate the margin of safety if the company sells 4,000 units and the variable cost per unit increases by 10%. So 4,000 units is the sales. You will get your break even point in part 4 where 10% increase is there. Balance is margin of safety. So I don't want to discuss all of that. Most important point for me is how you get this 950. Beyond that, it's just a formality. Beyond that, it's just formality. You can do the solving part if you want. Even if you don't do it, it doesn't really matter. Any doubts on this? Any doubts on the concept here? Clear? With this, I'm done practice of some 5 6 question. We have done MCQs. My only request is, if time permits, try to do the MCQ of concept 5 6 7 8 9. We have not done those MCQs. If you can do those MCQs at home, you will get good grip in tomorrow's session, because concept 2 we had a lot of MCQs which I did fully. Then 3 4 also I did, but 5 6 7 I did not do many MCQ. So if you have time, please do MCQs of concept 9, concept 8, concept 7 and concept 6 to the extent possible. Try to cover these MCQs 5 to 9. If you do this, you will find it easier in tomorrow's session. Clear? I still need to cover just few concepts, but it will be more of problem solving only in tomorrow's session. We'll end with this then. Good morning, friends. Okay, let's continue with the discussion. In the previous session, we were doing marginal costing. We have gone through broadly the concepts of marginal costing. Marginal costing is primarily classifying the cost as variable cost, fixed cost, and using that for the purpose of decision making. The entire chapter revolves around a small equation which you need to be aware of. This is the equation with which different formulae will come. BEP plus MOS is total units, or break even point plus MOS is total sales. Multiply with PVR if you're writing in rupees, multiply with CPU if you're writing in units, and you get fixed cost plus profit as contribution. This is what predominantly we used in different questions. So using this basic equation, we learned what is contribution, what is PVR. In PVR, we learned 3 different formulae, and then there can be a formula of change in profit by change in sales, change in contribution by change in sales. Then we also learnt about break even point again from the same formula. We also learnt about margin of safety from the same formula. Sales to achieve desired profit from the same equation. Profit here means profit before tax. If profit after tax is given, we have to convert into PBT. And I think we had done this change in sales. If the question says that I want a target profit and they say sales has to change, if they specify, please unmute. Sorry, guys. Sorry guys, I didn't see this. Sorry. Okay, so if the question specifically mentions that it is change in sales and they mention it is on units, then you will have to assume units as X. If it is value, you'll have to assume value, that is selling. If they assume selling price is X, and if the problem is silent, you will assume units as X and proceed it. Till concept 10 I had done in the previous session. Today I'm going to do the balance set of question. A small announcement. Tomorrow's session is little tentative because continuous 5 days I've taken. Depends how my throat is at the end of the day and tomorrow morning. So I may do some cancellation of the session, and the DT which was to commence from Sunday, that we will try to postpone a little bit. 1 or 2 days change we will do and then update you in the group in case I'm making a change. Well, if some changes are likely to happen on the schedule side, we'll update that in the group. But high probability tomorrow's session may not happen. But that looks like that's the scenario. Depends on the throat, obviously. Today we will 100% complete marginal costing. I'm moving to question 32. A slightly lengthier question. Please keep it in mobile phone. Otherwise, you will not understand it. Page 345. Go through the question. I give you 3 4 minutes to go through the question. It's a very lengthy problem. Go through this question. Page 345, May 25 MTP. A very lengthy question. Please go through this. 3 to 4 minutes for you. Okay, let's go through this. Page 345. Keep the PDF open with you. Otherwise, you'll find it difficult to follow because all lengthy questions will come now onwards. Company Ronto Max maintains first para no use, second para no use, first para no use, second para no use. There's nothing there. Third para also no use. First, second, third, all the three paras were of no use. Some fire happened, something they're talking about, or some records got lost. Least bother about this. Now comes the important part. It earned a revenue of 80 lakh in first quarter. Tax provision is 4 lakh 50. That is PBT less tax is 4 lakh 50. COGS and OPEX in the first quarter. COGS and operating expenses 38 and 12 lakh 50. Interest expenses 1 lakh 50. So I will do sales less variable cost, contribution, maybe less fixed cost, EBIT less interest, EBT less tax, EAT. Like that, we have to do this. Interest expenses being talked about. Then they are saying non-operating expense other than interest. Non-operating expenses not related to core operation, but when I do EBIT, I'll have to subtract it. Before EBIT, I have to subtract this item. Selling price is reduced by 8%. Number of units increased by 25% from first quarter to second quarter. Selling price reduced by 8, and this has variable cost per unit for maintaining day-to-day operations. For maintaining day-to-day business operation is 30% of variable cost of producing the goods. There are two variable costs. One is variable cost of producing the goods, which is called COGS, and then there's a second part, managing the day-to-day business operation, which is technically after COGS you have your admin and selling. In that, they are saying variable component is 30% of the variable COGS. 30% of the variable COGS, whatever is the COGS variable part, 30% of that is the variable other cost. EBIT per unit of second quarter is 38.857. EBIT per unit is EBIT per unit is 38, which has gone down by. So first quarter will be 38 plus another 8, 38 plus another 8, which has gone down by 8.285. They want us to calculate what is the sales in second quarter, what is the total variable cost, fixed cost in quarter one as per marginal costing income statement. If fixed cost and total variable cost doesn't change, which is a very tricky thing. Total variable cost should ideally change. Total variable cost should ideally change. But question is saying total variable cost does not change. Total variable cost does not change. Why total variable cost will change? Because question has mentioned that units have increased by 25%. Units have increased by 25%. So if nothing is mentioned, increase in units will lead to increase in total variable cost. Question crystal clear says total variable cost doesn't change. Total variable cost doesn't change. Then operating fixed cost, total variable cost, interest cost remains same. Some interest cost also is not changing. And what is the amount of profit excluding the non-operating expense? We will try to do quarter one P&L, quarter two P&L, and somewhere we'll get the answer. Particulars: quarter one with two subcolumns, calculation amount, and quarter two with two subcolumns, calculation amount. Particulars: quarter one and quarter two with two subcolumns. Calculation amount. Let's first get the format fully and slide changes in the format. Sales less variable cost, contribution less fixed operating expenses, non-operating expenses, there are some operating expenses and non-operating expenses. You will get EBIT, earnings before interest and tax, less tax, sorry, less interest, EBT less tax, EAT. This after EBIT, what you do is financial management. After EBIT in FM, you will learn less interest, EBT less tax, EAT. So they have clubbed both of this together and they have brought in something called as non-operating expenses and operating expenses in the question. Some good adjustments are there. We'll go item by item. Let's first close quarter one and then I come to quarter two. In quarter one, sales is 80 lakh. Quarter one sales is 80 lakh, right? Sales 80 lakh. Sales 80 lakh. Quarter one 80 lakh is sales. Then I also know tax provision is 4 lakh 50. Tax provision is 4 lakh 50. Tax provision is 4 lakh 50. Clear? Now listen. COGS and operating expenses 38 and 1250. Now my assumption is, which is logical, entire COGS is variable. Entire COGS is variable because COGS normally will have your prime cost, factory overhead can have some fixed component, but I don't know. So this is fully variable and 30% of this is also variable. They say variable cost per unit of maintaining the day-to-day business operation means after COGS, 30% of the variable cost of producing the goods. So in this 12 lakh 50, 30% of 38 lakh, 30% of 38 lakh is variable, balance is fixed. 30% of, not 30% of 12 lakh 50, 30% of 38 lakh. The wording is variable cost per unit for maintaining the day-to-day business operation. For maintaining the day-to-day business operation is 30% of variable cost per unit of producing the goods. Variable cost per unit of producing the good. What is the variable cost of producing the goods? 38 lakh. 38 lakh. So in the variable cost, 38 lakh plus 30% of 38 lakh plus 30% of 38 lakh. Let me know the amount. 30% of 38 lakh. Live online guys, please type it. Let me know the amount. 4940. Contribution will be 30 lakh 60. 4940, 30 lakh 60. 4940 and 30 lakh 60. Any doubts on this? Clear? Okay, now listen. It says fixed operating expenses. So the operating expense was 12 lakh 50. In that 12 lakh 50, 1140 I have taken up. What is 1140? 30% of 38 lakh. 30% of 38 lakh I have taken it up. So balance will come here. 1250 minus 1140. 1 lakh 10. 1 lakh 10. 1 lakh 10. It's a very well drafted question. 1 lakh 10. Any doubts on this? Non-operating expenses are, non-operating expenses is 13 lakh. Tell me the EBIT number. Deduct all this EBIT. EBIT. Deduct these numbers and tell me the EBIT. How much? 16 lakh 50,000. I'm closed with this. Interest given in the question 1 lakh 50. 15 lakh. After tax 10 lakh 50. This is the first quarter data. First quarter data is this. First quarter information is this. Again, request is when I give you time to read the question, read it properly, because unless you read the question, you will find it difficult to follow the answer, because reading question is very, very critical. Any doubts on this? Any doubts on the computation here? Clear? Now, question has said EBIT per unit of second quarter is 38.857, which has gone down by 8.285. What is the use of this? Is I know the total EBIT. I know the EBIT per unit of first quarter. What is EBIT per unit of first quarter? Is 38 plus 8.285. 38 plus 8.285. This will somewhere give me the number of units. This will somewhere give me the number of units. I'll repeat again. EBIT per unit of second quarter is 38.857, which has gone down by 8.285. So here 38. 857 plus 8.285 is the EBIT into this question mark is the number of units plus 8.285 question mark is the number of units. Get me that question mark. 38.857 plus 8.285 into some question mark. 35,000 units. I'll again repeat, EBIT per unit of the second quarter is 38.857, which has gone down by 8.285, which has gone down by 8.285. So I added 8.285 and did a question mark. Question mark you are getting is 35,000 units. Any doubts in this? Any doubts in this? Can we proceed? Any doubts on 35,000? I'll repeat again, 38.857 for the second quarter. Add back 8.285. Add back 8.285 and question mark is the number of units. Go back here. Question mark into 35,000 is 80 lakh. Question mark is selling price. Question mark is selling price. Give me more decimal also. It's okay if you get in decimal. 228.57. 228.5714. Step by step we'll have to do. It's a little unique type of a question. 228.5714. 228.5714 into 35,000. Clear? Any doubts in this? Clear? Now I think problem is almost over. For the next quarter, price is reduced by 8%, units is increased by 25%. Price is reduced by 8%, units is increased by 25%. So please reduce the price, increase the units. Write it 228.5714 minus 8%. Minus 8%. Let it be more decimal to avoid rounding of gap. Minus 8%. Minus 8%. And increase units by 25%. Price is reduced by 8%, 228.5714 minus 8%, 210.2857, 35,000 plus 25%, 43,750, 35,000 plus 25%, 35,000 plus 25%. Selling price is reduced by 8%, units have increased by 25%. From 228, there is a 8% fall, 35,000, there is a 25% increase. Multiply and tell me the sales value. Okay, I've got it in live online, 92 lakh. Any doubts on this? Listen, in case problem was silent, this 4940 you would have calculated per unit and multiplied with 43,750. You would have calculated the per unit and multiplied with 43,750. Multiplied with 43,750. Unfortunately, fortunately, whatever way you want to call it, says total variable cost, fixed cost in quarter one as per marginal costing. Sorry, this one, fixed cost and total variable cost as per marginal costing doesn't change. Fixed cost and total variable cost as per marginal costing doesn't change. What is the cost change in whatever that is okay. They're asking fixed cost and total variable cost as per marginal costing doesn't change. Copy paste 4940. Copy paste 4940. Copy paste 4940. Ideally should not happen this way, but I don't have a choice. Copy paste 4940. 92 minus 4940. 4260. Ideally variable cost should have gone up because units are going up. I'm not saying at a per unit, but overall should have gone up. Fixed cost copy paste 110. This I will see. Well, it is not copy paste. There's a reason I'll explain. Now listen, EBIT for the second quarter is 38.857 into 43,750. Why this equation? Because it says EBIT for quarter 2, EBIT per unit of quarter 2 is 38.857, which has gone down by all, that is okay. So 38.857 into 43,750. 38.857. Very good question. I think it will be some 17 lakh. Balancing figure is non-operating expense. Balancing figure is non-operating expense, which I have got it from live online student. 2450. 2450. Very well drafted question. Only problem I felt was this variable cost part. They should not have said total VC will remain same. They should have told VC per unit will remain same. That's okay. But total VC remaining same was not logical. Interest also remains same. This is given in question number 4. Operating cost, total variable cost, operating fixed cost, total variable cost, and interest cost remain same. Interest cost remain same. What will be the tax rate? Can you look at this and tell me what is the tax rate? What is the tax rate here? 15 lakh, 4 lakh 50 is the income tax. 30%, 4 lakh 50 on 15 lakh, 4 lakh 50 on 15 lakh. That's the tax rate. That is the tax rate. 4 lakh 50 on 15 lakh. Any doubts on this? Any doubts on this? So that's all we are done. Into 30%. EAT. 10 lakh 85,000. I may see the MCQ requirement, but most of it would have got answered here. Most of the MCQ requirements would have got answered in the calculation. We will see what is asked in the question, but most of it would have got answered. Most of it would have got answered. Very well drafted question. I don't see the same question getting repeated, but the only thing is you do these question, your ability to handle little unique question is what is tested here. Any doubts on this? Can we proceed? If I see the requirement, sales of quarter 2 92 lakhs, sales of quarter 2 92 lakhs, total variable cost of first quarter is 49 lakh 40, 49 lakh 40 and 1 lakh 10. Fixed cost and total variable cost doesn't change. What is the cost change? Cost changes. Non-operating expenses are increasing by 11 lakh 50. Non-operating expenses are increasing by 11 lakh 50,000. If operating fixed cost, what is the tax provision for second quarter? 4 lakh 65. Tax provision for second quarter 4 lakh 65. What is the profit excluding the non-operating expense? Profit is EBIT from this point of view, from a marginal costing. 17 and non-operating expenses not to be subtracted. They're saying what is the amount of profit excluding the non-operating expense, without the non-operating expense. 17 plus another 2450, 4150. 17 plus another 2450. Ideally, our marginal costing ends this. We don't do anything beyond this. We don't do anything beyond this. Question wanted us to do something on interest and tax part. Any doubts on this? Any doubts on the question? Very well drafted question. Any doubts on this? Clear? Can we proceed? I'll move to next 39. Okay, before doing 39, I'll have to take you through a concept. Okay, concept 11, very simple concept. I think this is known to you. Cash break even point. Like we have break even point, there can be a cash break even point. Normally, break even point, fixed cost divided by contribution per unit or PV ratio. Cash break even point means cash fixed cost. You have to take cash fixed cost, which means you have to ignore depreciation. You have to ignore depreciation in the calculation. Normal break even point, depreciation will also come. Normal break even point, depreciation will also come. Clear? Any doubts on this? I'm not doing question around this. Indifference, I'll do it later. I want to discuss this. BP for multiple products. BP for multiple products. Now, break even point formula, a very important concept. I see 100% testing somewhere question around this. Break even point formula says fixed cost divided by PV ratio. or fixed cost divided by contribution per unit. Great, I gave the formula. Company said calculate break even point. I said I'm happy to calculate it. Then they're saying PV ratio of product A 20%, product B 30%, product C 40%, product D 50%. I say give me one PVR. He's saying no, no, no. We have four products. We have four products. I'll give you PVR of four products. So I got confused now because denominator, what do I use? One is 20, 30, 40 and 50. Then I said, okay, let me go through contribution per unit. I asked contribution per unit. Again, he gave me four answers: 10, 12, 15, 18, something like that. So we will get stuck in that scenario because we have multiple products. We have multiple products. So in that case, one, you can do units calculation or you can do value of sales calculation. Now, what is this units calculation, value of sales? Question will give a sales mix. Question will say CA inter and CA final is in the ratio of 3 is to 2. Is in the ratio of 3 is to 2. Now, this 3 is to 2 can be for number of students. Can be for number of students. That is, if we have 300 final students, we will have 200 inter students. Or it can be on the amount of fees collected. What is amount of fees collected? The fees for inter is different, the fees for final is different. So the mix can be for units, that is number of students, or the mix can be for value collected by us. If they give the sales mix for units, we follow contribution per set approach. What is that approach? I'll explain. We follow contribution per set approach. What is the approach? We'll discuss. And if they give sales mix for value, if they give for value, we follow composite PVR approach. We follow composite PVR approach. Now, what is this approach all about? Very simple approach. I have four products. You tell me sales mix is 1, 2, 3, 4. 1 is to 2 is to 3 is to 4. Okay. Contribution per unit is 10, 15, 5, 25. If you follow contribution per set approach, which is if they are given units, contribution per set approach means I don't sell ABCD individually. I sell a product name called ABCD. When you go to a shop, there are sometimes they'll give combo of products together. They'll jumble 2-3 products together and say that you can buy it as a basket of product. So for analysis purpose, we will assume that we do not have one product. We do not have four products. We have only one product. What is that product earning me? 1 into 10 plus 2 into 15 plus 3 into 5 plus 4 into 25. It is earning me a single profit figure. It is earning me a single contribution figure. 1 into 10 plus 2 into 15 plus 3 into 5 plus 4 into 25. I don't want the number. All put together, let's assume 200. Just assume 200. Once you get that number, I ask what is contribution. You don't tell 10, 15, 5, 25. You give me one answer. What is that answer? 200. What is that answer? 200. Clear? I'll repeat again. The concept says very simple. What does the concept say is we have four products. We have four products. Now, instead of selling them individually, I'm going to sell them together. I'm going to sell them together. I'm going to sell them together. That's our assumption. That's our assumption. And we calculate contribution per set. We calculate contribution per set. Why are we doing contribution per set? Because denominator cannot be 10, denominator cannot be 15, denominator cannot be 5, denominator cannot be 25. Give me single denominator. Give me single denominator. Is this only for break even point? No. This can be for margin of safety. This can be for break even point. This can be for sales to achieve desired profit. Anywhere in the denominator you are using PVR or CPU. Anywhere in the denominator we were using PVR or CPU. I'm first discussing about CPU. So any area, it can be break even point, it can be margin of safety, it can be sales to achieve desired profit. Later on you'll learn about shutdown point. Anywhere you want to use, you will use contribution per set approach. You will use contribution per set approach. In fact, this got tested in one of the budgetary control question, which I'll discuss later. Contribution per set approach. Let's see the contribution per set approach. I come back to the composite PVR. Let's look at this very simple example. A company sells two products J and K. Sales mix is 4 units of J. Very clear word. 4 units of J, 3 units of K. 4 units of J, 3 units of K. Contribution margin is 40 and 20. Contribution margin is 40 and 20. Fixed cost is 6,16,000. Compute break even point. Break even point is not difficult. The problem is 616. Denominator you have 40 as well as 20, which is where the confusion. Denominator we have 40 as well as 20. Clear? Able to understand this? Now, right, question 38. Question 38. Question 38. Let us assume, let us assume one set contains, one set contains, one set contains, the mix given is 4 is to 3. The mix given is 4 is to 3. One set contains 4 units of J and 3 units of K. 4 units of J and 3 units of K. Basically, I don't sell J separately, K separately. I sell a product named as JK. Product name is JK. Contribution per set equal to, contribution per set equal to 4 into 40, 3 into 20. 4 into 40, 3 into 20. Tell me the number. Live online guys, type it. 4 into 40, 3 into 20. 220. Clear? So now we do not have two contribution. We have only one contribution. BEP in set. BEP in set. Break even point in set equal to fixed cost by contribution per set. Fixed cost by contribution per set. BEP in set equal to fixed cost divided by contribution per set. Fixed cost divided by contribution per set. 6,16,000 divided by 220. 6,16,000 divided by 220. 9, right? 6 lakhs 220. You're getting something like this. 2,000. And that's what I remember. It was a proper number. 2,800 set. 2,800 set. Any doubts on 2,800 set? Okay. Now this 2,800 set will be broken down as J and K. But listen, it's not in the ratio. We said one set has 4J. So into 4 into 3. One set has 4J, 3K. One set has 4J and 3K. So into 4 into 3. If we had said one set contains 0.57 units, or we had done something else, then we would have distributed in the ratio of 4 is to 3. It's not distribution in the ratio of 4 is to 3. Very clear wording. We said what? One set has how many J? 4J, 3K. 4J, 3K. Next, number of units of J. Number of units of J. Break it into 2. Number of units of J are BEP of J. BEP of J 2,800 into 4. BEP of J 2,800 into 4. BEP of K 8,400 units. Clear? This approach is called contribution per set approach. Contribution per set approach. This will be useful if the analysis is done. If the analysis is done on units basis. If the analysis is done on units basis and the given sale mix is for units. The given sale mix is for units. Any doubts on this? Can you proceed? Clear? Now I'll quickly show another example. This is just an example, okay? 100 per unit, 80 per unit. The company made contribution of. Okay, this is okay. This is not needed. This is a May 25 RTP question. Okay. PR Limited sells two types of pens, ball pen and gel pen. Currently, the company is expecting 6,000 units of. Oh, internet is gone. Live online, guys. Sorry, video got stuck. I think in bit. Is it fine now? Is it fine now? Okay. So company is currently expecting to sell 6,000 units of ball pen, 3,600 units of gel pen. So ratio is 5 is to 3. Ratio is 5 is to 3. 6,000 is to 3,600. 6,000 is to 3,600. 5 is to 3. The ratio is 5 is to 3. This product is earning 60 rupees. This product is earning 40 rupees. 60 and 40. Contribution per set is 5 into 60. 5 into 60. 3 into 40. 5 into 60, 3 into 40. 5 into 60, 3 into 40. Contribution per set is 5 into 60, 3 into 40. Why 5 is to 3? Because units. Why contributions per set? Units. There is a value analysis which will happen in some time. So this number is how much? 420. 3 lakh 36 by 420 is how much? 800 batches. 800 into 5 is 4000. 800 into 3 is 2400. 800 batches into 5 into 3 into 5 into 3 into 5 into 3. Any doubts in this? This is called composite break even point, and then ball pen and gel pen break even point. Any doubts in this? Any doubts in this? Okay, I did all this. Okay, now suddenly you are saying no, no, this and all is wrong. The same mix, 1 is to 2 is to 3 is to 4, but this is value basis, not volume basis. This is a value basis mix. Value basis mix. Then I don't need this. I need PV ratio 40%, 60%, 75%, 25%. After that, we do composite. What is composite? Is average of the four. In contribution percent, we don't do average. We added the number. How will you do average? 40 into 1 by 10. 1 is to 2 is to 3 is to 4. 1 is to 2 is to 3 is to 4. 40 into 1 by 10 plus 60 into 2 by 10 plus 75 into 3 by 10 plus 25 into 4 by 10. You will get an answer. That is the average for all the four. Whatever final break even you get, you have to divide that in the ratio of 1 is to 2 is to 3 is to 4, because there we were getting the overall contribution. Here we are getting the average contribution. Here we are getting average PVR. Average PVR 40, 60, 75, 25. They have given 4 PVRs. They have given 4 PVRs. Our job is to get single PVR, which is not simple average, weighted average. What is weighted average? Into 1 by 10, into 2 by 10, into 3 by 10, into 4 by 10. 1 by 10, 2 by 10, 3 by 10, 4 by 10. Clear? Any doubts in this? 1 by 10, 2 by 10, 3 by 10 and 4 by 10. That's the number you're going to take. Any doubts in this? Any doubts in this part? Clear? Let me explain this here. Pro Shirts Limited, then we will do a question. You first be in listen mode, okay? Manufacture 3 types of shirts: standard, premium, and elite. The unit selling price, okay, this is also quantity, sorry, quantity wise. Quantity wise means contribution per set. Quantity wise they have given. Quantity wise you have to do contribution per set approach only. I cannot do this question. I will go to the question which I wanted to do then. Let's come to 39. Ignore part 1, okay? Ignore this question. I don't want to discuss part 1, okay? I just want to do part 2, okay? Let's start now. Illustration number 11. Page, so question 39. MK Limited manufactures and sells single product whose selling price is 40, variable cost is 16, 40 and 16. For the next year, ignore that in between item. It wants to add another product Y, whose selling price will be 50, variable cost will be 10. Total fixed cost is 666 600. Total fixed cost is 666 600. Sales mix for X and Y will be what? 7 is to 3. They only said sales mix. They have not mentioned whether it is units or value. They have not mentioned whether it is units or value. They have just said sales mix. In the printed material, I have taken it as units, I think. I'll do it as value and do the question now. In the class, I'll do it as value, but in the printed material, I think I've taken it as units. Anyway, let's not worry about that. Sales mix of X and Y would be 7 is to 3. Determine at what level of sales next year would break even. Give separately for both X and Y, rupee as well as quantity. Rupee as well as quantity. I'll read out again. MK Limited manufactures and sells single product X. Selling price is 40. Variable cost is 16. It's a very important area. Selling price is 40. Variable cost is 16 per unit. For the next year, I want to add another product. Which is 50 and 10 rupees. Total fixed cost. Sales mix is 7 is to 3. This 7 is to 3 you can take in 2 ways. One, you can take it for units, I think, which is what the printed material would have done, for quantity of units sold. So you can look at this answer later at home if you want, how you do for quantity of units sold. I am going to do it for value of sales. I'm going to do it for value of sales. Would the answer be different? Yes, both the answer will be different. Quantity is different, value is different. Working note 1. Computation of composite PVR. Computation of composite PVR. Particulars and two products. It can be 2, 3, 4, any number of products. Particulars and two products. Product X, product Y, X and Y. Selling price less variable cost, contribution per unit, PVR. My request, please have the question in front of you, else this chapter you may struggle little bit. Selling price less variable cost, contribution per unit, PVR. Please fill it. Selling price less variable cost, contribution per unit, PVR. Selling price is 40, new product is 50, variable cost is 20, 16, and the other product is 10, 24, 40, PVR 60% and 80%. Any doubts on this? Clear? Can you proceed? Any doubts in this? Any doubts in this part? Can we proceed? Clear? Okay. Now I have 60%, 80%, I have 24 and 40. I can do contribution per set approach also. I can do composite PVR approach also, depending on that sale mix 7:3, how we assume. All right, it is assumed. It is assumed sales mix of 7:3 is for value of sales. Is for value of sales. 7:3 is for value of sales. Value of sales. Composite PVR equal to composite PVR. Composite is combined PVR. Basically, I have to take average of 60 and 80, but it's not 70. Weighted average. You have to take weighted average. 7:3 average. 60 and 80. Composite PVR 60 into 7 by 10 and 80 into 3 by 10. 7 by 10 and 3 by 10. 7:3. 60 into 7 by 10. 80 into 3 by 10. Tell me the answer. Live online guys, type it. 60 into 7 by 10. 80 into 3 by 10. 60. 66%. Composite PVR is 66%. We have only one PVR. We do not have multiple PVR. Only one PVR, which is 66%. Single PVR 66%. Any doubts in this? Any doubts in this? Clear? Break-even point of company. BP of company equal to BP of company equal to BP of company equal to fixed cost divided by composite PVR. Fixed cost divided by composite PVR. 666 600 divided by 66%. Fixed cost by composite PVR. Guys, type it please. 10 lakh. This is the PVR of two products put together. PVR of two products put together is 10 lakh 10,000. PVR of two products put together is 10 lakh 10,000. Any doubts in this? Break it into two. X and Y, break it into 2. X 7 times, Y 3 times. 7 lakh 7,000, 3 lakh 3,000 rupees. 7 lakh 7,000 will not match the printed answer. 7 lakh 7,000 and 3 lakh 3,000. 7 lakh 7,000 and 3 lakh 3,000. Concept is composite PVR. When you do it for value, if you do it for units, can be done with units also, nothing wrong. You do it with units also, you will get the answer which is there in the printed material, 707 and 303, 707 and 303. In that, they are asking break even point in rupee. Also, they want quantity. Quantity means divide by the price, 40 rupees and 50 rupees. Divide by selling price. So divide by 40, divide by 50, you will get the number of units. Divide by 40 and divide by 50. 17,675 units. (6060 units). If you look at this ratio, it will not match 7:3. Units will not match 7:3. Value only will match 7:3. In the printed material, value will not match 7:3. Only units will match 7:3. The mix can be for units. The mix can be for value. The mix can be for units. The mix can be for value. That's your assumption. That's your assumption. Any doubts on this? Any doubts on this? Very simple. If you want to do it for units, do contribution per set approach. Do contribution per set approach. You want to do it for value, do composite PVR approach. Composite PVR approach. Let's quickly check the understanding. Please get me answer to this. This is contribution per set approach question. The below example. Below example, start doing it. This example I want you to do. Okay, could be. I have not done the calculation. Your contribution per unit is 200. The second product is 300. Third product is 600. Sales mix is 5, 3, 2. 50, 30, 20 can be called as 5, 3, 2. Contribution per set is 200 into 5,000, 300 into 3, 900, 600 into 2, 1200, all put together 3,100. All put together 3,100. So 60 lakh divided by 3,100 is the number of set. Multiply that with 10. 532. They have not individually asked. Multiply that with 10. 1935, whatever, 19354. Any doubts on this? There's some error here. Okay, in the solution I've taken it as 50, 30, 20. I was explaining it as 5:3:2. Anyway, you do it's okay. You can even take 50, 30, 20 or 5:3:2. Answer will match 19,354 units. Any doubts on this? Any doubts on this? Okay. Now I go to a little bit of a complex example. Question 23. Question 23. Again, it will all depend on how quickly you read the question and register things. A lengthier question. Question 23, Jan 25 RTP. I give you around 3-4 minutes. Please go through the question fully. 3-4 minutes. Go through question 23. Page. This is in page 337. Question 23. Go through this first, and then we'll discuss. Okay, I'm going to take you through the question. Para 1 no use, para 2 no use, para 3 no use. Okay, I hope you have read it. That is where my explanation is flowing. Okay, if you don't read it and then do it, I cannot help it. Para 1 I'm not reading, para 2 I'm not reading, para 3 I'm not reading. I get to know variable cost is 100, 80 and 40 for school bag, water bottle and geometry box. The articles are made using a single machine. Zero point 0.2 R is required for one school bag, 0.15 for your second, that is water bottle, and 0.10 for geometry box. And fixed overhead is 7 lakh 40. Machine can operate for 8,000. 7 lakh 40 divided by 8,000 is called overhead absorption rate per machine hour. 7 lakh 40 divided by 8,000 is OAR per machine hour. Overhead absorption rate per machine hour. 7 lakh 40,000 divided by 8,000. Company has decided to sell its 80% capacity in market. Rest is divided among the two undergoing social works equally. They are talking about two social works. Okay, maybe somewhere this will help you in some reading. There is one, they do some school bag, water bottle as a social responsibility, and second is they want to do it for charitable schools and government run school. So if I have 100% capacity, 80% outside sale, 10% for one social activity, 10% for another social activity, 10% and 10%. So out of the 8,000 hours, 6,400 will go for your one activity, which is your market sale. 800 hours and 800 hours is left over. 800 hours and 800 hours is left over. Company wants to price the articles to be offered to the school. Management has a few questions. Team has made rough calculation. What is the fixed cost per unit allocated fixed cost per unit of school bag, water bottles and geometry box? This is fairly simple. Okay, second part of the question is on composite break even point. Second part is on composite break even point, because some sale mix is given. Using that sales mix, you have to do contribution per set and then get the answer to the various product. Third is what number of units can be sold at the given prices. In question number 2, whatever answer you get, you bifurcate it into the three products: product A, product B, product C in some ratio. So these two are composite break even point. What will be the maximum units that can be supplied? I'll try to get to this. And what is the correct price as per management decision? Somewhere in the case study, management will say that they want to price it at cost. They want to price it at cost. So what is the cost of the product? We have to calculate and do the analysis. Let's start. Working note 1, fixed cost. Working note 1, computation of OAR. Computation of OAR. OAR, overhead absorption rate, is equal to fixed cost divided by machine hours. Fixed cost divided by machine hours. Fixed cost divided by machine hours. 7 lakh 40 by 8,000. 740 by 8,000. 92.5 per hour. 92.5 per hour. Clear? Now question says, can you please allocate this to the three products? Because that's the first one. Three product allocation is very simple. School bag into 0.2 hours. School bag is 0.2 hours per unit. Allocation is that only. Whether it is relevant, irrelevant is different story. School bags into 0.2. Then water bottle is 0.15. and geometry box is 0.1. Geometry box is 0.1. Uh, fixed cost of school bag 92.5 into point 0.2 into point 0.2. Again, very well drafted question, slightly lengthier. 18.5 per unit, sorry, 18.5 per unit. 92.5 into point 0.2 into point 0.2. Then fixed cost of second product, water bottle, water bottle into 0.15 into 0.15, 13.875 per unit. 13.875 per unit. Then fixed cost of third product, which is your geometry box, 92.5 into 0.1, 9.25 per unit. Any doubts on this? Any doubts on part 1 of the question? So my part 1 answer is, which of the answer matches? 18.5, then you had 13.875 and 9.25. Part 1 is done. Part 1 is done. Last part has said, what is the correct price for each item as per the management decision? As per the management decision. Okay, I was saying the initial paras were of no use, but I think it becomes critical. I want to offer them at cost. At cost means no profit, no loss. What is cost? Variable 100, 80, 40 plus fixed. Variable 100, 80 and 40 plus fixed. So my answer to this is also done. 100 plus 18.5 is 118.5. 100 plus 18.5 is 118.5. Then 80 plus 13.875 is 93.875. 93.875. And the third one is 40 plus 9.25, 49.25. 49.25. Any doubts on this? Any doubts till this? Clear? Can we proceed? They want to give it at cost. They want to give it at cost. Why cost and all? We are not getting into that analysis. I want to give it at without any profit margin. Now, they are saying what is the maximum, what if the price is 200, 160 and 100. Now we are deciding a price. What will be the break even point in relation to fixed cost allocated to these supply. See, overall fixed cost is 7 lakh 40. 80% of that is for market sales. 10% is for the two social works which we are talking about. In that, we are analyzing only the school related work. So fixed cost for our activities 10% of 7 lakh 40. Fixed cost for our activity. Our activities 7 lakh 40,000 into 10%. 7 lakh 40,000 into 10%. Our activity, the activity which we are analyzing, is 7 lakh 40 into 10%. We have to do contribution per set. What is contribution per set? Is product is in the ratio 2 is to 3 is to 5. Product is in the ratio of 2 is to 3 is to 5. This is not value of sales. This is quantity, because they are saying they want the items in the ratio of 2 is to 3 is to 5. That is, they want 2 school bag, 3 water bottles and 5 geometry box. 2 is to 3 is to 5. 2 is to 3 is to 5. Next, computation of break even point. Computation of break even point. Particulars in 3 products. Particulars in 3 products. Bag, bottles, box. It is again not new. I've already explained it, but it's a very lengthy question. That's why we are doing it. Selling price less variable cost contribution per unit. Selling price less variable cost contribution per unit. Selling price less variable cost contribution per unit. Selling price is given in part 2 of the question, 200, 160 and 100. They want the price to be 200, 160 and 100. They want the price to be 200, 160 and 100. If the prices were 200, 160 and 100, what is the overall break even point? What is the overall break even point? 200, 160, 100. Variable cost is 100, 80, 40. Variable cost is 100, 80, 40. 100, 80, 40. 100, 80, 60. 100, 80, 60. Any doubts on this? The question has given sales mix, which is 2 is to 3 is to 5. 2 is to 3 is to 5. Sales mix is equal to 2, 3, 5. Be very clear on this. This can get tested in exam because I have been seeing MCQs coming in RTP also. It came in your case scenario also. They have added a question. So this element can come composite PVR or contribution per set. 2 is to 3 is to 5. Contribution per set equal to 100 into 2, 80 into 3, 60 into 5. 100 into 2, 80 into 3, 60 into 5. What's the number? 740. BP in set equal to BP in set equal to BP in set equal to, listen, the fixed cost is 7 lakh 40,000, but in that, for the charitable purpose activity only 10% time. How 10%? They are saying 80% is for markets, rest is divided by two social work. What are the two social workers? One social work is supplying special quality bags to NGO. NGO at no price. We are not analyzing no price situation. We are not analyzing no price situation, which is a different analysis. And the second element is providing it to charitable school and government school at some price. So out of the 100% capacity, 80% is external sales, 10% is for NGO, 10% is for charitable school. So they are saying what is the break even point in units relation to fixed cost allocated to these supply. Fixed cost allocated to these supply. Fixed cost allocated to these supply. So 7 lakh 40 into 10%. Only 10% is allocated here. Divided by 740. 7 lakh 40 into 10% by 740. 100 set OR 1000 units. 2 is to 3 is to 5. 100 set are 1000 units. 100 set are 1000 units. Normally an area which students don't focus that much, composite PVR and contribution per set approach. 100 set are 1000 units. Any doubts on this? Any doubts on 1000? We are done. I think one requirement alone is pending. So this is 1000. If you break it, 200, 300, 500. Breakup is 200, 300 and 500. Breakup is 200, 300 and 500. Any doubts on this? Then they're saying how much is the maximum units I can supply to these or to the schools of each article. How much is the maximum number of units I can supply to the schools of each article. We have done the break even. Break even is fine. But now they are saying you have calculated break even, but tell me what maximum can I supply? What maximum can I supply? Very good question. Listen, I have 8,000 hours. I have 8,000 hours. In that, 800 hours is for charitable school. 800 hours is for charitable school. What we are going to do is we will take this 0.2 hours, 0.15 hours, 0.1 hour and calculate how much time is needed to manufacture one set. How much time is needed to manufacture one set? How much time is needed to manufacture one set? What does the set have? 2, 3, and 5. Set has 2, 3, and 5. I have 8,000 hours. In that 8,000 hours, 800 hours is for charitable school. 800 hours is for charitable school. One set, let's assume, takes 1 hour. If we do, we'll do the calculation, but one set has 1 hour. It means I can manufacture 800 set. I can manufacture 800 set. If I can manufacture 800 set, number of units is 800 into 2, 800 into 3, 800 into 5, 800 into 2, 800 into 3, 800 into 5, 800 into 2, 800 into 3, 800 into 5. So question has said, again I'm repeating, question says 0.2 hours of machine operation is required for manufacturing 1 unit of school bag. Then they are saying 0.15 for water bottle, zero point 0.1 for geometry box, 0.15 for water bottle, 0.1 for geometry box. The three they have given very clearly. Of the 8,000 hours, 6,400 external sale, not bother about it. 800 NGO free, not bother about it. 800 leftover hours. 800 leftover hours is for doing social work. Is for doing social work. Any doubts in this? Any doubts in this? Now, right. Time. Time taken for time taken for producing one set. Time taken for producing one set equal to time taken for producing one set equal to for producing one set equal to I'm going to produce 2 units, 3 units, 5 units, 2 units, 3 units, 5 units. The first product need zero point 0.2 hours, second product need 0.15 hours, third product need 0.1 hours. First product need 0.2, second product 0.15, third product zero point 0.1. First product 0.2, second is 0.15, third is 0.1. Now write 2 into 0.2, 2 into 0.2, 3 into, again a very well drafted question, 0.15, 5 into 0.1. All put together how many? Live online guys, type it. 1.35 hours. Clear? Next, number of set that can be manufactured. Set, number of set that can be manufactured. Number of set that can be manufactured. 800 hours. Why 800? Only 10% capacity. 800 hours divided by 1.35. Let it be in decimal. Let it be in decimal because I don't know what MCQ answer will match. 1.35. 592.59 set. 592.59 set. This into 2 into 3 into 5 is the maximum units. Into 2 into 3 into 5. Break even was 100 set, which is different analysis. This 592 set I have to do. 592 set I can do. Break even is happening at 100 set itself. Maximum I can do is 592.59 set. Maximum I can do is 592.59 set. 592.59 set. Any doubts on this? Any doubts on this? Below this? Below this, number of units of bag, 592.59 into 2 into 2, 1185 bag. The final answer may be slightly up and down, rounding of differences can be there, that's okay. Number of units of bottles into 3, 1778 bottles, and number of units of box into 5. Any doubts in this? Somewhere this will be there in the solution. This option will be there. Some up and down rounding of differences can be there. Contribution per set approach, and in case you want to calculate the maximum production hours needed per set, and we calculate how many sets we can manufacture. Any doubts on this? Clear? If I look at the answer, I have an option 1185. Okay, this should be the option 1185 1777. Okay, we got 1778, they're saying 1777, and we got 2963, they're saying 2962. 2962, somewhere I said closer to that you will have the answer there. So it is why I left it in decimal itself, and my final answer is 1185 1777 and 2962. Any doubts on this? Any doubts on the concept here? Can we proceed? I'll repeat again. The concept, net concept is this. You have two approaches. If BP for multiple products is there, sales mix is given for units, calculate contribution per set approach. What you do in contribution per set approach? In this case, we will assume one set contain the mix given in the question and accordingly compute contribution per set. For example, a company sells A, B, C in the ratio of 4 is to 3 is to 2. Contribution is 20, 15 and 10. One set contains 4, 3, and with this the question is over. That's all. Beyond this I was just wasting time. I can just read this and say yes, we have done contribution per set approach. And in case they give it for value, calculate composite PVR. What is composite PVR? Is individual PVRs into weighted average. Individual PVRs into the weighted average. Any doubts on this? Any doubts on this concept? Okay. Another variant is, like we have multiple products, we can have multiple manufacturing plants. Now what is this multiple manufacturing plants? There is a manufacturing plant of Maruti, there's a manufacturing plant of Hyundai. Fortunately, unfortunately, both want to merge together. Maruti and Hyundai both are planning to merge together. Maruti was operating at a PV ratio of 80%. Hyundai is operating at a PV ratio of 60%. When they merge together, the PVR will change. When they merge together, the PVR will change. So plant merger, two manufacturing plants will merge together, and operate as a single plant. The cost dynamics, PVR will change. If PVR changes, automatically VCR will change. Fixed cost will change. When I say fixed cost will change, you'll have to add the two fixed cost. Now, before merger, Maruti 80% capacity utilization, Hyundai 60% capacity utilization. Once merger happens, ideal situation, both will operate at same capacity utilization. One was operating at 80, another one was operating at 60 or 50, 40, different capacity utilization. What is capacity utilization? Of the overall capacity, what percentage is being utilized? First thing we do is prepare individual marginal costing income statement at 100% capacity utilization. If they are operating 40, 30, 20, doesn't matter. I want to do it at 100% capacity utilization. Add them together. Ignore the individual one. Whatever is the total value, answer everything with total value. What can you answer? Break even point, margin of safety, sales to achieve desired profit, or PV ratio, VC ratio. Anything they ask, please answer with the merge plan. What is the condition? You have to bring them to 100%. Can I bring them to any other percent? Yes, but both should be same percentage. That is why, to avoid headache, we bring them to 100%, because once you bring them to 100%, we are saying this is the full potential. In this full potential, company may operate at 20, 30, 40, 50, 60, but both will operate at same utilization. That's what concept says. Any doubts till this? Let's see an example. Plant A is operating at a capacity of 60%. Sales is 600 lakh. Has a PV ratio of 20%. Plant B is operating at a capacity of 80%. Has a PV ratio of 40%. What will be the combined PVR? particulars, we will do first plant. They have done 60, we'll add another column called 100. Plant B, they have given 80, we'll add another column called 100. Then add the 200%, add the 200% and then start answering. Assuming they are given fixed cost also. Then less fixed cost, profit you will do and add the two fixed cost, add the two fixed cost and then complete the marginal costing statement. After that, what the question can ask? Combined PVR, combined VCR, combined break even point, combined margin of safety, combined sales to achieve desired profit. Anything can be asked. Anything can be asked. It is like a normal problem. That is like a normal problem. Again, I'm repeating. First plant in this example is 60%. Second plant is at 80%. Convert both of them into 100. Convert both of them into 100. When it is to individual product, we don't do this 100% story and all. Individual product, whatever they have given, please write it. Some sales mix will be given, then do composite PVR story. Sales mix will be given. So here, if at all question very rarely says that the sales mix post merger will be plant A and plant B 2 is to 3, then it is like product A, product B. For us, we can do composite PVR. We can do composite PVR. But in this case, plant is going to merge together. Plant is going to merge together. Particulars and 5 columns. Particulars. This is page 119 example. 119 example. Particulars and 5 columns. Plant A 60 and 100%. Plant A 60%, 100%. 60%, 100%. Plant B 80%, 100%. Merged plant 100%. Merge plant 100%. Sales less variable cost contribution. Sales less variable cost contribution. Okay, whatever they have given is for 60%. At 60%, sales is 600 lakh, PVR is 20%. So 600 PVR 20%, 600 into 20%. Variable cost 480. 600, 480 and 120. 600, 480 and 120. 600, 480 and 120. Clear? Please convert this into 100%. 600 by 60%. So sales will become 1000. 600 by 60%. Contribution same 20%. Contribution remains same 20%. We have to convert them into 100% capacity utilization. We have to convert them into 100% capacity utilization. So in exam, if a question comes, convert them into common capacity utilization, which ideally is 100%. Common capacity utilization, which I feel ideal is 100. Ideal is 100. So this is 200, 800. 200 and 800. 600, 20% variable cost 480. 1000, 20% variable cost 800. Any doubts on this? Clear? Can we proceed? Plant B. Plant B given is 400. PV ratio is 40%. PV ratio is 40%. 40%. 400 160 and 240. This was for 80%. Let's convert into 100%. 400 by 80%. That's all. Now we can add the 200%. We should add the 200% capacity utilization and tell me now the PVR of the merge plant. 26.67%. PVR of the merge plant is 26.67%. PVR of the merge plant is 26.67%. You'll have to combine the two plants. You'll have to combine the two plants. My sincere request, somehow try to take one print of at least the concept book. This will be very, very useful because this is what is going to become very, very handy day before exam or even in your revision stage. Any doubts in this? 26.67%. Clear? Can we proceed? Done. Now, this is a question on plant merger. We are not going to do the full question and all. I just want to explain something. They've asked for break even point. What is the profit at 80% capacity utilization? How much should be the sales turnover if I want to earn a profit of 75 lakh and something around price increase? I don't want to do any of them. I just want you to prepare. Please look at the data. Prepare what we have done now. Particulars. First plant 90, 100. Second plant 60, 100. But till profit. You have to do it till profit. Please do that. Please do the statement alone. Please do the statement. Particulars. Company Taylor 90, 100. Company want 60, 100. Merge plant 100%. Merge plant 100%. Merge plant 100%. Once the merge plant is done, then you can then technically at home you can try other things. Break even point, fixed cost by PVR. 80% is the sales. So like we did 100, we have to do 80%. Sales to achieve desired profit. All that I don't want to discuss. Once you're done live online, guys, let me know if you're done. Please type it done so that I proceed ahead. I hope here it is done. Please type done so that we proceed ahead. I don't want you to solve anything else, just the statement to be done. Okay, I hear people are done. So originally 540, 396 and 80. 540 will become 600. 540 will become 600. 396 will become 440. Contribution 160. No change in fixed cost. 90% 80, 100% also 80. No change in fixed cost. So 540 will become 600. 396 will become 440, 160, 80 and 80. 300 will become 500, 225 will become 375, 125, 50, 75. Put together 155. Put together the combined statement. After this, you do anything you want to do. That's requirement you can see later at home if you want to do. Any doubts on this? Clear? Okay. I'm taking a break at this stage. My throat is not that great today. So we will take a break till 11:45 and then I resume. 15 minutes approx break. Okay. Let's proceed ahead now. So we are done with almost all the major concepts. I need to discuss two, three minor concepts, which we will do before today's. That is next 1.5 hours. We'll focus on that, and then after the break, two major concepts will be there. One is called limiting factor, and the other one is something called as absorption versus marginal. Let me quickly discuss balance areas. We have an area called indifference point. Let's first understand what is indifference point. Now, let's take an example that I am having an office, and in that office, I have around 100 employees who are there who regularly travel. When they travel, I can make them stay in hotel, or I can make them stay in a guest house of mine. If I make them stay in hotel, my cost is 3,000 per day. But if I make them stay in my own guest house, cost is 1,000 per day. But there is one problem. In hotel, I don't incur any fixed cost. In hotel, I don't incur any fixed cost. But in guest house, I have to incur a fixed cost of 15,000. This is the scenario. This is for a month. Okay, 3,000 per day, 1,000 per day. No fixed cost. There's a fixed cost of 15. Make it 16,000. There's a fixed cost of 16,000. This is the scenario we are in. We are going to incur 3,000, 1,000, and 16,000 is the fixed cost I'm going to incur. Assuming in a month, 5 days will be my employee stay. 5 days will be the employee stay. In that situation, here we will incur 15,000. Here we will incur 5,000 plus 16,000, 21,000 plus 16,000, 21,000. 5,000 plus 16,000, 21,000 will be incurred by us. In this side, we will incur only 15,000. This looks better. This looks better. Assuming it is 10 days. Assuming it is 10 days. 10 into 3,000 is 30,000. 10 into 3,000 is 30,000. Other side is 10 into 1,000. 10 into 1,000, which is 10,000 plus another 16,000. Another 16,000. This looks better. This looks better. So whenever we have an alternative in picture, at some places alternative 1 will be good. At some places alternative 2 will be good. But there will be a point at which both will have same cost. There will be a point at which both will have same cost, which is called indifference point. Point at which both will have same cost, that is called indifference point, which is change in fixed cost. Change in fixed cost. The formula is change in fixed cost divided by change in variable cost per day. Change in, there are other formula also. First, in this example, change in variable cost per day. Change in fixed cost divided by what? Change in variable cost per day, which in this case is 8 days. If you are going to travel for 8 days, if you're going to travel for 8 days, then both will give same cost. How is it same? 8 into 3,000, 24. 8 into 1,000, 8,000 plus another 16 plus another 16. This is the concept of indifference point. Whenever we have multiple alternatives in picture, level of production or sales at which two alternative will give same profit or cost. Same profit or cost. The formula is change in fixed cost. That is your numerator. Denominator can be change in variable cost per unit or change in contribution per unit. Both are same. If variable cost changes by 20 rupees, contribution will change by 20 rupees. Variable cost changes by 20 rupees, contribution will also change by 20 rupees. So change in variable cost per unit or change in contribution per unit. Same thing, you can also give us a ratio. Change in PVR, change in VCR, change in PVR, change in VCR. If you divide by PVR, you get the answer in rupees. If you divide by contribution per unit, you get the answer in units. You get the answer in units. This is what the concept is. Indifference point is going to measure change in fixed cost divided by change in VC per unit or contribution per unit or PV ratio or VC ratio or PV ratio or VC ratio. Clear? Any doubts on this? If my activity is going to be below indifference point, whenever my indifference point was 8, if my volumes are going to be lesser than 8, I want to cut down on fixed cost. When we have low volume, assuming I have only 2 students or 5 students in the class, I will want to have as low rent as possible. Rent I want to save on, because when volumes are less, printing cost is not my worry. 5 students into 1000 rupees, 2000 rupees is okay. I want to cut down on the fixed cost. When volumes are less, low fixed cost is better. When volume, assuming I'm going to travel only one day, even if the hotel is 10,000, go ahead with hotel. Go ahead with hotel, because cut down on fixed cost. Cut down on fixed cost. When volumes are less, cut down on fixed cost. When volumes are less, cut down on fixed cost. When volumes are high, if I have 100 students, I'm okay to pay on the rent, but I want to cut down on printing and other costs, because when volumes are high, variable cost will be very high. You cut down on the total variable cost. Total variable cost will be high. Cut down on the variable cost. When volumes are less, total variable cost is not that much, so focus is not that. Focus is only on fixed cost. So if your activity is below indifference point, lower fixed cost is better. Lower fixed cost is better. And if your activity is above indifference point, higher fixed cost I say, but it's not higher fixed cost, it's basically lower variable cost. It is basically lower variable cost. Focus is on lower variable cost. Clear? Any doubts on this? A company can produce product A either through method A or method B. Either through method A or method B. Method B has high variable cost per unit, low fixed cost. You cannot have a combination which says low fixed cost as well as low variable cost. Then go ahead and select that. There is no decision itself. Low fixed cost, low variable cost, nothing to think about itself. Method A has high VC per unit and low fixed cost. Method B has low VC per unit and high fixed cost. Which method will be preferred if there is a heavy demand? Means sales will go up significantly. Heavy demand means volumes are going to be very high. Heavy demand means volumes are going to be very high. If volumes are going to be very high, we will operate at activity above indifference point. We'll be operating at activity above indifference point. We're going to operate at activity above indifference point. When volumes are very high, my operation is going to be above indifference point. If you are going to be above indifference point, higher fixed cost, lower variable cost. Higher fixed cost, lower variable cost. Higher fixed cost, lower variable cost. Clear? Any doubts on this? So I will go with higher fixed cost, which is this one, and lower variable cost. Lower variable cost. Method B, higher fixed cost, lower variable cost. Focus is very simple. When volumes are less, fixed cost is going to be high. Save on that. When volumes are very high, I'm not focused on fixed cost. I'm focused on variable cost. I'm focused on variable cost. A company can manufacture the product either through machine A and machine B. Both can report sales of 50 lakh, profit of 20, 29, fixed cost of 2 lakh and 8 lakh. How much is the indifference point? Let's put an income statement. Open marginal costing income statement. Open marginal costing income statement. Particulars. This is page 117 example. Page 117 example. Then you'll understand the answer. Particulars and two methods. Particulars and two methods. Particulars, machine A, machine B. Machine A and machine B. Sales less variable cost, contribution less fixed cost, profit. Sales less variable cost, contribution less fixed cost, and profit. I'll put the data given in the question in the format. Automatically, you'll get indifference point. Questioner said sales will be 50 lakh, profit is 2029, fixed is 2 and 8. Other things will be balancing figure. Sales is 50 lakh, 50 lakh, profit is 20 and 29. Profit is 20 and 29, fixed cost is 2 lakh and 8 lakh. Write this. Sales 50 lakh, 50 lakh. Profit is 20 lakh, 29 lakh, 20 lakh and 29 lakh. Fixed cost is 2 lakh, 8 lakh. 2 lakhs and 8 lakhs. Reverse calculation. Contribution 22, 37, 22, 37, 28, 13. Any doubts on this? Okay. How will I calculate indifference pointers? Units data, if there, you can calculate contribution per unit. I don't see units data here. So change in fixed cost divided by change in PVR. Change in fixed cost divided by change in PVR. Change in fixed cost divided by change in PVR or VCR. Both are same. Next line PVR. Contribution by sales. Tell me for both the machine. Contribution by sales. PVR. Contribution by sales. 44 and 74. 44 and 74. 44% and you can do VCR also. What is VCR? Variable cost by sales. Variable cost by sales. Both will give same answer only. Below this, indifference point equal to change in fixed cost, change in fixed cost divided by change in PVR. Change in fixed cost divided by change in PVR. Change in fixed cost divided by change in PVR. 6 lakh divided by 30%. 6 lakh divided by 30%. How much? 20 lakh. If you do a statement, I'm not doing a statement, but if I do a statement for 20 lakh, both will give same profit. Both will give same profit, or it can be same loss also, whatever it is. But 20 lakh, both will give same number. 20 lakh, both will give same number. Any doubts in this? Any doubts in this? Change in fixed cost by change in PVR. You can do change in VCR, change in VC per unit, change in contribution per unit. All are same. All are same. Any doubts on this? Any doubts on the concept here? We'll do question 47. Sorry, not 47, just give me 44. 44. Let's come to 44. This came in January 2025 exam. XYZ company has an option to buy any of the two machine N or M to manufacture its unique industrial component P. Each of the machine have the capacity to produce same quality of component P and are almost identical, except that they are being manufactured by different manufacturers. Two different people are manufacturing it. Both are identical product. They are identical product. Machines are different. Machine M can produce 50,000, fixed cost 1 lakh 50, profit 225. Fixed cost 1 lakh 50, profit 225, 50,000 units. Machine N, it also has an equal capacity to produce same number of component as that of machine M. All the components can be produced and sold. Fixed cost is 60,000 less and profit is 1 lakh 60. Profit is 1 lakh 60. Selling price is 100. Selling price is 100. Now units data is there. We are going to do particulars. First machine per unit total. Second machine per unit total. Wait. Calculate break even sales in value. break even sales in value, fixed cost by PVR, break even sales in value, fixed cost divided by PVR, sales level in units, sales level in units where both machines are equally profitable. Equal profit means indifference point, where both machines are equally profitable. Equal profit means indifference point. Equal profit means indifference point. They've asked it in units. They can ask in units, they can ask in value. Value means divide by PVR difference, units means divide by contribution per unit or variable cost per unit. Both are technically same. Particulars to machine with two subcolumn. Particulars to machine with two subcolumn. Question number 44. Particulars two machines with two subcolumns, machine M and machine N, per unit, total, per unit and total. Will copy whatever data. It's same as that MCQ only, nothing beyond that MCQ. It is same as that MCQ, right? Sales less variable cost, contribution less fixed cost, profit. Sales less variable cost, contribution less fixed cost and profit. Question has said selling price is 100, 50,000 components of P per annum, machine M, same capacity for machine N. 50,000 components, selling price is 100, selling price is 100. So 100 into 50,000, 100 into 50,000, 50 lakh, 100 into 50,000, 50 lakh, 100 into 50,000. Capacity to sell 50,000 units, 100 per unit is the selling price. 100 per unit is the selling price and capacity to sell 50 lakh. 50 lakh. Any doubts on this? Then the next point is profit is 225, fixed cost is 150. Let's write whatever they have given. Fixed cost 150, profit 225. Fixed cost 150, profit 225, reverse work and complete machine M fully. You will get contribution, contribution per unit, variable cost and complete it fully. Machine M completed fully. After you're done, you can refer the screen. Machine M, let's complete it fully. Any doubts on this? Clear? Can we proceed? Any doubts on this? 7.5, 7.5, 92.5, 46.25 is the variable cost. Any doubts in this? Clear? Can we proceed? Coming to the machine N, they are saying fixed cost of machine N is 60,000 less than that of machine M and profit is 1 lakh 60. Profit is 1 lakh 60 but fixed cost is 60,000 less. Fixed cost is 60,000 less. So profit 1 lakh 60, fixed cost 90,000. Fixed cost 90,000, 60,000 less. Complete the table. Any doubts on this? Clear? Done? Question has asked for break even sales in value. Value means fixed cost by PV ratio. Fixed cost by PV ratio. Once that is done, sales level in units. Units means change in fixed cost divided by change in contribution per unit or variable cost per unit. Both are same. Change in contribution per unit, change in variable cost per unit. Change in contribution per unit, change in variable cost per unit. Let's do this. Break even point of M. Break even point of machine M. Break even point of M in rupees value they've asked. Fixed cost by PVR. PVR is easy to calculate. Fixed cost by PVR. Fixed cost divided by PVR. You do it and then refer the screen, okay? Fixed cost by PVR. Fixed cost by PVR. Do it and then refer the screen. This part I don't want to spend time. Any doubts in this? Clear? They've asked sales level in units where both machines are equally profitable. This came, I think, 5 mark in exam. Very simple. Jan 25, they asked it. Indifference point concept. Unless you're aware of the concept, you will struggle it. Indifference point concept was tested in this. Sales level where both machines are equally profitable. Equal profit means indifference point. Equal profit means indifference point. Next, indifference point in units. Or let's write whatever name they've said. Sales level. Sales in units. Sales in units where both are equally profitable is equal to change in fixed cost divided by change in contribution per unit. You can even do change in variable cost per unit also, same answer only. Change in contribution per unit. Change in contribution per unit. I can also do change in VC per unit also. Both are same. Change in contribution per unit. Fixed cost difference is 60,000 and contribution per unit is different is 2 rupees 50 paise. 60,000 by 2 rupees 50 paise. How much? 20. So if you do statement for 24,000 units, both model will give same profit. 24,000 units, both models will give, both machines will give same profit. 24,000, both machines will give same profit. Any doubts in this? Clear? Done. My discussion on indifference point is over. Only point you have to be aware is above indifference point, one plan is better or one machine is better. Below indifference point, the other machine is better. Above indifference point, low variable cost, high fixed cost. Below indifference point, that is below 24,000, high fixed cost, sorry, a low fixed cost and high variable cost. Low fixed cost and high variable cost. One more point which you tried this at home. Indifference point can only be between two alternative. So if you give me three alternative, then I have to find an indifference point between A, option 1 and option 2, option 1 and option 3, option 2 and option 3. If you give me four option, option 1 and option 2, option 1 and option 3, option 1 and option 4, option 2 and option 3, option 2 and option 4, option 3. So you'll have to do multiple times. You'll have to do multiple times. So if the question gives you like this, manual, semi-automatic and fully automatic, one answer between manual and semi-automatic. What is the formula? Change in fixed cost divided by change in variable cost. Here variable cost is given. Change in, then manual and fully automatic, then semi-automatic and fully automatic, semi-automatic and fully automatic. You will have to find multiple indifference point. Below indifference point, one plan is better. Above indifference point, the other plan is better. Clear? Any doubts on this? Any doubts on this concept? So we are done concept 12, 13 is done, 14 is done, I think. Last concept before the in the other two major areas, which is time consuming one, is called shutdown point. Now let's understand what is shutdown point. Shutdown point is basically minimum level of sales for me to continue operating the factory. For me to continue operating the factory. Now, what is continue operating the factory? There are situations. There are situations where I may have to stop manufacturing. There are situations where I may have to stop manufacturing. What is the stop manufacturing? Example, COVID came in. In the COVID times, break even is not happening. Break even is not happening. So we did break even point. My auditor said, let's close the operation for some time. But break even may not happen, but still I need to check whether shutdown point is happening or not. What is shutdown point happening or not? When you continue operating, you incur fixed cost of 20 lakh rupees. Break even is not happening. If you shut it down, fixed cost still may be there. Some fixed cost still will be there. So in operation, my loss is 20 lakh or 18 lakh. When I'm operating, my loss is 18 lakh. When I shut it down, my loss will not be zero. My loss will still be 4 lakh, 5 lakh, 10 lakh, 15 lakh, 20 lakh, 25 lakh, depending on something called as fixed cost which we will incur, depending on something called as fixed cost which we will incur even if operations are temporary closure. This shutdown point is temporary closure. Permanent closure I'm not analyzing. I'm analyzing only a temporary closure. So minimum level of sales needed to continue operating the factory. What is the formula? Fixed cost during operation. Fixed cost during operation. Normal, see, break even point is fixed cost by contribution per unit or PV ratio. What is shutdown point is fixed cost during operation. When I operate, my fixed cost is 20 lakh. From this, subtract two more fixed cost. What is the subtract? Fixed cost during shutdown. In the 20 lakh, even if you shut it down, you will incur 5 lakh. The gap is called avoidable fixed cost. The gap is called avoidable fixed cost. In the 20 lakh, even if I shut it down, I may have to pay 20% rent. I may have to pay some security expenses. So fixed cost during operation minus fixed cost during shutdown minus additional fixed cost to resume operation. Because whenever you shut it down, if you restart, you may incur some expenses. So fixed cost during operation minus fixed cost during shutdown minus additional fixed cost to resume operation, whole divided by contribution per unit or PVR. If you divide by contribution per unit, answer is in units. PVR answer. Why is this concept coming? You'll understand as we proceed. If your calculation says and your activity is going to be below shutdown point, your shutdown point is 20,000 units, and I get to know that I can sell only 5,000 units. My shutdown point is 20,000 and my activity will be 5,000. Do a temporary closure. Why are we doing temporary closure? COVID time, in maybe in 6 months time normalcy will come, or 12 months time normalcy will come. So for a temporary period I want to close. Some recession has happened. If it's you are never going to achieve the sales, permanent closure. Never going to achieve the sales, it is a permanent closure. Activity above shutdown point, continue operation, but you will be reporting loss only. You will be reporting loss, but continue operating. You're going to report losses only. But continue operating. In case things are never going to change, then break even point is the analysis. Things never going to change. Below break even point, permanent closure. Above break even point, continue operating. But temporary impact is the shutdown analysis. Let's take an example. I have a normal fixed cost of 8 lakh. I am thinking of temporarily shutting down operation. Why temporary shutdown? We don't know, but temporary shutdown I'm thinking of. The company will incur fixed cost of 2 lakh during shutdown, and additional fixed cost to resume operation is 1 lakh. So my fixed cost if I operate is 8 lakh, and if I shut it down is 2 plus 1. If I shut it down is 2 plus 2 for incurring when you are shutting it down, and 1 to restart the activity, 1 to restart the activity. So 8 minus 3 is called avoidable fixed cost. 8 minus 3 is called avoidable fixed cost. That is, your fixed cost can be avoided to the extent of 5 lakh. Fixed cost can be avoided to the extent of 5 lakh. 8 minus 2 minus 1 divided by PVR, divided by PVR. 5 lakh by 40% will be 12 lakh 50,000. 5 lakh 40%, 12 lakh 50,000. I'll again show an example in some time, but concept is very simple. If you are running your operation, fixed cost is there. If you shut it down also, fixed cost is there. Break even says all fixed cost. Shutdown point says no, no, don't consider all fixed cost. From your all fixed cost, remove fixed cost which you anyway will incur, whether operations are closed or continued, which is called fixed cost during shutdown. Fixed cost during shutdown. Please eliminate that and then calculate shutdown point. Then calculate shutdown point. Any doubts on the concept here? Any doubts on the concept? Question 47. Just give me a minute. Let's do 48. Let's do 48. I can do 47 also, but let's do 48. T Limited produces and sells 95,000 of X in a year at 80% production capacity. 95,000 at 80% capacity. Selling price is 8. Variable cost is 75%. Fixed cost is 350. Company is continuously incurring losses. Company is continuously incurring losses and management plans to shut down the plant. Shutdown analysis only is temporary analysis. Permanent analysis, then break even. Permanent is break even. The fixed cost is expected to be reduced to 1 lakh 30. Additional cost of shutdown is 15,000. Should the plant be shut down? Should the plant be shut down? For answering this, we'll calculate shutdown point. If the shutdown point is more than 95,000, less than 95, 95 is the operation we are going to do. Let's first calculate shutdown point and then we will answer whether the shutdown is to be done or not, which is what the next requirement. Find the shutdown point in units and also in percentage of capacity, and using this we have to answer whether the plant is to be shut down or not. Whether the plant is to be shut down or not, we are going to answer using this. Clear? Any doubts first on the question? Any doubts on the question? Clear? So I'm going to first answer shutdown point. What is shutdown point? Is fixed cost during operation minus fixed cost during shutdown minus any additional fixed cost to resume operation divided by contribution per unit or PV ratio. If you divide by contribution per unit, you get the answer in units. If you divide by PVR, you get the answer in rupees. You get the answer in rupees. Any doubts on this? Let's write shutdown point equal to shutdown point equal to fixed cost during operation minus fixed cost during shutdown minus additional fixed cost to resume operation, whole divided by contribution per unit, whole divided by contribution per unit, whole divided by contribution per unit. Now question says the fixed cost is 3 lakh 50, which is during operation. If you shut it down, fixed cost will reduce to, some question will say reduce to 1 lakh 30, and also there is some additional cost of shutdown. Additional cost of shutdown. It will reduce to 1 lakh 30, not by reduce to 1 lakh 30, and there's an additional cost of plant shutdown. So fixed cost during operation 350, 350. Fixed cost during shutdown is 1 lakh 30, 1 lakh 30. Some extra cost is also there, 15,000. Tell me how much is the contribution per unit? Contribution per unit. 8 rupees into 25%. 8 rupees into 25%. Variable cost is 75%. Divided by 2. Get the shutdown point. I've got the answer in live online. 102 500 units. 102 500 units. Any doubts on this? Let's understand the requirements. First is shutdown point in units. Percentage of capacity level. Shutdown point in units is done, but also in percentage. 95,000 equal to 80%, 102 500 equal to question mark. 95,000 units is equal to 80%, 102 500 could be 85, 86, 87. We'll have to do the calculation. 95,000 equal to 80%. First line, 95,000 equal to 80%, 102 500 equal to question mark. 102 500 equal to question mark. Next, 95,000 equal to 80% capacity. 102 500 equal to question mark. Tell me the capacity percent. 80 point 95,000 equal to 80%. 102 500 is equal to 86.32%. 86.32%. Any doubts on this? Any doubts on this number? Clear? Can we proceed? Any doubts on the number? Now, what this means is, should the plant be shut down? Answer is yes. Reason is, I want minimum 102 500. We are going to do only 95,000. I want minimum 102 500, and we are going to do only 95,000. Any activity below 102 500 is a temporary closure of plant. Is a temporary closure of plant. Any activity below 102 500, below 102 500 is temporary closure of plant. So should the plant be shut down? Answer is yes. We have to shut it down. We have to shut it down because our activity is going to be 95,000. Minimum I want is 102 500. Minimum I want is 102 500. Any doubts on this? Any doubts on this part? Clear? Okay. With this, my concepts are done. Questions are also done. There is an area called decision making. I have another 1 hour before we take break, so I'm going to randomly take some questions and do more practice. After the break, we are going to go to the two areas, and once those two areas are done, if still we have time, we may do some other question from marginal costing. But main concepts are done. Totally 15 concepts I wanted to do before I do some question, and then three concepts are pending: absorption versus marginal, which is little time consuming area. I'll be discussing them after our lunch break. So now I will go back and see if I want to do some MCQs and some questions. So these examples are discussed. Give me answer to this. Cash break even point. Do in your notebook. Cash break even point. Cash break even point. It's a fairly simple one. Live online, guys, type it. Cash cash break even point is 10,000. Cash break even point is 10,000. Can you please calculate normal break even point? Normal break even point. Normal break even point. 15. Cash break even point is 30,000 by 3. Normal break even point is 45,000 by 3. Normal break even point is 45,000 by 3. Any doubts on this? Okay. Fixed cost 2,40,000. The example will be in the last. Okay. Don't see the above ones. Okay. Fixed cost is 2,40,000. MOS is 60%. MOS is 60%. PVR is 40%. How much is the rate of return on sales? Rate of return on sales is nothing but net profit ratio. Net profit ratio. Net profit by sales or PBT by sales. PBT in marginal costing, we don't bring tax angle mostly. So what is rate of return on sales is PBT by sales. We are going to do it together. I have fixed cost 2,40,000. MOS is 16%, PVR is 40%. With fixed cost and PVR, what can you calculate? With BEP. If you know BEP, MOS 60, BEP 40. MOS is 60, BEP is 40. I'll get the total sales, then I'll get the profit, and then I'll do rate of return on sales. Clear? Any doubts on this? Let's write point number one. Break even point equal to fixed cost divided by PVR. 2,40,000 divided by 40%. Fixed cost by PVR. 2,40,000 by 40%. Break even is 6 lakh. Question has said MOS 60%, which means break even is 40%. So point number B, MOS 60% of sales, MOS 60% of sales, break even 40% of sales. Break even is 40% of sales. Clear? Any doubts on this? Break even 40% of sales. Say 6 lakh equal to 40% of sales. 6 lakh equal to 40% of sales. We'll get the sales number. 6 lakh divided by 40%. 15 lakh. Any doubts on this? Any doubts on this? Now I have to do a marginal costing statement for 15 lakh, which I'm not doing as a statement. Profit equal to contribution minus fixed cost. Profit equal to contribution minus fixed cost. And contribution is sales into PVR. Everything in from equation. I will not keep going back to equation. Contribution is nothing but sales into PVR. Sales into PVR. 15 lakh into 40% minus fixed cost is 2 lakh 40. 15 lakh into 40% minus 2 lakh 40. I've got the answer in live online. 3 lakh. And rate of return on sales is net profit margin. Rate of return on sales, technically PBT by sales here. It can be PAT also. PBT by sales into 100. PBT by sales into 100. Tell me the percentage. 24%. 24%. Any doubts on this? Clear? Can we proceed? Any doubts on this? Contribution per unit is 2. Contribution, if needed, we will solve it. Otherwise, we'll discuss. Contribution per unit is 2. Fixed cost is 20,000. How many units are to be sold to earn? How many units are to be sold to earn profit after tax 40%? Profit after tax of rupees 60,000. Profit after tax of rupees 60,000. It says contribution per unit is 2. Fixed cost is 20,000. They want PAT. I don't like PAT. I need PBT. I don't like PAT. I need PBT. I need PBT for calculation. We will take PBT and then do the calculation. It is basically sales to achieve desired profit. Sales to achieve desired profit. Formula is desired profit plus fixed cost by contribution per unit. Where is the formula coming from? From the equation. Desired profit plus fixed cost by contribution per unit. Now write PBT equal to PBT equal to PBT equal to PAT divided by 1 minus tax rate. PAT divided by 1 minus tax rate. Divided by 1 minus tax rate. 60,000 is the PAT divided by 1 minus 0.4. Divided by 1 minus 0.4. That's all. Question is over. Profit 1 lakh plus fixed cost 20,000 divided by 2. Answer is 60,000 units. Answer is 60,000 units. Any doubts on this? Any doubts on this? Clear? Okay, let's see this. ABC Limited has current PBIT. Current PBIT. This is, I think, an ICI question only. Current PBIT of 21.6 lakh on total asset of 120 lakh. 21.6 lakh on total. PBIT is for marginal costing. That's the profit. For marginal costing, that is the profit on total asset of how much? 120 lakh. Company has decided to increase assets by 30 lakh. Assets by 30 lakh, which is expected to increase the operating profit before depreciation. Operating profit before depreciation by 8.6 lakh. Operating profit before depreciation means depreciation change we have not given effect. Operating profit means EBIT. EBIT will increase by how much? 8.6 lakh. There will be a net increase in depreciation by 1.7 lakh. What is the result in ROI? For this, you have to remember your FM formula. ROI is EBIT divided by capital employed, which is in this case is total asset. ROI is EBIT by capital employed. Capital employed. What is capital employed? Is total assets here. Total asset. In FM, you will learn capital employed can be fixed assets plus current asset minus current liability. All that is there. I'm not getting into the FM part explanation as of now. ROI is equal to EBIT by total asset. EBIT by total asset. EBIT by total asset. That's the formula we are going to use. In this question, they have said currently it is 21.6 by 120. 21.6 will change. 120 will also change. New ROI will come. Old ROI, new ROI can be an increase, can be a decrease. Clear? Any doubts on this? Let's write ROI is equal to EBIT by total assets. Ideally, it is not total asset, it should be capital employed. But here, that's the formula. EBIT by total asset. Existing ROI. Existing ROI 21.6 on 120 into 100 to express in percentage. This can even become an FM question. Okay, in FM also they can ask this question by 120. 18%. Next, new ROI. New ROI. New ROI 21.6 will go up by 8.6. It says increase by 8.6 and depreciation is also increasing, which will pull down the ROI, which will pull down the EBIT. Depreciation, though it's a non-cash expense, but it is considered in calculation. It says operating profit before depreciation will increase by 8.6 and depreciation will increase by 1.7. Depreciation will increase by 1.7. So plus 8.6 minus 1.7 and denominator will go up by 30 lakh. Asset is increasing by 30 lakh. Asset is increasing by 30 lakh in the question. 19, net increase of 1%. Net increase of 1%. Clear? Any doubts on this? Can you proceed? Variable cost per unit 350, fixed cost 10 lakh. Variable cost per unit 350, fixed cost 10 lakh, total cost 80 lakh, selling price 550. How many units are to be sold to earn a profit of 100 per unit? Normally profit they will not give per unit, they'll give total profit. So what we are going to do, we are going to do a marginal, there is a formula but I don't want to get into formula. I'll do a marginal costing income statement where selling price 550, number of units is X, number of units is X, 550 X, variable cost X, contribution X, less fixed cost, you'll get profit that should be equal to 100X, that should be equal to 100X, that should be equal to 100X. Clear? Any doubts on this? This can come as a proper descriptive question itself. 100 per unit, they've asked for 100 per unit. Can we start? Now, right, let us assume number of units to be X. Let us assume number of units to be X. Particulars per unit and total. Particulars per unit and total. Sales less variable cost, contribution less fixed cost, profit. Sales less variable cost, contribution less fixed cost, and profit. 550, 550x. 550 and 550x. Variable cost 350 and 350x. 200, 200x. Fixed cost is 10 lakh. Profit is 200x minus 10 lakh should be equal to 100x. 100 per unit should be equal to 100x. Profit has to be equal to 100 per unit. Everything is only MCQ based. Clarity on concept should be there. Lengthy questions are there. For that is why I did some practice today. In the beginning we did practice. Yesterday also we did practice. Answer is clear. Any doubts on this? I have done it as a formula, but preferable the way I did now. Okay. PVR 25%. Fixed cost 25,000. How much is the sales needed to earn a profit of 20% on sales? I don't know the per unit number. I don't know the selling price. So we will assume overall sales is X. Overall sales is X. Variable cost will be 0.75x. Overall variable cost, because PVR is 25%. Overall sales is, so you need not do it. Listen only. I am doing this calculation again. Sales is X. Sales is X. Overall sales, no per unit here. Okay. Variable cost is 0.75x. Contribution is 0.25x. Contribution is 0.25x. Fixed cost is 25,000. 0.25x minus 25,000 is equal to 20% of sale. Is equal to 20% of sale, which is 0.2x. 20% of sale is, so formula and all is there. I prefer statement. Wherever you get stuck, statement is preferred. Can you give me the answer to X? X is the value of sales. X is the value of sales. Any doubts on this? Always prefer to do statement. Always prefer to do statement. Any doubts on this? Any doubts on this? Variable cost per unit excluding commission 10. This is nothing but that one bottle example I had done. The same question only. Variable cost per unit excluding commission is 10. Commission is 10% of the selling price. Commission is 10% of the selling price. Fixed cost is 25,000. What should be the selling price to earn a profit of 10% on sales? To earn a profit of 10% on sales if the company sells 5,000 units. If the company sells 5,000 units, what we will do? Selling price is X. So I'm doing it. I don't want you to do. Selling price is X. Sales is 5,000 X. Sales is 5,000 X. Variable cost they've said is 10 rupees excluding commission. 10 rupees excluding commission. So 10 commission is 0.1x. Commission is 0.1x. This is 50,000 500x. 50,000 and 500x. When I deduct it, I'll get 0.9x minus 10. 4,500x minus 50,000. 4,500x minus 50,000. Fixed cost is 25,000. When you subtract, what will you get? When you subtract, what will you get? 4,500x minus what? 75,000. In class when we were doing, you did a mistake of adding that 25,000. You did a mistake of adding that 25,000 minus 75,000. That problem itself I need not have done. I just wanted the point is you do all these properly with good attention. You will be that question took me a lot of time to do. That is why you have to do descriptive. But now once the descriptive I've done discussed in the class, no need to repeat it. Just do the MCQ properly. You will get clarity. Is this has to be equal to 10% of sales, which is 500x. I'll get selling price, which is 18.75. Any doubts on this? Clear? A student has asked me to do an MCQ of page 114, question 1. I'll do that MCQ, whatever they have asked for. Page 114. Okay, I think this is the MCQ a student has asked me to do. I'll discuss this MCQ. Following is the overhead cost of the company. Overhead 1 per unit and overhead 2 per unit. 5,000, 10,000, 5,000 and 10,000. How much is the BEP if the selling price is 25? Other variable cost is 5 per unit. This is a very simple one, but concept clarity has to be there. If per unit is same, if per unit is same, it is what type of cost? If the variable, if it is a variable cost, it is a variable cost. So this 10 rupees is a variable cost. This 10 rupees is a variable cost. This is not same. I'll do the multiplication. 5,000 into 10 is, sorry, I have to see here. Sorry, this way. At 5,000, 5,000. Sorry, I saw wrong way. Sorry. This is the number. 5,000, 10,000. Same at per unit level. It is variable. Same at per unit level. It is variable. And 5,000 into 20 is 1 lakh. 10,000 into 10 is also 1 lakh. Overall same, it is fixed cost. Overall same, it is fixed cost. Overall same, it is fixed cost. So fixed cost is 1 lakh. Selling price 25 minus 5 minus 10. What is 10? 10 is a variable cost. If any cost is same at a per unit level, if any cost is same at a per unit level, it is a variable cost. If any cost is same at a per unit level, it is a variable cost. It is a variable cost. If overall cost is same, it is fixed. Neither of them is same. I can add one more cost, 8 and 6. Neither of them same. Get total cost, change in cost by change in units, get the variable component, get the fixed component, and then apply the formula. Any doubts in this? Any doubts in this question? Clear? Can we proceed? I think if any specific MCQ you struggled, then let me know. If at all that you have tried home and any MCQ you have struggled, let me know. Else I go to descriptive question. Any specific MCQ, if at all you have tried, anybody in live online, any specific MCQ you want me to discuss are here. I'll do it. Else we'll go with some descriptive question. Maybe 2-3 question we'll do and then take a break. Any specific questions? Okay, I've not received any name. I will do question 49. Let's come to 49. Go through 49. Go through 49. September 24 exam. It's a good question. Simple one. Okay, I have a production capacity of 80,000 units. Presently, I'm selling 60,000 units. Material cost 6 rupees, labor cost 4 rupees, variable overhead 2 rupees. Total fixed cost is 3 lakh per annum. Present selling price is 20. I have received an offer from a Japanese client to supply how many units? I'm very happy with this 20,000 units. Reason is I have capacity 80,000, 60,000, 80,000 and 60,000. When you have any spare capacity, no extra fixed cost is analyzed for that, because fixed cost you don't incur. In this class, if I add extra 10 students, space is there. I don't incur any extra rent. Only challenge is if I need more students and space is not there, then I have to tell an existing customer no and take a new customer. Here I have spare capacity. 20,000 units at a 14 per unit with the shipping cost of 8,000, with the shipping cost of 8,000. On the basis of changes in profit, advise to the company whether the offer should be accepted or not. Let's evaluate this export order. They are saying, should I accept this export order or not? 20,000 units at a price of 14 rupees, has some shipping cost and other things they have talked about. Working note 1, evaluation of export order. Evaluation of export order. Export order. Particulars calculation amount. Sales. Well drafted question again and very simple calculation. Sales 20,000 units at 14. 20,000 units at 14. 2 lakh 80. Less variable manufacturing cost. 6 rupees material. 4 rupees labor. 2 rupees variable overhead. 6 plus 4 plus 2. 6 plus 4 plus 2. Overall 12 rupees is the cost. Overall 12 rupees is the cost. 20,000 into 12. 20,000 into 12. Less fixed cost 0. Irrelevant. Fixed cost is not separately incurred for this order. If I add another 10 students in this batch, I'm not going to incur extra rent cost. So whatever is incurred is incurred. I'm not going to incur extra. But there's one extra cost we have to incur, which is shipping cost. Additional shipping cost. This could be fixed in nature, variable in nature, I don't know, but additional shipping cost is incurred. Less shipping cost 8,000. Profit slash loss of export order. Let me know the amount. 32,000. Clear? 32,000. Any doubts in this? Clear? So I will accept the order. I will accept the order because I'm making a profit of 32,000. Will your advice be different if the customer is local one? Now this is more of a concept of marketing and economics. What is this concept is? I have taken 10 students in this batch. Fees for them is 5,000 rupees. If I take a similar student at 2,000, if I take a similar student at 2,000, these 5,000 paid students will start arguing, saying that why are you taking another student at 2,000? Why are you taking another student at 2,000 when we have paid 5,000? So today in the market, I'm selling it at 20 rupees. Suddenly in export, I sell at lower price, nobody will get to know about it. In export, I'm selling, people will not get to know about it. But in domestic, if I sell at 14, these 20 rupees guys, if they get to know, my market will collapse. My market will collapse. It's a issue here is I have no problem with that 14 rupees price. The problem is local customer 14 is an issue. Unless you say this local customer is a specialized customer, he is giving some bulk order, some extra analysis there, that's a different story. But otherwise, taking a local customer, at 14 rupees is a straight no. Taking a local customer at 14 rupees is a straight no. It is not to do with quantitative analysis, it is to do with qualitative. What is qualitative is if my existing customers get to know about it, I am under trouble. If existing customers know, I will get under trouble. I'll get under trouble. So I am going to say no. I'm going to say no. I don't want to hurt my existing customers. I don't want to hurt my existing customers. Clear? Able to understand the concept here? No problem with the price, but the problem is local customer I cannot take. Next scenario. If Japanese client offer 30,000 units, he wants 30,000 units, part supply of order not accepted. Part supply of order not accepted. Shipping cost is variable. What is the purpose of writing variable? For 20,000 units, 8,000. Variable means you will incur more now. Variable. If it was a fixed cost, 8,000 only for 30,000 order also. What is the impact on profit if order is accepted? Problem with 30,000 is I have a capacity of 80,000. I have a capacity of 80,000. I had spare capacity of 20,000. Idle capacity was there. Now, if I accept this 30,000, I will say no. No to 10,000 local customer. I'll say no to 10,000. How 10,000 local customer? I have 80,000 capacity. Today, 80 goes as 60, 20. Tomorrow, 80 will go as 50, 30. This 60 minus 50, there will be an opportunity cost which you have to consider in your analysis. There will be an opportunity cost, not only manufacturing cost, not only shipping cost, opportunity cost will also come. Opportunity cost will also come. Reason for opportunity cost, you are telling no to your existing customer. How much are existing customer giving you? 20 rupees minus 12 rupees. Fixed cost is irrelevant in all our analysis. Fixed cost is irrelevant in all our analysis. Existing customers are paying me what? 20 rupees and I am incurring 12 rupees on them. 8 rupees is my loss. 8 rupees is my loss, which I could still be okay if my Japanese customer is compensating me well. If Japanese customer is compensating me well, I still could be okay to say no to an existing customer. I don't know. We'll do the analysis. 20,000 units, good. 30,000, I have a problem. This room can accommodate 40 students. I already have 20 students. Now suddenly I get an order saying that we are 30 students will come together. I'm telling my existing 10 students, please go out. Sorry, I cannot accommodate you. So these 10 students, I'm losing money. I'm going to lose money. So here, this is what the concept is. Let's do evaluation of 30,000. Evaluation of 30,000. Evaluation of 30,000. 30,000 units. Almost the same thing. Figures will change obviously, but there will be one more item called opportunity cost. Write the format. Opportunity cost. There will be an item called opportunity cost. Why opportunity cost? Because you have to say no to your existing customer. You have to say no to your existing customer. Opportunity cost. Sales 30,000 into 14 rupees. 4 lakh 20. 30,000 into 14, 4 lakh 20. I'm getting an extra order, but there is some problem with this order. Opportunity cost. Variable cost was 30,000 into 12. No fixed cost. Problem in shipping cost. If that said shipping is fixed, I would have written 8 itself. Shipping is variable. 20,000 equal to 8,000. 30,000 equal to question mark. Shipping cost will go up. 20,000 equal to 8,000. 30,000 equal to question mark. And then comes the main trouble. The main trouble is I have to say no. I have to say no to 10,000 customers of mine. Each customer was giving me a contribution. Fixed cost, ignore it. Fixed cost does not change in any of the analysis. Each customer was giving me a contribution of 20 rupees minus 12 rupees. 20 rupees minus 12 rupees. And I was selling them happily. They were ready to take it. 60,000 units. But now I have agreed to go to 80,000. So I'm saying no to some of my existing customer. Some of my existing customer, I'm saying a no. So this is opportunity cost is 10,000 units. What is 10,000? You are saying no to your customer into 20 minus 12. 20 minus 12. 10,000 units into 20 minus 12. Very good adjustment. Opportunity cost. You have to say no. This did not come earlier because I had spare capacity. If I have spare capacity, I have no problem. Extra capacity, if you want, you have to say no to your existing customer. You have to say no to your existing customer. I think in the end the order will get rejected. This order will get rejected mostly. Order will get rejected. Negative, I'm going to reject the order. I'm going to reject the order. Ideally 20,000 I'm okay. But question says accept in full or rejected. Part supply not accepted. So if somebody is asking for 30,000 units, direct answer no. If you're asking for 20,000, direct answer yes. You're asking for 30 and part supply possible. Till 20 I'll supply. Till 20 I'll supply. But part supply not possible. Part supply not possible. So first one 32,000. Local customer, the advice will be different as the customer is local one and currently selling at 20, selling at discounted prices may impact the local market, may impact the local market. So I don't want to disturb the local customer. I don't want to disturb my local market. Clear? Any doubts on this? Any doubts on this? Go through 50. Again, a Jan 25 exam question. Go through this. Okay. SW Limited manufactures linen bed covers. Present cost data: manufacturing cost 200 per unit, selling and distribution cost 300 per unit, put together 300, fixed cost 16 lakh, selling price 800, expected profit for the coming year 8 lakh. Somewhere I will do a marginal costing income statement. It may give me one critical information which is missing. What is that missing? You'll understand. The management is saying there is some stagnation or deterioration and they want to do some CVP analysis and they're thinking of doing reduction of price. When you reduce price, volume will go up. When you reduce price, volume will go up. They are given three alternatives. I'll analyze only one alternative. I'll just analyze one alternative. Calculate the effect of profit under each alternative and recommend which alternative is most likely to be adopted. Today, I don't know the number of units sold. Today, I don't know the number of units sold. So, particulars per unit total selling price less variable cost, contribution less fixed cost, profit, number of units will become balancing figure. Number of units will become balancing figure. Then we will do alternative one. We have to do all three, but I'll do only alternative one in the class. Particulars, original per unit, total, alternative one per unit, total. Selling price will change, number of units will change, variable cost per unit will remain same, total variable cost will obviously change, contribution per unit will change, total contribution will change, fixed cost will remain same, profit may go up, may go down, may go up or may go down. Clear? Any doubts on this? Any doubts on this? So we are going to do particulars, original per unit, total. Alternative one, why original? I don't know the number of units. I don't know the number of units. In fact, they've said from the present sales level that will generate 8 lakh profit. What is the units? They have not given. They have not given. Can I get it through some formula and all? Yes, possible, but we'll do a statement itself. We'll do a statement. Particulars was existing per unit total. Write the statement. Particulars existing per unit total. Alternative one per unit total. Existing per unit total, alternative 1 per unit total. Other alternatives we are not analyzing. Existing per unit total, alternative 1 per unit total. Please fill the numbers. You please fill it. I'll discuss it in 3 4 minutes. You have the numbers in front of you. Start filling it. Do the statement. I'll discuss it in 3 4 minutes. I'm giving you 3 4 minutes to do this. Answers. Anyway, I'll discuss it now. Selling price is 800, variable cost is 300, contribution is 500, profit is 8 lakh, fixed cost is 16 lakh, contribution is 24 lakh, which gives me number of units is 4,800. 24 lakh by 500. 24 lakh divided by 500. 24 lakh divided by 500. 4,800. 4,800. In the rework scenario, 4,800 will go up by 15%. Will go up by 15%. Will go up by 15%, which is 5520 units. It will go up to 5520 units. I can write the overall number also. I'm just writing whatever is relevant. Selling price will go down by 10%. Selling price will go down by 10%. It will become 720. No change in 300. 420. 420 into 5520. 23 18,400 minus 16 lakh 718,400. This alternative may get rejected. Like that, you have to do all alternative. In all, I think profit will go down. In all, profit will go down. So everything will get rejected. Everything will get rejected. Decline is there. Any doubts on this? Any doubts on this part? Okay, let's discuss this question. We'll see if we have to solve it. It's a May 25 RTP question. Question 59, a slightly lengthier one. First, take your time and read it. Please take your time and read it. Maybe two to 3 minutes for you. Page 365. Question 59. Please read it. This will be the last question before break. So go through this. Okay. First para, it only information I see some contains 50 bars. Then there is some information. I have been given a first quarter income statement, second quarter income statement. First quarter is for 50,000, second quarter is for 70,000. COGS is there, GP is there, selling and distribution is there. Firm's overall tax rate. Management would like to know the break even point. They want to know break even point. Break even point is fixed cost by contribution per unit. Now, COGS is normally variable in nature, but here 7 lakh is there for 50,000 units, 8 lakh 80 is there for 70,000 units, 7 lakh is there for 50,000 units, 8 lakh 80 is there for 70,000. Can you do 7 lakh by 50? 7 lakh by 50 is how much? 8 lakh 80 by 70,000. This means it is a semi-variable cost, change in cost by change in units. This means it is a semi-variable cost, change in cost by change in units, change in cost by change in units. We did one problem today where COGS I said fully variable because I did not have any other information. Here I have information. Can you do 6 lakh 50? 6 lakh 50 by 50,000 is 13. 6 lakh 90. 6 lakh 90 by 70,000. Again this is also semi variable. Again this is also semi variable. So first working will be change in cost by change in units. Get variable for COGS, get fixed for COGS, get variable for selling and distribution, get fixed for selling and distribution. Once we get that, I'll be able to get to the break even point. We'll do it in some time. Second requirement, management wants to invest 30 lakh in this product line, 30 lakh rupees in this product line. What quarterly carton sales and total revenues are required in each quarter to earn an after tax return of 20% per annum on investment? After tax return means PAT. PAT should be equal to 20% of investment for a year. For a year, 20% per annum on investment for a year. PAT, we will do quarterly calculation later. 20% PAT. From PAT you have to go to PBT and then apply the formula. Firm's marketing predicts that if the selling price is reduced by one and a half, if selling price is reduced by one and a half, which is like that earlier question where selling price was reduced by 10%, volume was going up, and 1,50,000 advertising you do, 1,50,000 advertising you do, sales will increase by 20%. I'm not going to do this part, which is exactly same as the previous question where what happened, selling price went down and your units went up and we saw the profit impact. Here selling price is going to be reduced. Second, fixed cost will be increased. 1,50,000 advertising campaign. 1,50,000 advertising campaign. Sales will increase by 20%. What is increased by 20%? Quantity will go up by 20% should the plan be implemented. Clear? Working note 1. Working note 1. Computation of VC per unit and total fixed cost. VC per unit and total fixed cost. VC per unit and total fixed cost. First is COGS analysis. COGS analysis. VC per unit is equal to change in cost by change in units. Change in cost by change in units. VC part, change in cost by change in units. Change in cost is 7 lakh and 8 lakh 80. 7 lakh and 8 lakh 80. 1 lakh 80. Change in units is 20,000. See this concept I've used in so many questions. Be very clear. Basics initial class I spent around 30-40 minutes on this only because of this reason. And still we keep making mistakes. That's the challenge, is only this. Change in cost by change in units, 9 per unit. 9 per unit or 9 per carton, whatever, 9 per unit or 9 per carton. I'll substitute in one of the level. I'll get the fixed cost. Let's substitute in 50,000. Let's substitute in 50,000. Total fixed cost is equal to 7 lakh 50,000 into 9. 50,000 into 9. 7 lakh minus 50,000 into 9. 2 lakh 50,000. 50,000 minus 50,000 into 9. Any doubts on this? Clear? Same way I have to do for selling and distribution. Same way we have to do it for selling and administration. Selling and administration. Any doubts on this? Next, selling and administration cost. Selling and admin cost. VC per unit is equal to change in cost by change in units. VC per unit is equal to change in cost by change in units. Change in cost is 40,000, 650, 690. Units is 20,000. 2 per unit. 2 per unit. 40,000 and 20,000. I can substitute in any one level. I can substitute in any one level. 6 lakh 50 minus 50,000 into 2. Any doubts on this? Net net VC per unit is equal to 9 plus 2. 11 per unit or 11 per carton. VC per unit 11 per carton. And total fixed cost is 250 plus 550. 8 lakh. 250 plus 550, 8 lakh. My part is over. Listen for a minute. I'll apply the formula, which is your fixed cost by contribution per carton. You get 61,539. 61,539. Any doubts on this? This part I don't want to spend time. Then the second requirement is I want to earn a profit of 20% per annum. I want to earn a profit of 20% per annum. Next, sales. Working note 2. Sales to get 20% ROI per annum. Management estimates 30 lakh. What revenue is required in each quarter? In each quarter to earn a after tax return of 20% per annum. 20% per annum. Target PAT per annum. Target PAT per annum. They have said 20% per annum after tax. If that said before tax, then it would have been target PBT. 30 lakh into 20% for a year. 30 lakh into 20% for a year. Target quarterly PAT. Annual PAT 6 lakh. Quarterly PAT 1 lakh 50. Quarterly PAT is 1 lakh 50. PBT equal to 1 lakh 50 divided by 1 minus tax rate. Tax rate is 40%. 1 minus tax rate. Beyond this, I'm not doing it. You have to do sales to achieve desired profit formula. Desired profit plus fixed cost by contribution per unit or divide by PV ratio. If you divide by PV ratio, you'll get the answer in rupees. So I want a profit of 2 lakh 50, add fixed cost, divide by contribution and then get the sales. Or you divide by PV ratio, directly the sales will come. Third part is also something which you can manage. Clear? With this, my major discussion is over, but still two areas may take me around 2 hours of time. That is why I want to have it after break. In that, limiting factor is very, very critical. So we'll take a break now. We resume again at 2 o'clock. We'll resume at 2 and then try to do those two balance areas. Okay, we're left with two areas. Just 1 minute. 1 minute. Okay, we are left with two areas. One is computing profit on absorption versus marginal, which I'll do it later, and limiting factor. I'll spend time on limiting factor. It has got tested already once in exam. Okay, let's understand what is limiting factor. Now, every organization plans its manufacturing in this manner, or plans its activity in the manner of sales. From sales, we get production. From production, we get raw material consumption. From raw material consumption, we get raw material purchase. In an ideal situation, if there is a demand, I should meet the full demand of the customer. If there is a demand from the customer side, I should go ahead and meet the full demand of the customer. For example, Bharadwaj Institute is getting a demand for 100 students of CA inter classes. Ideally, we should go ahead and meet the demand of 100 students. That is an ideal situation. So, limiting factor one which constrains or limits the level of activity. Demand is the primary limiting factor. Demand is the primary limiting factor. In an ideal situation, demand is the limiting factor. Demand is the limiting factor. Now, after demand is there, I need to check one more thing. Do we have men, material, machine, money? In case of Bharadwaj Institute, like space, it can be anything. But basically, do we have adequate men? Men means, do we have labor? Do we have material? Can we buy that much of raw material? Do we have machine capacity? And do we have money to do the manufacturing? Because somewhere amount would be needed. So, do we have men, material, machine, money? Everything available, meet full demand. Everything available, meet full demand. No, I do not have adequate space. I'll have to say no to few students. I'll have to say no to few students. Or I can either take CA final or CA inter. Next batch I have to introduce. There is demand for both, but constraint is I can take only one of the two. I can take only one of the two. Concept says we will have to take the one which leads to maximum profits for the organization. Obviously, from an organization point of view, they look at which can give them maximum money. So here, demand is there, but capacity does not exist. That's a limiting factor. Demand is the primary limiting factor. After demand, anything can become limiting factor. Demand limiting factor, meet the full demand, but demand is there, but I'm not able to meet. Then how do I pick and choose is what this element is all about. What we are trying to do is, how do I pick and choose which customer to say yes, which customer to say no. For this we have two statement. One is called statement of ranking, second is called statement of allocation. What is ranking? Particulars, four products are there: selling price, less variable cost, contribution per unit, and then we have to do ranking based on not contribution per unit, ranking based on contribution per men. Men means if men is the limiting factor, contribution per labor hour. If men is the limiting factor, contribution per labor hour. How will I get contribution per labor hour? After I get contribution per unit, divide by number of hours per unit. Divide by number of hours per unit, you will get contribution per labor hour. Contribution per labor hour. Material is the limiting factor. Contribution per kg of raw material. Contribution per kg of raw material. Machine is the limiting factor. Contribution per machine hour. Money is the limiting factor. Contribution per rupee of investment. Units itself is the limiting factor. Capacity is measured in units, and units is the limiting factor. Contribution per unit. Contribution per unit. So you have to do selling price, less variable cost, contribution per unit, number of labor hours per unit, assuming labor is limiting factor. So if I go with individual contribution, D is the best. Individual, in this example, D is the best in individual contribution. But if I go by contribution per labor hour, B is the best. B is the best. Contribution per labor hour. Contribution per labor hour. So you will have to go with contribution per labor hour. You will have to go with contribution per labor hour, or contribution for Bharadwaj Institute can go with contribution per square feet of space, if space is the problem for us. If space is the problem, contribution per square feet. Whether CA students, inter will give us more money, foundation will give us more money, final will give us more money, CMA will give us, we'll have to see that. After I'm done with the ranking part, I have to do allocation. What is allocation is, I have some capacity. So for example, in this calculation, you see you have 1 lakh labor hours. Don't go with the numbers and all, 1 lakh is there. My B is the rank 1 product, I manufacture it fully. B is the rank 1 product, I manufacture that first. In that 20,000 consumed, I still have 80,000 hours. Then I go to the next ranked product. I will meet its demand. I still have hours. Go to the next ranked product. If you still have hours, go to the next. You don't have hours, restrict with it. So here B, A, C will be manufactured, D will be rejected. D will be rejected in this. This approach is called as limiting factor. The approach is called limiting factor. Concept is very simple. I do have demand. I do have demand, but I am not ready to meet the demand because of certain constraints. I'm not ready, or I do not have the ability to meet the demand. Demand I cannot meet because of certain constraints. Certain constraints. This is what the concept is all about. Let's see this now. There are certain variants in this. I'll discuss them as we proceed. Let's come to 60, 63, 63. Moon Limited. Go through the question first. You go through the question. 2 minutes for you. Okay, Moon Limited produces product X, Y, and Z and has decided to analyze its production mix in respect of these three products: material cost, variable overhead, department A, department B, rate per hour for department A, department B. Annual production at present. At present, we are selling 10, 12, and 20. Sales department is saying you can do 12, 16, and 24. Sales department is saying you can do 12, 16, and 24. There is a constraint on the supply of labor in department A, and its manpower cannot be increased. And its manpower cannot be increased. So today we are doing 10, 12, and 20. I cannot increase this sales. But people are asking for 12, 16, and 24. So what we are going to do is we are going to shuffle our unit mix in such a manner that some product you will reduce the manufacturing, and some product you will have to increase the manufacturing, so that you meet the most profitable products, so that you meet the demand of the most profitable products. Here I do have a limiting factor. What is the limiting factor? Is constraint on supply of labor in department A. Department A does not have the capacity. Department A does not have the capacity. So somewhere I'll have to do something here. I have to go and do something to meet the demand. To meet the demand, I may have to say no to few customers, which is possible by reducing either X or Y or Z and meet the higher profitable product. So first thing we will do is how much capacity is available and how much capacity is needed. Available is 10, 12, 20 into 6, 10, and 5. Available is 10,000 units into 6 hours, 12,000 units into 10 hours, 20,000 units into 5 hours. What you need is 12 into 6, 16 into 10, and 24 into 5. So obviously there is a limiting factor. I need more hours, but there is a constraint in the supply of labor of department A, and its manpower cannot be increased. Manpower cannot be increased beyond the present level. Clear? Any doubts till this? Working note 1, statement of ranking. Statement of ranking. Statement of ranking. Statement of ranking. There is a restriction. There is restriction on availability, on availability of on availability of department A workers department A workers, and hence department A labor is limiting factor. Department A labor is limiting factor. Department A labor is limiting factor. Now, what happens is I have identified the limiting factor. I need to know which is more profitable for me. Is it X, Y, or Z, which is what a ranking step will do. Ranking will decide which is more profitable for the company. Particulars in three columns. Particulars X, Y, Z. Department X, Y, Z. Selling price. Selling price. Selling price P12 400 and 240. That's the selling price for the product. Estimated selling price 312 400 240. First question I'll go very slow in case you get doubt, because this is an area which many students make mistakes. 312 400 and 240. From this I have to deduct material cost, variable overhead cost, labor cost of department A, labor cost of everything you have to deduct, whether it's a limiting factor or not. Labor cost, because labor is also variable cost. So less material, variable overhead, department A labor, department B labor. Department A labor is 4 per hour, department B labor is 8 per hour. Less direct material, less direct material 160 120 80, less direct material 160 120 and 80, less variable overhead 8 20 12, variable overhead 8 20 12, department A labor, department A labor into 4, 6 into 4 10 into 4 5 into 4, 6 into 4 10 into 4 5 into 4, department A labor 6 into 4 10 into 4 5 into 4, department B labor, department B labor 6 into 8 15 into 8 11 into 8, 6 into 8 15 into 8 11 into 8, contribution per unit, contribution per unit, contribution per unit. Deduct this and get contribution per unit. Live on guys, type it if you're done. Let me know what is the contribution per unit. How much? 2240, 7240. My ranking is not based on individual contribution per unit. Ranking is not based on contribution per unit. Can it be on contribution per unit? Some situations you will understand as we proceed, if the unit itself is the limiting factor. Now limiting factor is department A. Limiting factor is department A. Next, number of labor hours of department A per unit. Per unit, how many labor hours we need? Number of labor hours of department A. Department A 6, 10, 5. Contribution per labor hour. Contribution per labor hour. Contribution per labor hour 72 by 6, 100 by 10, 40 by 5. Contribution per labor hour. My ranking will be based on this. My top priority is department X, that is the heading are not department, product. The heading should be product, product X, product Y. Heading is product X, product Y, product Z. My top priority is product X, second top priority is product Y, and third priority is product Z. Any doubts on this? 12 rupees, 10 rupees, and 8 rupees. Clear? This is called statement of ranking. You have to rank the products on the basis of whichever is the limiting factor. Working note 2. Statement of allocation. 5 columns. Particulars, units, hours consumed, balance hours, total contribution. Particulars, hours, units, hours consumed, balance hours, and total contribution. Total contribution. Total contribution. Now, in order to do this step, every question will directly tell how many hours are available, but here they have not given directly. They have said there is there is a constraint on supply of labor in department A, and its manpower cannot be increased beyond its present level. What is present level is 10,000 units of X into its hours, 12,000 units of Y into its hours, 20,000 units of Z into its hours. So maybe leave some 4 5 lines and come down. Current labor hours equal to 10,000 into first product 10,000 into 6, second product 12,000 into 10, third product 20,000 into 5, 6, 10 and 5. 10,000 into 6, 12,000 into 10 and 20,000 into 5. This is what we have as of today. What's the number you get? Sorry? 2,80,000. Now, our job is to allocate this 2,80,000 in such a manner that I manufacture X maximum, then Y, then Z. X is rank 1, Y is rank 2, Z is rank 3. X is maximum manufacturing, 10 I will increase it to 12. Y I will try to increase it to 16. Z I want to increase it to 24, but all not possible. All not possible because we do not have capacity. We do not have capacity. So in this, right, first we start with just one error. Make it as product, not particulars. Product. We start with X. We start with X. We start with product X. Demand for X is 12,000 units. 12,000. Demand for X is 12,000, and it will take away 12,000 into 6. 72,000 hours gone. 12,000 into 6, 72,000 hours gone. 72,000 hours gone. Left over 2,80,000 were there. In that 72,000 is utilized. Left over 2,08,000 hours. Left over is 2,08,000 hours. Clear? These units will earn me 12,000 units into 72 rupees per unit. 12,000 units into 72 per unit. 12,000 into 72 per unit. Units into per unit number. 12,000 into 72. 8,64,000. Yeah, I've got the answer in live online. 864. Then I'll go to the next rank product. Next rank product. Next rank is Y. Y demand is now 16,000. Y demand is 16,000. The demand for Y has increased from 12,000 to 16,000, and this will take away 16,000 into 10. 1,60,000 hours gone. 16,000 into 10. Into 10, 1,60,000 hours gone. Into 10, 1,60,000 hours gone. Clear? I still have some more hours. Sometimes what can happen is second product itself fully not possible. Then I have to do part manufacturing. What happens, you'll understand. 48,000 hours available. These units, 16,000 into 100 rupees. 16,000 into 100 rupees per unit. You have to always multiply with per unit. So X I did, Y I did, Z I would want to write 24,000 but not possible. 24,000 is not possible because if we had capacity, we would have done everything. So this is a question mark. How will I get this? Is I have 48,000 hours. I have 48,000 hours. So this question mark is I have 48,000 hours. And the third product 5 hours per unit. Third product 5 hours per unit. Third product 5 hours per unit. 48,000 divided by 5 is only possible. 48,000 divided by 5 is only possible, which means you have to cut down. You have to cut down the manufacturing of the third product. 48,000 divided by 5, 9,600. 48,000 divided by 5, 9,600. I have to voluntarily cut down. I have to voluntarily cut down the third product. Third product. And this will take away technically same 48,000 consumed. We have consumed 48,000. Leftover is 0 now. Leftover is 0. 48,000 consumed. Leftover is 0. Any doubts on this? These units 40 rupees per unit. 40 rupees per unit and put a total. This will give you total contribution. If you have any fixed cost, we deduct that and get profit, but this will give me total contribution. 9,600 into 40 is 3,84,000 and put a total. And then put a total. Total is the overall contribution. 14 lakh 8,000. Okay, 14 lakh 8,000. If there is a fixed cost, I'll deduct that and get profit. 14 lakh 8,000. Not, it will be more. Because 16 lakh itself, 28 lakh. Any doubts on this? Clear? Can you proceed? So this is as far as total contribution from the best product mix. Everything is done 28, 48. Any doubts on this? Let's come to 66. This came in September 24 exam. ABC Limited is a well-known company for producing baby care products. The company produces and sells two variants of organic shampoo for children, Baby Rose and Baby Lily. Sales and cost data for both the products are as follows. Current demand 4,000, 3,000. Demand is 4,000 and 3,000. Production capacity is more than that, 7,500 and 6,000. Selling price per bottle 600, 750. Material cost 160, 200. Other variable cost 270, 350. Fixed cost amount to 5 lakh and 4 lakh 50 for Baby Rose and Baby Lily respectively. So they have given separately fixed cost. It doesn't really matter. The production manager has informed that 1 lakh liters of material is available for production. 1 lakh liters of material. So the constraint is raw material, not labor here. 1 lakh liters of material. First product I need 160 divided, rate is 20 rupees. So I need 8 liters. First product I need 8 liters. 160 divided by 20. 160 divided by 20. And second product I need 10 liters. Second product I need 10 liters. First product 8. Second product I need 10. Overall I have 1 lakh liters. Overall I have 1 lakh liters. The dealer has approached the company and proposed to purchase both the product, purchased both the product at the existing selling prices, which are to be produced by utilizing the remaining unused material. Remaining unused. Why they are using the word remaining unused is we are already doing this. We are already doing this. Remaining some unused material can be there. However, he insisted that all the bottles must be packed with a eco-friendly packaging, which will result in additional cost of 10 per bottle. Presently, the company is not using eco-friendly packing for of the bottles. Prepare a detailed statement showing the overall contribution and profit after acceptance of the dealer's proposal. Now, demand is only 4 and 3. Capacity is more than 4 and 3. Capacity is more than 4 and 3. And for 4,000 units, I need 4,000 into 8, 3,000 into 10. Demand and all I'm able to meet. But suddenly somebody has come, a dealer is saying, I am ready to buy both the product at the existing selling prices, provided you do that some packaging you do and then give it to me. So first we will meet the existing demand, which is 4,000 and 3,000. But beyond this I have extra capacity, which is units are also there, and I have extra capacity in terms of unused material. The dealer has come and told, please supply me anything you want to do, but only requirement is you have to pack it in a eco-friendly packaging, which will cost how much? 10 per bottle. So we are now going to do a statement of ranking for the product sold to the dealer. When you sold it to the dealer, in your variable cost extra 10 rupees will come. In your variable cost extra 10 rupees will come. That is, to the dealer, should I sell baby rose more or baby lily more? Because baby rose, baby lily, I'm going to do it for the outside customer, which is done. They're saying a proposal has come who wants to purchase both the product, which are to be produced by using what? Remaining unused material, which means this is already done. 4,000, 3,000 is already done. Your job is not to remove 4 and 3. That is already done. Beyond this, which is better? Should I do rose or lily? Is rose better or lily better? Beyond what? Beyond the 4,000 and 3,000. Working note 1, statement of ranking. Statement of ranking, particulars and two products. Rose and lily. Selling price. The dealer will take it at this way. We are doing the statement only for the dealer, not for outside people. To the dealers, what should I give? Should I give rose or lily? He is ready to buy at the original price, 600 and 750. Only request is do extra 10 rupees eco-friendly packaging. Do extra 10 rupees eco-friendly packaging. That's an extra request by the dealer. Extra request by the dealer is do an eco-friendly packaging. 600, 750. 600 and 750. Less variable costs. Let's add everything. 160 rupees, 270 rupees, and another 10 rupee. 10 rupees the eco-friendly packaging. 160, 270, and 10. 200, 350, and 10. Contribution per unit. Contribution per unit. How much? 160 and 190. Any doubts on contribution per unit? Now, the limiting factor here is the availability of raw material. The dealer is saying, you give me any product, 1,000, 10,000, lakh, 10 lakh, I'm ready to take. They have not given any constraint there. Problem is with raw material. Number of units of raw material per unit. Number of units of raw material per unit. First product raw material cost is 160 20 per liter, 160 20 per liter, 200 20 per liter, 160 20 per liter, 200 20 per liter. So 160 by 200, 8 liters, and 200 by 20, 10 liters. And now divide contribution per liter, contribution per liter. Now divide contribution per liter. 160 by 8, 20 rupees. 190 by 10, 19 rupees. So my preference ranking, rank 1, rank 2. I will prefer to sell product Rose and then product Lily. First preference is Rose, second preference is Lily. Any doubts in this? First preference is Rose, second preference is Lily. Any doubts in this? Clear? Can you proceed? Working note to statement of ranking, a statement of allocation. Particular product units, liters consumed. It will be liters consumed. Balance liters, total contribution. Product units, liters consumed, balance liters, contribution. Units, liters consumed, balance liters, and total contribution. Clear? Okay. Question has said, already I'm doing some sales. So let's write that first because that much material is already used. Thereafter, anything extra you have, give preference to Rose. Still you have something, give preference to Lily. First give preference to Rose, then to Lily. But first is Rose outside demand. Rose outside demand, 4,000 units we have manufactured. Rose outside demand, 4,000 units, current demand and sales. Current demand and sales, 4,000 for outsider we have done. 4,000 we have done it for outsider. These 4,000 has taken away 32,000 liters. Has taken away 32,000 liters. This is for outsiders. Has taken away 32,000 liters, and I'm left with 1 lakh minus 32,000. 68,000 liters is left. 68,000 left. One lakh minus 32,000, 68,000 left. Clear? Any doubts on this? Listen, for the outside sale, I will not be earning 160. I'll be earning 170. Outside sale, I'll be earning extra 10 rupees. Reason is no packaging. That eco-friendly packaging is not needed. For outside 600 minus 160 minus 270. 600 minus 160 minus 270. 170 rupees I'll earn. 170 rupees I'll earn. I'll prefer to do outside only, but outside limitation is there. Only 4,000 people are asking. 3,000 people are asking. I met that. After that, I had capacity. A dealer came, give me anything you want to give, but 10 rupees extra cost you incur for eco-friendly packaging. Eco-friendly packaging. So these units, 4,000 into 170. 4,000 units into 170. 6,80,000. 170 rupees we will earn. We will earn 170 rupees. 4,000 into 170. Then comes Lily. This is also outside demand. Lily outside demand. Lily outside demand. 3,000 units. Taken away 3,000 into 10. 30,000 gone. 68,000 minus 30,000. Whatever I'm writing in bracket and all is not mandatory. This is just for your understanding. And here I will be earning every unit outside. 750 minus 200 minus 350, 200 rupees we will earn. Extra 10 rupees more, we will earn 10 rupees more in the outside sale. So this will give me 3,000 into 200. 3,000 into 200, which is 6 lakh. Any doubts on this? Now I still have 38,000 liters. I will prefer manufacturing rows. I'll prefer manufacturing rows. Anything beyond this, rows for whom? For the dealer. Dealer means I'll earn 160 per unit and 190 per unit. 160 per unit and 190 per unit. My preference is now for the dealer. My preference is now for the dealer. If you understand the concept, it's a very simple question. Nothing very tricky and all. 160 for the dealer and 190 for the dealer. The only point is my preference is rows, but rows another 3,500 you can do. Another 3,500 you can do. Beyond that, not possible because capacity is only 7,500. Another three. If capacity issue was not there, fully do rows only. Fully do rows only because rows is rank one. Dealer is saying give me anything. Dealer did not give any restriction. Dealer is ready to take anything. If dealer is ready to take anything, I will go ahead and supply as much as possible. But the problem is I have capacity of only 7,500. In that 4,000 already used. 4,000 already used. I have a capacity of only 7,500. 4,000 already used. Next point, my rank 1 rows in bracket dealer. Dealer can take 7,500 minus 4,000. 7,500 minus 4,000. 3,500 is ready to take. This also doubtful, okay? I need to see whether I have letters or not for this. 3,500 is ready to take. He is ready to take 3,500. I think we do have the letters available for this. So we'll keep proceeding forward. So this will give me 3,500 into 8. 28,000 liters gone. 28,000 liters gone. 3,500 into 8. 28,000 liters gone. We still have some more unit raw material. 38,000 minus 28,000. 10,000 liters. This question, this contribution column, I should not do it here. I should do a separate working note, which I'll show it only. I'm not going to do this question because product wise they would want a profit statement. I'll show you what they have done. Any doubts till this? This will earn me 3,500 but 160 rupees only. 3,500 but 160 rupees only. 3,500 160 rupees. How much is this? 5 lakh 60,000. Clear? Then I do Lily for the dealer. Now I do have capacity of another 3,000. 3,000 used, 3,000 still there. But I don't think so. Raw material is available. Raw material only 10,000 is available. Raw material only 10,000 is available. So this is a question mark. 10,000 liters divided by 10 liters per unit. 10,000 liters divided by 10 liters. 10,000 liters divided by 10 liters. 1,000. I'm voluntarily cutting it down. I do have capacity. Demand is there. Capacity is there. Raw material not there. Demand there. Capacity there. Raw material not there. Raw material not there. Demand there. Capacity there. Raw material not there. Clear? Any doubts in this? So now consumed is 10,000. 0. And these units will give me 190 rupees only. 190 rupees. Outside 10 rupees extra, dealer 10 rupees lesser. Outside 10 rupees extra, dealer 10 rupees less. Any doubts in this? Any doubts on the concept here? Clear? If you have more raw material, go ahead and meet more demand. Go ahead and meet more demand. That also one limitation is there. Capacity 6,000 outer limit. Capacity for Lily is 6,000. Capacity for Rose is 7,500. Any doubts on this? P&L could be like this. Okay, finally do it like this. Well, rows you have to do it separately, lily you have to do it separately, because fixed cost is given separately. Fixed cost is given separately. They have given fixed cost for rows separately and lily separately. So ultimately I'll have to do this. Any doubts on this? Any doubts on the concept here? Clear? Able to understand this? Let's see question 67. An agriculture based company having 210 hectares of land is engaged in growing three different cereals, namely wheat, rice, and maize annually. The yield of different crops and their selling prices are given below. In 1 hectare, I will have 2000 kg of wheat, 20 rupees selling price, 500 kg of rice, 40 rupees selling price, 100 kg of maize, 250 rupees selling price. Variable cost per kg, these are per kg, not per hectare, these are per kg. Wheat, rice, maize, labor charge, packing material, other variable. The company has a policy to produce and sell all the three different crop. Maximum, maximum and minimum area to be cultivated 160 is maximum, plus another 50 for rice 210, plus another 60 for maize 160, plus 50 plus 60, all put together 270, all put together 270. But I have area of only 210. I have area of only 210. Again I read here 160, 50 and 60, 160, 50 and 60, all put together is 270, but I have area only 210. I also have minimum condition. What is minimum condition is 100 I have to do wheat. Let's assume wheat is rank 3. Nothing matters. Do 100. Do 100 even if it's rank 3. And rice do 40. Wheat, maize do 10. Our allocation is only that balance left over after this. Should I focus on wheat? Should I focus on rice? Should I focus on maize? Minimum to 100% do it. Minimum 100% do it. After that, which is the focus? They want crops on the basis of contribution per hectare. Why contribution per hectare? Because hectare is the limiting factor. Hectare is the limiting factor. Determine the optimum product mix considering all cereals have to be manufactured. Maximum profit that can be achieved if the total fixed cost per annum is 2145. That last column contribution total will come, less fixed cost, profit will come. So here I have to do contribution per hectare. Contribution per hectare. What is contribution per hectare? Is selling price less variable cost is contribution per kg. In 1 hectare, you can do 2000 kg. In 1 hectare, you can do 2000 kg. So whatever you get per unit into 2000 is the contribution per hectare. Normally we divide by it, but in 1 hectare, you can get how many units now? 2000 units. In 1 hectare, you can get 2000 units. What normally happens is in 1 hour, we were not getting even 1 unit, 10 hours, 1 unit, 20 hours, 1 unit. Here on hectare, so let's go with particulars, three products, selling price, less variable cost, contribution per kg. After that, you'll understand what you need to do. Right? Particulars and three products. Particulars and three products. Particulars, wheat, rice, and maize. Selling price, less variable cost, contribution per kg. After that, I'll explain. Contribution per kg. Selling price, less variable cost, contribution per kg. 20, 40, and 250. Variable cost, I'll keep deducting it. 8 plus 2 plus 4, 12 rupees. 10 plus 2 plus 1, 13 rupees. This is the contribution per kg. Ranking is not on the basis of ranking, is not on the basis of contribution per kg. Ranking is on the basis of area hectare. So contribution per hectare, in 1 hectare I'll get 2500 and 100. 2500 and 100 number of kg per hectare. Number of kg per hectare, 2500, 100. Multiplication is contribution per hectare. Normally division, but here it's multiplication. Normally division, but here it is multiplication. Contribution per hectare. If I just go by contribution per kg, wheat is rank 3, but here it is now rank 1. Wheat is rank 1. Rice is rank 2. Maize is rank 3. Clear? Okay. Now listen. I don't think so. We need to do it. Listen. In allocation, what I will do is, without even looking at the ranking, 100, 40 and 10. Without even looking at the ranking, 100, 40 and 10. Leftover 60 hectares are there. Rank 1 is wheat. Rank 1 is wheat. So in wheat, I can do another 60. In wheat, I can do another 60 as per the question. 160 and 100. With that, it is over. 100, 40, 10 minimum, and extra leftover 60 will go for wheat. Extra leftover will go for wheat. If you had extra beyond that, another 10 of rice can be done. If you still have more capacity, another 50 of maize can be done. Another 50 of maize can be done. So if you look at minimum area, is the ranking wrong? I think, give me a minute. I don't know what happened. Okay, this is 14. Sorry. Sorry. This is 14. My mistake. Sorry. Okay, sorry. The ranking changes. Sorry. So in this scenario, what will happen is extra you will do for the first minimum you meet it, then extra 10 of rice, and then rank 2 is wheat, extra 50 only possible of wheat. 60 is there, but only 50 is possible. No extra for maize and other things. Extra you are doing, and then you're closing it. Any doubts on this? Once you get this, deduct the fixed cost, you get the profit. Any doubts on this part? Clear? Okay, this is normal limiting factor analysis. What is normal limiting factor analysis is, you do not have capacity, you do ranking, you do allocation and compromise somewhere. Compromise demand somewhere. Then what is a variant? Variant is this. Let's understand something called as make or buy. Make or buy. For example, a company will manufacture a product. Sometimes they may buy the product also. For example, Bharadwaj Institute is conducting CA inter classes, CA final classes, CMA, all the classes are conducted. Most of the classes are conducted by our own faculties. But some classes we feel, ignoring the quality aspect and all, ignore the quality angle. If we do it in-house, per student we are incurring 5,000 rupees. Then in that case, there is another person who is ready to give us classes with 3,000 per student. With 3,000 per student. To the student end, he doesn't understand anything. He is okay with anyone coming there. Student end, they are okay. So if I do internally, 5,000 rupees. If I get it from outside and give it to you, as let's whatever way I give it, deliver, it's only 3,000. It does make sense that time that go ahead and get it from outside. So compare cost of making the product with the cost of buying. Compare cost of making the product with cost of buying. Cost of making is more than cost of buying. Please buy the product. Please buy the product. What is cost of making? Ideally only variable cost. Fixed costs are normally irrelevant. Fixed costs are normally irrelevant. Ideally only variable cost. Only variable cost. So cost of making the product is more than cost of buying the product. Buy the product. Both are equal, indifferent, and if making is cheaper, then this should be make. Sorry, making is cheaper. Making is cheaper than make the product. Making is costlier, buy the product. Both are equal, indifferent, and making is cheaper. Making is cheaper, then in that case, make the product. Clear? Now, suddenly question also brings in a limiting factor here. Brings in limiting factor here. How does limiting factor impact the analysis? I want to show it with examples only, you'll understand it. Let's go to 69, go through the question. Go through the question. Okay. A company manufactures four products. Annual demand for the products is 120, 186, 171, 99. Selling price, material per unit, labor per unit, variable overhead per unit. Variable overhead are absorbed on a machine hour basis at the rate of 1.20 per machine hour, at the rate of 1.20 per machine hour, which means if you divide by 1.2, you will get to know the number of hours per unit. If you divide by 1.2, you will get to know the number of hours per unit. Fixed overhead 46, production capacity is 8 lakh 15,000. Production capacity is 8 lakh 15,000. So somewhere I see a constraint on machine availability. Normally demand there, capacity not available, we will compromise on sales. We will compromise on sales. Demand there, capacity not available, compromise on sales. The last line says PQR, S is not available. PQR can be purchased at the rate of 21, 24 and 48. Whenever this option is available, assuming I do not have capacity for manufacturing P, customer I will still give the product. To you I will still give the classes. But what will I do? I'll buy it from outside and give the classes. I'll buy it from outside and give the classes. So in this question, sales is going to be equal to demand. Only confusion is 1 lakh 20. Should I make it in the company and give it to you, or should I buy it from outside and give it to you? Should I make it in the company and give it to you, or should I buy? So to put it simply, PQR can be purchased. S, I will 100% meet the demand. S, I will 100% manufacture. S, I will 100% manufacture and meet the demand. S, I will 100% manufacture and meet the demand. Among the PQR, I need to see which one should I manufacture, which one should I buy it from outside, which one should I manufacture, which one should I buy it from outside. So ranking in this case does not happen based on contribution. Ranking does not happen on the basis of contribution, because sales is anyway going to happen. Sales is anyway going to happen. The only doubt is, where will the product come from? Where will the product come from? Is it going to come from outside, or is it going to come from within the company? For that we calculate savings in manufacturing. What is savings in manufacturing is, how much money do I save by doing manufacturing? If I save more money, prioritize that product. If you save less money, because manufacturing will mostly be cheaper, manufacturing will be cheaper. If you save more money in manufacturing P, please prioritize manufacturing of P. If you save more money in manufacturing Q, prioritize manufacturing of Q. If you save more money in manufacturing R, prioritize R. S, you don't have a choice, please manufacture. S, you don't have a choice, please manufacture. S, you don't have a choice, please manufacture. P could be my priority, Q could be my priority, or R could be my priority. P could be my priority, Q could be my priority, R could be my priority. So the concept says, if subcontracting is possible, then ranking should be based on savings in manufacturing. Ranking should be based on savings in manufacturing. Ranking should be based on savings in manufacturing. Ranking should not be based on contribution. Ranking should not be based on contribution. Why? Because 100% I will earn that contribution. 100% I'll earn the contribution. Only thing is contribution can go little down or more based on whether I'm manufacturing or buying. Whether I'm manufacturing or buying. That gap is called as savings. That gap is called saving. So working note 1, we are going to ranking, but ranking is not on the basis of, there was one exam question where they did not even give this information. They did not even give selling price information because that's not needed. So for ranking and allocation, I don't need the selling price. I don't need the selling price. For profit statement only, I'll need the selling price. For profit statement only, I'll be needing the selling price. For ranking and allocation, I don't need selling price. I don't need selling price. Clear? Able to understand this? Here, again, I'm repeating. Credit side is decided. What is credit side? Sales will happen. Credit side is decided. Sales will happen. Debit side is the question mark. Should you buy it from outside and do it? For example, P. If I buy it from outside, it is 21 rupees. If I make it in-house, can you add material, labor and variable overhead? Add material, labor and variable overhead. Add material, labor and variable overhead of P. 10 plus 4 plus 1.44. So should I produce a product at 15.6 and earn 23.88, or should I buy it at 21.36 and earn 23.88? Earning 23.88 is sure. The only question mark is, can you do it at 15.6 or can you do it at 21.36? 15.6 or 21.36? That's the only question mark. That's the only question mark. If you do it at 21.36, you are losing money, which I may still do it because I need to see whether capacity is available or not. If capacity is not available, please buy it from outside because you still earn 1 2 rupees there, because you'll buy at 21, sell it at 23. Buy at 21, sell it at 23. Clear? Able to understand this? Working note 1, statement of ranking. Statement of ranking. Statement of ranking. Particulars PQR. S is like a rank 1. 100% has to happen. S, there is no choice available. Okay. S, we do not have any choice available. Particulars 3 product. You can in fact give the heading a statement of ranking for manufacturing. For manufacturing. PQR. PQR. First is variable manufacturing cost. Please add all the 3 and tell me the numbers. Material, labor and variable overhead. First product you already told me 15.6. Add the others. Live online guys, type it. Thirteen plus 4 plus 1.44. 18.72 and 39.6 is what a student has highlighted in online. 18.72, 39.6. Clear? Any doubts on this? Second is purchase price. 21.36, 24.48. If capacity is available, all the 3 I want to make it in-house only. All the 3 I want to make it in-house only because cost of making is cheaper. cost of making is cheaper. The problem for me is capacity may not be available. We don't know. Capacity may not be available. Savings in manufacturing. Savings in manufacturing. 21 minus 50, 15.6, 5.76, 5.28, and 8.40. 5.76, 5.28, and 8.40. This is the quantum of savings I make in manufacturing the product. Quantum of savings I'll make if I manufacture the product. Priority is not on absolute amount. Priority is on number of machine hours per unit, saving per machine hour, whichever saves me more money. Saving per machine hour, not contribution per machine hour. Saving per machine hour. Whichever saves us more money, we will prioritize that. Saving per machine hour. Now, number of machine hours per unit is 1.44 divided by 1.2. 1.2 per machine hour. 1.2 per machine hour. One machine hour is 1.2. Last question I did 160 by 20, 200 by 20. Same way. 1.44 divided by 1.2 is 1.2, 1.2 and 2. 1.44 divided by 1.2, again 1.44 divided by 1.2, 2.4 divided by 1.2, 2.4 divided by 1.2, which is 1.2, 1.2 and 2, 1.2, 1.2 and 2. Any doubts in this? Divide and tell me saving per machine hour. Saving per machine hour. 4 point ranking. This is my, listen, this is rank 2, this is rank 3, and this is rank 4. Rank 1 is already there, yes. Rank 1 is, you can even write 1, 2, 3 also, that's okay. But technically my rank 1 is product S. Rank 1 is product S. Why product S? Because that has to be manufactured first. That has to be manufactured first. Product S, because I do not have an option of buying it from outside. S, I do not have an option of buying. I can write it as 1, 2, 3 also, doesn't really matter. But my first priority is product S. First priority is product S. After product S is done, after product S is done, you can do P, you still have R's, do Q, you still have R's, do R. Somewhere you do not have R's, no worries. You do not have R's, restrict, balance, buy it from outside. Balance, buy it from outside. Any doubts on this? Any doubts on this? My rank 1 is technically product S. Then after 5 now. Now 10 minutes the breakthrough, 10 15 minutes. So my priority order is rank S is first priority, then P, then Q, then R. S is first priority, P, Q, and R. Clear? Any doubts in this? Now I have to allot 8,15,000 product units, R's consumed, balances, no contribution column because contribution I'll see it later. Next, working note to statement of allocation. Statement of allocation. Allocation, 4 columns: product, units, hours consumed, balance hours. Product, units, hours consumed, balance hours. First priority product S. First priority is product S. Product S, I have a demand of 99,000. Please manufacture it fully. We are not selling it, we are just manufacturing. First priority is manufacture S, then later we'll sell it. Then manufacture P. If you still have capacity, manufacture Q. Still have capacity, manufacture. Somewhere you do not have capacity, buy it from outside. Buy it from outside, because sales will be done. Only thing is where the product is going to come from is doubtful. That is why I did not even want to look at selling price, because selling price cannot decide whether I have to make it within the company or buy it from outside. First is yes, 99,000 units. Yes, 99,000 units. 2.16 divided by 1.2 is 1.8 hours per unit. So this will consume 99,000 into 1.8. 99,000 into 1.8. 178, 200. 99,000 into 1.8, 178, 200. Left over 8 lakh 15 minus 178, 200. 815 minus 178, 200. We still have 636, 800. Any doubts on this? First rank. Then I'll go to product P, 1,20,000 units. 1,20,000 units into 1.2. We still have 492, 800. We still have 492, 800. We still have 492, 800. Clear? Next is Q, 186. Again into 1.2. Where all products fully will not be possible. Mostly last rank will always have some compromise. I till now have not even calculated contribution per unit, and I don't even want to know it. Till now, I have not even got into contribution per unit. And there was one exam question where they did not even give the selling price itself. They only wanted to know what will you manufacture, what will you buy it from outside. Last product will have a problem. R is question mark, which is 269,600 divided by 2. 269,600 divided by 2. Balance is 0. 269,600 divided by 2. 134,800. This is the last product. But I need 1,71,000. Nothing to worry about. Balance, buy it from outside. Balance, buy it from outside. Able to understand this? Income statement I'm not doing, but I'm just showing it to you. What we are doing here is which is to be produced, which is to be purchased, which is to be produced, and which is to be purchased. Just give 2 minutes. Okay, let's discuss this. So I am going to sell the product, manufacture this much, buy outside 0. Manufacture so much, buy outside 0. Manufacture so much, buy outside this much. Manufacture so much, buy outside. If you manufacture, your contribution is selling price minus variable manufacturing cost. Your contribution is selling price minus variable manufacturing cost. And if you buy it, selling price minus purchase price. If you buy it, selling price minus purchase price, both will be different. Both, this is where the selling price is needed. Till this, selling price was not needed. If you manufacture, selling price minus variable manufacturing cost. So if you see here, 23 minus 15.6, 15.6 would have been the variable manufacturing cost, 18.72 would have been the variable manufacturing cost, 39.6 would have been the variable manufacturing cost. This one only I've done for R, because no other product we are buying. No other product we are buying. This units into contribution per unit. Again, units into contribution per unit. Total contribution less fixed cost profit. Clear? Any doubts on this? Any doubts on this part? We'll take a break of 15 minutes. Anyway, the sound will be there. So 15 minutes, let's take a break and then resume. Okay, I'll quickly discuss one more question which is there in limiting factor, and then I'll move to area called absorption versus marginal. Should be around 45 minutes to 1 hour kind of a discussion which is pending. And once today's class get over, I'll update in group whether we are keeping a class tomorrow or on Monday and the changes in the schedule for the other subjects. Let's come to 70. MNP Company Limited produces two products A and B. The relevant cost and sales data per unit of product is as follows: material, labor, variable factory overhead, selling price. Availability is limited to 55,000 hours for the month. 55,000 hours for the month. So the limiting factor is machine hours. The available machine hours is 55,000. Monthly demand is 5,000 and 6,000. Fixed expenses 1 lakh 40. Variable factory overheads are 4 per machine hour. 4 per machine hour. So whatever variable factory overhead you see, if you divide by 4, you'll get the machine hours per unit. Company can produce both the products according to the market demand. Calculate the mix that will generate the maximum profit for the company and also profit for the company. I will give you exactly 8 minutes, 8 to 10 minutes, a statement of ranking. Ranking on the basis of contribution per machine hour. Ranking on the basis of contribution per machine hour. How will you get contribution per machine hour? Selling price less variable cost, contribution per unit, machine hours per unit. Then product, units, machine hours consumed, balance machine hour, total contribution. From the total contribution, deduct the fixed overheads, you will get the profit. Clear? Any doubts in this? I'm giving you 7 to 8 minutes. I want you to practice this. This area is little critical. Please start practicing this. 7 to 8 minutes for you. Once that is done, we'll discuss. So first thing we have to do is a statement of ranking. 180 minus 120 is 60 rupees. 175 minus 125 is 50 rupees. Number of hours per unit is 10, 5, 10 and 5, 40 by 4 and 20 by 4, 10 and 5. Contribution per hour is 6, 10, rank 1, rank 1 and rank 2. So my top priority would be to manufacture product. The second one, the second product I manufacture 6,000 units into 5, 30,000 consumed. 6,000 into 5, 30,000 consumed. Leftover 25,000 is there. That 25,000 can give me 2,500 units into 10, 25,000. 2,500 into 10, 25,000. The 6,000 units of this product will give me into 50, which is 3 lakh rupees. 6,000 into 50 is 3 lakh rupees. 2,500 will give me 60. 2,500 will give me 60, which basically adds up to 2,500 into 60 is 1 lakh 50. Sorry, is there an, because students got 2 lakh 85. Is the number correct? 6,000 and just 2,500 into, which is 50 by 10. Oh, okay, okay. This contribution is how much? Okay, sorry. 50 by 10. 5. The other side is right. Okay, ठीक है. So sorry, my mistake. So then the other product is 2,500 into 50, 1 lakh 25,000. Put together is 4 lakh 25,000. Put together is 4 lakh 25,000 minus 1 lakh 40, 2 lakh 85. We are almost done. A small quick discussion. Okay, a question may ask something called as calculation of opportunity cost. Nothing much for you to do and all. Just listen more. Company can make any one of the three products. Can make any one of the three products X, Y, or Z in a year. It can exercise its option only at the beginning of each year. Only at the beginning of each year. Relevant data is given below. Selling price, variable cost per unit, which means I make a contribution of 4, 3, 5. Contribution is 4, 3, and 5. I have demand of 3000, capacity of 2000. If you have demand, capacity not there, you can sell only 2000 units. Demand is there, capacity not there, you can sell only 2000. Second product, capacity is there, demand is not there. Demand is not there, again you can sell only 2000. Third product, demand is there, capacity not there, you can sell only 900. You can sell only 900. To put it simple, final sales is lower of demand and capacity. Final sales is lower of demand and capacity. To put it simply, I can earn 8000 from product 1. I can earn 6000 from product 2. And I can earn 4500 from product 3. The best product is product X. Question will say opportunity cost. What is opportunity cost is, if you don't manufacture X, assuming you don't manufacture X, assuming you don't manufacture X, which product will you manufacture? Y. If I don't manufacture X, I'll do Y. If I don't manufacture Y, which product will I manufacture? No, no. The first analysis is over. If you don't manufacture X, it is Y. Now, second question. If you are not manufacturing Y, which one would be your preferences? X. I'll go with X. If I don't manufacture Z, what will I manufacture? X. So, opportunity cost is what are you losing? By earning this 8000, I lose this 6000. I lose this 6000. By earning that 6000, I lose the original 8000. I lose the original 8000. So opportunity cost is what is the contribution of the next best product, which can be even better than our product, which can be even better than our product. Contribution of the next best product, which can even be better than our product. Clear? Any doubts on this? Last segment, an area which has not been tested that much in exam, but still I don't want to leave it. Inventory valuation. We have two methods of inventory valuation. One is called absorption costing and second is called marginal costing. In the cost sheet chapter, when we did direct material, direct labor, direct expense, factory overhead, GWC, NWC, COP divided by units produced is cost per unit, and then we valued the inventory. When I write in the absorption costing, or when I wrote in the cost sheet chapter, some of the items had variable costs, some of the items were fixed costs. For example, factory overheads can have a variable component as well as a fixed component. Sometimes labor cost can be fixed in nature. So absorption costing method says all production cost. What is production cost? Direct material, direct labor, direct expense, factory overhead till COP. All production cost, whether it is variable or fixed, is considered for inventory valuation. All production cost. Production means till COP. Till COP. Marginal costing method says till COP is right, but in that only variable cost is considered for inventory valuation. Till COP is right, but only what? Variable cost is considered for inventory valuation. What is the end effect of this? Inventory in both the methods will not match. Closing stock and opening stock in both the methods will not match. What is the next implication of that? If both are not matching, profits will not match. Profits will not match. So we have four categories of cost. Variable production, tick means it is considered for inventory valuation in both the places. Considered for inventory valuation in both the places. Fixed production cost, tick. No means not considered for inventory valuation. Non-production, nowhere it is considered. Non-production is selling overheads, administration overhead, they are never considered for inventory valuation. So absorption costing has a variable production cost, has a fixed. When I say variable can be direct material, direct labor, direct expense. Fixed can be factory overhead. Everything will form part of COP. Everything will form part of COP. If it forms part of variable as well as fixed, COP divided by units produced into cost per unit. FIFO method, weighted average, all that you can do, but considered for inventory valuation. When it comes to marginal costing, only variable production cost is considered for inventory valuation. Only variable production cost is considered for inventory valuation. So under marginal costing, this format you are aware of: sales less variable cost, contribution less fixed cost, profit. Fixed cost will have two category: fixed production, fixed non-production. Add them, write it. Fixed production, fixed non-production, add, write it. Fixed production, fixed non-production, add, write it. Clear? This is as far as the fixed cost is concerned. As far as the fixed cost is concerned, fixed production, fixed non-production, add and write it. Okay, coming to the variable component, I do a separate working note where I start with variable production cost, add opening stock, less closing stock, variable cost of goods sold. Our cost sheet format COP, add opening, less closing, but only variable, only variable. Where is the fixed going? In less fixed cost, in less fixed cost. Add any other non-production cost and all. You have non-production selling and distribution overhead and total variable cost, total variable cost. When it comes to our absorption costing, this is usual cost sheet format. Variable production can have a breakup called direct material, direct labor, direct expense. Fixed production can have a breakup called factory overhead, quality control, research and development. It can be anything. Basic thing is you bifurcate into, there is something called as OAR. What is that? Why is it coming? I'll explain when I do a question. There only you will understand it. But there is going to be difference. Which method will have more inventory? The absorption costing will have higher value. Absorption costing will have higher value. So in any question, if closing stock is more than opening stock, if closing stock is, both value will be higher in absorption costing. If closing stock units is more than the opening stock units, absorption costing will show better profit. Absorption costing will show better profit because closing stock is higher written in the credit side, opening stock is written in the debit side. And if opening stock is higher than closing stock, if opening stock is higher than closing stock, opening stock is debited in absorption costing with a high value and closing stock has a lower value, our marginal costing will show better profit. Marginal costing will show better profit. I'll repeat again. Closing stock higher means absorption is very happy. If closing is higher, absorption credit side higher, more profit. Opening stock is higher, units, I'm talking about units. If opening stock is more than closing stock, absorption will show lower profit, marginal costing will show higher profit. This is broad understanding, but we'll understand it better only when we do a question. Let's come to a question now. May 24 MTP question, question 60. Go through this. Okay, I have T Limited, which manufactures a single product, T10, sells it at a fixed price of 2050 per unit. Production and sales data is given. Sales April, May, June. Production is given. A direct material, direct labor. Direct material is a variable production cost. Direct labor is a variable production cost. Variable production overhead is a variable production cost. Sales commission is a variable non-production cost. Sales commission is a variable non-production cost. Fixed production overhead, as the name indicates, is a fixed cost. Fixed selling overhead, as the name indicates, it's a fixed cost, but it is non-production. There is no opening inventory at the start. Fixed production overheads are budgeted at 60 lakh per annum and absorbed based on a normal output of 60,000 units. What is the implication of this? You'll understand. Working note 1, statement of profit under absorption costing method. Statement of profit under absorption costing method. OAR equal to OAR equal to under absorption costing method. OAR equal to budgeted. Why is this done? You will understand later. Fixed production cost divided by budgeted units. Why this is done, I'll explain in some time. Budgeted fixed production cost divided by budgeted units. Divided by budgeted units. Fixed production overheads are budgeted at 60 lakh per annum and they're recovered on a normal output of 60,000 units. What is the implication of this? You'll understand as we proceed. So 60 lakh is the overall cost, and it has to be absorbed on 60,000 units for a month, right? 60 lakh divided by 60,000. 100 per unit. 100 per unit. 100 per unit. Particulars in 3 months. Particulars in 3 months. It is very simple if you understand the crux of the calculation. Particulars in 3 months. April, May, June. We will be writing first variable production cost, then we'll be writing fixed production cost, cost of production, add opening FG, less closing FG, cost of goods sold, then non-production cost, which is selling and distribution overhead, fixed variable, cost of sales, profit and sales. In the variable production cost, I have three items: direct material, direct labor, variable production overhead. Direct material, direct labor, and variable production overhead. Right. Variable production cost, and underline that. Variable production cost, and underline that. Variable production cost, and underline that. Direct material. Direct material. 4 kg at 120 per kg. 4 kg at 120 per kg, which is 480 per kg. 480 per kg or per unit. 400, sorry, 480 per unit. 480 per unit. We have manufactured 4,600, 4,400, 5,500. 4,600, 4,400, 5,500. Right. 480 into 4,600. 480 into 4,600. Second product, second month, 480 into 4,400. June month, 480 into 5,500. 26 lakh 40,000. Clear? Next, direct labor. Direct labor is 6 hours at 60 per hour, 360 per unit. 6 hours at 60 per unit, 360 per unit. 360 per unit. 360 into 4,600. Any place you have a doubt, let me know. This is an area which many students confuse. 360 into 5,500. If any typing error you find, let me know. 360 into 5,500. Clear? Next is variable production overhead. 150% of labor. So we know the labor figure, 150% of that. 150% of labor into 150%. 150% of labor. 2484, 2376, 2970. Clear? Any doubts on this? Done. Next is fixed production overhead. Question says 5 lakh. We don't write 5 lakh. We don't write it as 5 lakh. Then what do we write? We write 100 per unit. Then the question is fixed production cost is never at a per unit level. Why we are writing this? Once I complete the statement, you will understand. Fixed production cost, we are not going to write 5 lakh. We are not going to write 5 lakh. Then what are we going to write? 100 per unit. 100 per unit. Why are we writing 100 per unit? In some 10 minutes, you will get clarity. In 10 minutes, you will get clarity. OAR. I started with the OAR. Every question we have to do with OAR only, because when the company does manufacturing, they would have thought in their mind it will be 100 per unit. Why 100 per unit thought? Because every month I should have done 5,000 units, 60,000 for a year. 60,000 for a year. Ideally, I should have done 5,000 every month. 5,000 into 100 is the logic. 5,000 into 100 is the logic. If you produce less, it's technically called under recovery, which is a loss for me. And if I produce more, it is over recovery, which is profit for me. How this happens, you'll understand. So next line item, fixed production cost. Fixed production cost 100 per unit. 100 into 4,600. 100 into 4,600. 100 into 4,600. Put a total at this stage and tell me cost of production. Live online, guys. You type it if you're done. Cost of production. Cost of production. Put a total of these and tell me the numbers. Got the answer in live online. 68 lakh, 8,000, 65 lakh, 12,000. Check in case you are getting these numbers. Okay. Okay, now listen. In the calculator, 6808,000 divide by 4,600. What number you get? 68 lakh 8,000 divide by 4,600. Then 65 lakh 12,000 divide by 4,400. 1,480. 81 lakh 40,000 divide by 5,500. 1,480. Listen, this would not have become 1,480 if you go ahead and write 5 lakh here. If you write 5 lakh here, cost would have gone up. Cost would have gone up. Cost per unit would have undergone a change. Cost per unit would have undergone a change. So what absorption costing says is, I'm assuming it will be 100 per unit. So you have to, so when we started the batch, we would have assumed that we will get 40 students and our fixed cost will be 1,000 per student. If we get lesser, that is our loss, because we have assumed that it will be 1,000 per student. Fixed cost, I have to make some assumption and proceed. So I made an assumption that it will be 100 per unit, and assumption was every month we will manufacture 5,000 units. If you manufacture more, you recover more from the customer. You manufacture less, because to the customer, in your mind you have decided 100 per unit is the cost. In your mind you have decided it is going to be 100 per unit. Next, add opening FG. Add opening FG. Add opening FG less closing FG. Cost of goods sold. Cost of goods sold. Leave some 10 lines. Note 1. Units reconciliation. Units reconciliation. Units reconciliation. Units reconciliation. Particulars in 3 months. Particulars in 3 months. Opening stock plus production minus closing stock, or just a minute. Opening stock add production, this is total units. Sales, add closing stock, this is also total units. Opening stock, add production, total units. Sales, add closing stock, this is also total units. In the month of April, I had opening stock of 0. I started with opening stock of 0. Production in April is 4,600, right? 4,600, 4,400, 5,500. 5,500. Sales side, we had 4,200. 4,200. So April total is 4,600. This side also 4,600. Closing stock is 400. Closing stock is 400. Closing stock is 400. This becomes the opening stock for April. This becomes the opening stock. Total units is 4,800. This becomes the opening stock. Total units is 4,800. Sales of May is 4,500. Leftover closing 300. Leftover closing 300. Closing is 300. Leftover closing is 300. Any doubts on this? This 300 will become opening stock. Total units is 5,800. In that sales is 5,500. Sorry, 5,200. 5,200. Closing stock 600. Closing stock 600. Any doubts on this? The purpose of doing that absorption is very simple. Whatever units you have, multiply with 1480. Opening stock also into 1480. Closing stock also into 1480. Into 14. I want to have continuity of the cost 1480. So let's go up. Opening stock is 0. Closing stock is 400 into 1480. 400 into 1480. 400 into, if you write 5 lakh, you will not get 1480. It will keep changing. I want to ensure 1480. What will happen to the difference? We'll see. Negative 5 lakh 92. 62 lakh 16,000. This will become opening stock 592. It will become opening stock. It will become opening stock. And closing stock is 300 into 1480. 300 into 1480. 4 lakh 44,000. 66 lakh 60,000. You can check the numbers in case you get anything different. I'm doing it. Let me know in case you get anything different. Cost of goods sold. And just for a small check, COGS will match units sold into 1480. COGS will match units sold into 1480 into 1480. That is 4,200 into 1480, 4,500 into 1480, and 5,200 into 1480. Units sold into 1480. Any doubts on this? Any doubts on this part? Can we proceed? Clear? Next. Next it says sales commission, fixed selling overhead, right? Fixed selling overhead. Here no absorption concept and all. 95,000. Fixed selling overhead 95,000. Fixed selling overhead 95,000. 95,000. Sales commission is 15% of sales. Sales commission is 15% of sales. What is sales is units sold into 2050. Units sold into 2050. First line, fixed price of 2050. Units sold into 2050. So write 4,200 into 2050 into 15%. Let me know the commission figure. It's a slightly lengthy computation. I can't help it. 4,200 into 2050 into 15%. 1291 500. How much? 83. And last one, 15 lakh, 99,000. Any doubts on this? Then, under our over absorption of fixed overheads, under our over absorption of fixed overheads, under our over absorption of fixed overheads, one of the most important item, under our over absorption of fixed overheads. Listen, I was to write 5 lakh here, fixed production cost. Costing says you have absorbed 460, balance 40,000 you write as an expense here. Listen for a minute. Balance 40,000 you write here. Why I am not writing above? If I write above, COP will change, cost per unit will change. Below COP we have to adjust this. Absorption costing says don't write it above COP. If you write above COP, COP changes, cost per unit changes. Overall 5 lakh only. 460 above, 40,000 below. 460 above, 40,000 below. 440 above, 60,000 below. 350 above, negative 50,000 below. Negative 50,000. Negative means over recovery has happened. Negative 50,000. Overall 5 lakh. Overall 5 lakh. Don't write 5 lakh above. If you write 5 lakh above, you will not be able to get the same per unit cost. Same per unit cost. So what we wrote? 460 above, balance 40,000 is technically called under absorption. You would have learned this in overheads chapter. Overheads absorbed is 4 lakh 60, incurred is 5 lakh. Incurred is 5 lakh. I have incurred 5 lakh of overheads. I have absorbed only 4 lakh 60,000. I have absorbed only 4 lakh 60,000. Incurred 5 lakh, absorbed only 4 lakh 60,000. So 40,000 difference. 40,000 difference. Second period, 4 lakh 40 absorbed, 4 lakh 40 absorbed, 60,000 unabsorbed, 60,000 unabsorbed. Third period, 5 lakh 50 absorbed, negative 50, negative 50 over absorption, negative 50 over absorption. Write this and then cost of sales. Write this and then cost of sales, profit and sales. Under our over absorption, cost of sales, profit and then sales. Profit and then sales. 8198 750. Last one 769695. Let me know in case you get any different number here. Clear? Any doubts in this? Any doubts in these numbers? Can you proceed? Sales, you know, profit is balancing figure. Sales is 4200 into 2050. Profit is balancing figure. 4200 into 2050. Okay, there's a doubt on this under or over absorption explanation. The company has incurred production cost of 5 lakh rupees. 5 lakh rupees is what has been incurred by the organization. Costing says if you write 5 lakh above COP, it will form part of cost of production. Moment it becomes part of cost of production, cost per unit will not be 1480. If you have 6808, if you add another 48,000, 40,000, it will become 6848. And if I divide that with 4600, my per unit cost will be 1489 something. 9 rupees change is there. That is because some overheads could not be recovered by the company. So costing says above COP, write only the normal cost. What is normal cost is 4 lakh 60. Any abnormal cost which you have not recovered, technically this is like a loss for the company. I'll customer, see, I fix a price of 2050, thinking cost will be 1480. If I could not get that cost of 1480, I got more means under recovery has happened. That under recovery is my headache. So when I started a batch, I assumed that it will be 1000 per student fixed cost, rent cost will be. In the end, it can be even 2000, 3000, 4000. That is the headache of the company. So overall cost is 5 lakh. But above COP, we are writing 460, and below COGS, we are writing 40,000. Below COGS, we are writing 40,000. Same way, 5 lakh for the second month, 440 above, 60,000 below. And the third one, 550, negative 50. 550 and negative 50. Clear? Any doubts in this? I hope, Karthik, this is clear. Any doubts in this? Clear? Get the profit figure now. 4200 into 2050. Sorry? How did you arrive? What did I arrive? What is the arriving? 100 per unit. You have not missed. You have not followed this discussion then initially. There is a doubt in the online. 100 per unit was the original calculation. OAR. We did a starting calculation of OAR. Maybe you have missed that discussion. 100 per unit was started. Initially, we had done the calculation. Any doubts in this? Profit figure. Tell me the profit figure. 12 lakh. Sorry, 10 lakh. 7,500. 10 lakh 7,500. 9 lakh 67 a student has typed. Okay, 967,500. Take it. 967,500. Next one, 10, 26, 250, 13 lakh 20,000. I'm not sure. You'll have to check the numbers. Okay, profit numbers you'll have to check and then tell me. Profit numbers you'll have to check and tell me. Yeah, in live online they've confirmed these numbers. 967, 10, 26, 13, 20. Any doubts in this? I'll check the printed answer just to be sure. 967, 10, 26, 13, 20. 967, 10, 26, 13, 20. Any doubts in this? Can we proceed? Clear? This is on the absorption costing. Now we'll have to repeat the marginal costing. Any doubts on absorption costing part? Any doubts on this? Working note 2. Income statement under marginal costing. Particulars in 3 months. Particulars in 3 months. Sales less variable cost, contribution less fixed cost, profit. Sales less variable cost, contribution less fixed cost, profit. Sales is copy paste of what we did in marginal costing, which is your 86 lakh 10,000, 9225, 10660. I don't want to spend time here. Sales is copy paste. Clear? Okay. After this, come down. Note 1. Variable cost. We'll have to do a working note. Note 1. Computation of variable cost. Computation of variable cost. Please copy this as it is. Variable production cost. Till these three items will remain same. Copy till this, then I'll explain. Variable production cost till this will remain same. Write it, it's okay. Write, complete this. Copy till this. It's a very simple approach once you understand that concept of recovery, overhead absorption rate. Once you understand overhead absorption rate, it is very, very simple. Write all the three and tell me total variable COP. Write till this and tell me the total. Total variable COP. 63 lakh 48,000. Okay. 60 lakh 72,000. 75 lakh. Okay. Any doubts till this? Any doubts till this? Clear? Now comes the main concept. Here, these were the units we had manufactured: 4,600, 4,400, and 5,500. Can you divide by these numbers and tell me what do you get as per unit? 4,000 divide by 4,600, divide by 4,400, 5,500. Tell me what is the per unit number you get. It will be same for all the three. First, you do all the three and tell me what number are you get. 1380, 1380, 1380. Listen. Now, what we need to do is, the difference is exactly this. I'm going to copy paste again this item, and it will be called as variable COGS. The only problem is it will be multiplied with 1380. It will be multiplied with 1380, which will lead to difference in stock, difference in profit, difference in stock value, and difference in profit multiplied with 1380. There it is 1480. What is the difference? 100 rupees of fixed cost. 100 rupees of, apart from that, there's nothing there in the question. It is only this one: 1380, 1480. Please do the numbers. 1380. 1380, 1380. You will get variable COGS. What is variable COGS? Is only the variable cost is considered in the calculation. Variable COGS. The main difference is this. The main difference is 1480, 1380. That is the only difference. 1480 and 1380. Calculation takes time. I can't help it. I cannot rush through also. Last one is 77, 71, 76. Okay. Any doubts on this? Clear? We're almost done. Maybe another 5 minutes and we should be done. Sales commission. Please write sales commission because it's a variable cost. It is a variable cost. Sales commission, total variable cost. Sales commission, total variable cost. Copy paste sales commission, total variable cost. Copy paste sales commission, total variable cost. Once this is done, I'll quickly summarize it because if I do it beginning, you will not understand. Total variable cost. Any doubts on this? Clear? Can you proceed? Any doubts in these numbers? We have done it for 3 months. Question will ask only for 1 month. Most of the exam question will be only one time calculation. I've done it for 3 months so that you understand the grip. Any doubts on this? Take it up. Variable cost. This is the variable cost number. Take these numbers up. Deduct them. You'll get contribution. Are you getting these numbers? Okay. Fixed cost is very simple. No headache of recovery, under recovery. Fixed cost is 5 lakh rupees and 95,000 rupees. 5 lakh rupees and 95,000. No concept of under recovery, over recovery, none of them. 5 lakh and 95,000. 5 lakh was the fixed production cost and 95,000 was the fixed selling cost. No concept of under recovery, over recovery, nothing happens here. 5 lakh and 95,000. 5 lakh 95. Get the profit which will not match. 5 lakh 95. 5 lakh 95,000. 5 lakh 95,000. 5 lakh 95,000. 927,500, 1036,250, 1290,000. Any doubts in this? Clear? We're kind of done. Now I just want to explain why there is a difference in profit. Here profit is 927. Here profit is 967. The reason is closing stock is 5,92, and here the closing stock is 5,52. 40,000 difference in closing stock, 40,000 more profit in absorption costing. 40,000 difference in closing stock, 40,000 more profit in absorption costing. When it goes to the next month, first absorption will have 40,000 less profit. Reason is opening stock difference. Opening stock difference, but again closing stock difference is there. Opening stock difference will reduce the profit. Closing stock difference will increase the profit. So from this number, which you see here, 40,000 less, 40,000 less in the next month, 40,000 less in the next month, but closing stock difference is still there. Closing stock here is 4 lakh 44 and closing stock here is 4 lakh 14. So 30,000 difference in closing stock is there. That will increase the profit. Opening stock difference will reduce the profit. Closing stock difference will increase the profit. So another 30,000, 40,000 less, 30,000 more, 40,000 less and 30,000 more, it will become 10 lakh 26, 10 lakh 26. Next period, from this profit 30,000 will go down. What is 30,000 going down? Difference in opening stock, difference in opening stock. But closing stock again difference is there. Closing stock again difference is there, which is I think 60,000 difference, and it will become 13 lakh 20. It will become 13 lakh 20. Again I'm repeating, closing stock difference will increase the profit of absorption costing. Opening stock difference will reduce the profit of absorption costing. This is what you will see as a reconciliation in the end. Difference in closing stock, difference in opening stock. Closing stock will increase the profit, opening stock will reduce the profit. If you start from marginal, go to absorption. If you start from absorption, go to marginal, exact opposite. That is exact opposite. Clear? Any doubts in this? Any doubts in this? With this, my discussion on marginal costing is over. We have done extensive discussion. I am left with one area, which is budgets and budgetary control. I had totally planned for 7 areas. In that 6 are done. One area is pending. Either it is tomorrow or Monday. I'll update in the group. And what are the changes in the schedule for, I think direct tax will have some changes. I'll update that in the group. Okay. Thank you, friends.